Hello everyone, welcome to the Technical Analysis 0 to Hero course. Do you also have the same questions like whenever you are entering, market is reversing exactly from that point, or market is always hitting your stop loss and moving back, or whenever you are in the profit, you are booking the small profit amount, but whenever you are in the loss, you are booking the large loss amount. If you are facing these three issues, that means you need the right guidance and you are in the earlier stages of the trading. Now, with the Technical Analysis 0 to Hero course, you are able to understand the different types of candlestick patterns. We are covering price actions, indicators, Fibonacci retracement and much more. We are always updating the course on the latest videos and latest our backtested method. Now in the price action, we are differ from other because we are introducing you which candlestick pattern will work best in which time frame. Same for the price action. How we can combine price action and the indicator, that is also a different story. Now we are combining the price action, indicator, Fibonacci retracement, all well backtested methods. So without wasting time, let's get started to the course. Hello everyone. Before starting the course, I wanted to introduce myself. Here is little bit information about me. Now my name is Murli and I am from India. Professionally, I am a software developer. My specialization is artificial intelligence research and development work. I have couple of experience, or let's say more than 3 years of experience in the trading. By profession, I am a software engineer, but by heart, I am the good trader. Now, I am SEBI registered or not? Who don't know the SEBI is regulator in the India which are regulating the Indian stock markets. I am not SEBI registered analyst. Okay, I am clearing with you. I am very honest with you. I am not SEBI registered analyst, but I have put all of my personal experience of all of my trading career experience into this course. I know what are the problem are faced by the beginner in the stock market. I collected that problem and trying to solve that issue and trying to connect or trying to teach you the psychology of the market, how market is behaving. It does not matter that I am SEBI registered or not. If I am SEBI registered, then I am directly able to give you the tips in the market. I am telling up the tips. If I am not SEBI registered, but still I am able to give you the knowledge which I have. So it really doesn't matter. Now, I have gone through multiple methods and back tested each and every method by myself, and then only I put it into this course. Hope you like the course, and if you have any doubts in any sections, just let me know in the comment section. Okay. Now the last one thing which I am requesting you, the rating. Please feel free to give the rating and drop your comment in the rating sections. Do not judge me based on my English because of I am the Indian, my accent is little bit different than any other people. But judge me based on the content. You can backtest by yourself and then only judge me. Do not judge me based on the English. It's just like judging a book by its cover. Hope you all understand my point, and let's get started with the whole course. Hope you will enjoy the whole course. Take your time and give time to the market as well to learn. Go through each and every videos to understand better and connect the dots between market and the techniques which I have taught in full whole course. Thank you so much. See you in the next section. Hello everyone. In this video we are going to discuss about how we can effectively utilize the full course. I am going to give you some tips so that if you follow the tips and that discipline, then definitely you are easily able to connect the dots between the course content and the live market. Whenever you can trade, you can feel that realization that whatever I have thought in this course, it is directly applicable in the live market, and you are easily able to understand the mistakes which you are doing in the live market. Now let's take a look for our course. We have multiple sections here: introduction, fundamental requirement, candlestick, price action, and all other things. Now do not watch each and every video at the same time. What I meant is, within 1 day or within 2 days, do not watch. How to utilize it effectively? For now, you can just watch fundamental requirement, technical skills and candlestick pattern within 1 day or 2 days. It's completely fine. But after that, you need to take some time to learn and observe all these things in the live market. Here, suppose if you are at candlestick and its pattern. Now, if you are watching today, then just watch at least, suppose we have multiple patterns like 10 patterns, then watch 5 patterns only. For example, you watched from the pattern 1 to the pattern like bearish engulfing. Now what you need to do, you just need to find out up today, if you watched from tomorrow onwards, at least for the 7 working days, you need to figure out where you are finding out the bullish engulfing, in which time frame bullish engulfing. If it's that time frame, then how it is working, how it is not working, bearish engulfing, and whatever the types you have learned within that day. So 5 videos and 1 week for the observation. If you do so, and if you continue this process for the chart analysis, support and resistance is most important part in the stock market. If you understand trend, how to draw trend line, how to draw support, how to draw resistance, and if you give time to the market, it will definitely take 7 to 15 days to understand and mark the best support and resistance. And I already told you in the support and resistance section how to mark it and how to analyze it. Do not skip the videos, and once you've gone through these 4 videos, just take your time. No need to hurry about go through price actions unless and until you can practice and realize this all the videos and gone through all the videos. It does not make any sense to go to price actions videos, because some videos are depend on each other. Unless and until you can observe in the live market, you are not able to connect the dot between the course, the material, the psychology behind the market, and or let's say sentiment of the market based on the videos which I taught in this video, in this whole course. Okay, if you do so, then within 2 months or 3 months, you are easily able to reduce your losses, or let's say restrict your losses, and you will realize that the difference between past trading which you are following and current trading which you are following. Okay, so it's all from my end, because you just need to give the time to the market. If you are hurry and you are watching within the weekends, then it does not make any sense, because it's not any Netflix web series. It's a course. Course is always thought by the interest. You need to learn by the interest as a passion, not as a Netflix movie or any Amazon Prime movies, right? So take your time, observe the market. That's all from my end. See you in the next video. Thank you so much. Hello everyone. In this video, we are going to discuss about the platform which we are using for the technical analysis. So you just need to Google TradingView India if you are an Indian trader, and to load the Indian stocks into the platform. Okay, if you know what is the TradingView platform, then please skip this video, because no need to waste time on these basic things if you already know the TradingView platform. Just click on TradingView and go for the chart section. It's just an overview like what is the TradingView platform. In the TradingView platform, you will get chart of each and every stock. Suppose if you want to add any stocks, go to watch list here. In the watch list right side, click on add plus sign, and just add a stock whatever you are interested in to watch. Just click on add here. After adding the stock HDFC, then the stocks will load here. For example here, then click on that stock chart will load here. So if you wanted to analyze that stock, just click on that. Once chart will loaded, you will get multiple options. Like if you check on the left hand side, you will get one menu bar. What is that menu bar? First menu bar is trend line. If you want to draw something, trend line, horizontal lines, vertical lines, you will find out all the lines here in this left menu. Some tools find out here like Fibonacci retracement, Gann box, which we are covering in the later videos. Now brush, some drawing toolkits like brush, highlighter, just like rectangles. If I mark this rectangles, something like that, you will find out here. You just need to go through by yourself. Just check how trading platform is look like. If you want to change the time frame, just go here, choose any time frame, whatever you want. That time frame chart will load here. It's much simpler to analyze. If you want to change to chart type from candle to any other candle, go here. If you want to add any indicator, go to f of x here. add indicator like suppose moving average. What is moving average? We are covering in the next sections, in indicator section. In the moving average line will load here. If you look at, if you want to change setting, just double click on this moving average line, you will get all the settings parameters here, or just go to moving average, the where it is located in top left corner, go to settings, all settings will loaded here. That's the quick and small introduction of the TradingView platform. Now if you are Indian trader, then there are multiple brokerage houses called Angel Broking, Zerodha, Upstocks. I am using the Upstocks for the trader. As a trader I am using the Upstock. It's not like this trader is good, this broker is good, another broker is bad. It's nothing like that one. It's your personal choice. Whoever you want to go, you can go. I am using the Upstock. In the Upstock, whenever you can log in, you will see this type of platform first. If you are new in Upstock, you will see this type of platform. This is also TradingView view. But if you switch to pure TradingView platform, then in the top left corner, there is an option called a switch to TradingView. Just click on that, so that TradingView platform will directly load here, because Upstock directly loaded that TradingView into their brokerage houses. So you will easily able to grab or utilize all the TradingView materials here. So in the Upstock, whenever before trading or before investing, just try to learn how to buy, how to sell, how to add stop loss, what is the positions where we can modify the stop loss, what is the order where we can find out the holding, something like that, into the throughout the your trading journey, throughout in the sense as a beginner. If you know how to add stop loss, how to sell, how to buy, where we can modify the stop loss, it's a very fundamental thing. Without that, don't directly go for buying, or then don't directly go for the trading. It's very risky, and it's very dangerous for you as well. So let's give a shot here to either buy some small amount like 1 rupees, 2 rupees, just go throughout the process, then you will realize that one. Okay, so nothing great in this video, because it's just a fundamental thing which I thought covering in the Zero to Hero course, it's better. So see you in the next video. Thank you so much. Hello everyone. In this video we are going to discuss about most fundamental thing, that is trading and investing and the trading. What are the difference between investing and trading, and which is better for you? Okay, so let's start from the investing itself. I shortlisted most of the good points for you to understand investing better, what is meant by investing and why investing is more better than trading. See, if you are the long term, if your money investment approach is for the long term, then you can go for the investing instead of trading. Okay, you should have the long term approach, or let's say if you are interested to buy, or if you are interested to invest certain amount of money to your one favorite company, which is you thought that company growth is good in the future, like after 10 years or after 5 years or after 15 years, and you wanted to invest now, then you should go for that company with your certain amount or certain investment. You should have the long-term approach, and you need to sit down and wait for some years, or sometimes it's decades, or maybe a couple of years, or maybe decades. Okay, this is the investment idea. You need to have strong fundamental skill to analyze the company fundamentals and just check that company is doing good in the past or not, and what is the future, or what is the product of that company going to be boosted in the future. Now if you want to gradually build your wealth, then go for the investment, because investment is the very low risk game and high reward game. Third point is, for you just need to wait for the period of years and decade. So if you are invest, or if you are interested to invest certain number of amount which is you don't care, and if you are invest for couple of years or decades, then also fine, then go for the investment. It will give you a good result as compared to trading. You will get advantages like dividends or stock split. Stock splits is nothing but, suppose if you have 100 quantity, after several years, if company thought we can split it. Like what they will do, they will double down your quantity and make a price same, or sometimes directly double down your quantity, so that you will get within the same amount, you will get double quantities. This is also happening, and this is also beneficiary who are doing the long-term investment. Dividend is nothing but, in the layman terms, it's just an interest on whatever you have invested in that company. This is also good for the long-term investment. Think investment as your retirement plan. Okay, if you think like that one, then go for the investment. It's good. Now it's very low risk and high reward game. Okay, in low risk and high reward game. Investment don't require technical skills. If you don't have technical skills, if you don't know how to read charts, then completely fine. Investing requires the strong fundamental skills. Means you should have that approach to analyze the stock and analyze the future, so that you can thought that okay, I can go and investment and sit besides or sit down for the couple of years or decades. Then only go for the investment. Let's take one example. One of my favorite example from the Indian stock market. One fellow which in 1990s the MRF share, MRF is nothing but MRF tires share in the stock market for the 20 rupees per share. Now in 2020, this is for 1990. Okay, now in 2021 the share price is almost 80,000 rupees per share. Now just calculate, if you invested 1 lakh rupees, into MRF in 1990s, or suppose if you bought the 1000 quantity of MRF, which is around let's suppose 20,000 rupees. Now you just calculate how much of the 1000 quantity, like 80k into 1000 quantity, how much it is, 1000 quantity, sorry, how much rupees you have made in 2021. That's the power of investing. And but now it's easier for me to say that if you are invested, or if in Dale's conditions, but you just need to analyze or let's say predict the future, and you need to believe on strong fundamentals of the company. Now let's take an example of the trading. Trading is exactly opposite as compared to investment. Trading contains day trading. Day trading is also called as intraday, swing trading, and scalping. Day trading is nothing but you need to buy and sell today only, that day. That is the day trading. What is the swing trading? Buy today and hold it for couple of days or couple of weeks or couple of months and then sell. That is the swing trading. Swing trading is a safe side as compared to day trading. Now scalping is nothing but capturing small movement in the market. Like for example, within a minute, close your trade within a minute or within a second. That's called as scalping. This is the high risk game, and this is the high risk game, high risk and high reward game. As I said earlier, high risk and high reward game. In the trading, you should have good technical skills, which we are covering throughout this course. Throughout this course, if you seriously take the course, invest your time, do all the course seriously, then you will get strong technical skills, or let's suppose you are able to capture the market movements based on the technical skills, whatever I thought throughout this course. So if you are looking for retirement plan, go for investment. If you ask me personally, I will always prefer investment, but investment requires the capital. Trading requires skills. Mindset and discipline. Investment just required to fundamentally to analyze the stock fundamentally, not by technically. So it's on you which part you are choosing. If you are the younger stages like me, like if you are younger, like 25 years, 30 years, 35 years, then go for the trading. But it's my personal choice. I'm not forcing you to only go for trading. It's always your choice. Go for investment or trading. If you want to do trading and if you have capital, I will suggest go for the swing trading. Intraday is also okay, but unless and until you will get strong technical skills, don't go for the intraday. You just need to spend lots of time, at least for 3 to 6 months or couple of years to make a master in the intraday trading or to earn the trading skills and the disciplines. Investment, if you want to go for long term, then figure out the company and invest it and sit like a turtle or wait like a turtle. Okay, so that's all from my end. That's all from my end, and hope this video is helpful for you. This is very fundamental video, nothing great, but most of the people don't know difference between investing and trading. That's why I thought I can cover all things in that video. Lots of things may be remaining in this video, but it's completely fine, because throughout the course we are morely focused on the technical skills which is required for the day-to-day trading as well as the swing trading, which is the high risk high reward, or let's say low risk high reward game. Okay, hope you got my point. See you in the next video. Thank you so much. Hello everyone. In this video we are covering most important topic is trading mindset and discipline. Now, whoever watching this course or whoever going through the course, I am pretty sure who already gone through trading or who already traded, I am pretty sure, more than 90% sure, that most of you are lose your capital or lose the lots of money. The reason is not because of you are lacking of the technical skills, but because of your mindset, and your trading discipline, and you don't have proper money management. So what are those mindset which I am following? Throughout this video I am explaining what is my mindset during trading, how I plan my trade, and what are the disciplines I am following. And when I was also beginner, I also done same mistakes like you, nothing great, but I realized one day that all the mistakes, and later on I improved my mistakes and converted all the lost trades into profitable ones, and now I can proudly say that I am the profitable trader, because it's not like I am not losing anything or I don't face loss. I am facing the loss, nothing great, but as compared to my loss, my profit is always bigger and much more as compared to my losses. Now let's start with the first mindset I have and what mindset I am following. What I done is, in my early days, I gone through each and every, like all YouTube videos like moving averages and some technical charts, technical skills, but that not helped me. To be very honest, that not helped me. I lose lots of money based on that videos. That videos are not proper, as well as I'm not saying that videos are incorrect. That videos is also correct. But in the most video, if you see, they are not covering what is the topic. Like suppose if you're choosing the moving average, then which time frame we can choose, and which time frame it will work best. They are not covering. Most of the videos are like this one only. And in the YouTube videos, you will find good content as well, but all the contents are overloaded one. That's why I shortlisted and make this course the good course end to end, so that if you follow this one and if you follow same content into another one, then you will get good knowledge as well as good learning throughout the course. Now let's talk about the mindset. Always make your mindset or always make your plan one day before the trading. You should have the plan. For example, tomorrow if market going to open flat or positive side, gap up or gap down. In case of if market open gap down, what is the scenario? What is the best case? If in case market is open gap down, what you are going to do? If open gap down, then market will take support from some points and it will move upside. Then at that case, what you will do? If market open flat, then what is your case? Plan your trade one day before or before market is opening. Second, always follow the stop loss and always maintain the risk reward ratio. Now what is risk reward? Risk reward is, for example, if always mention or always clear it with your mindset that in the whole day, tomorrow I am going to take a risk for the full day, only 60 points. Okay, now again, what is the 60 points? Suppose if you bought at 100 and put stop loss as 40, that means 100 minus 40 is 60. Then you are able to make loss of only 60 points. So if you make loss of 60 points on that day, then you don't care about that loss and you are easily able to carry forward that loss. Or let's suppose as per your money management, you don't care about 60 point loss. This point will vary between each and every person. It's just an example, just for the sake of the example. So whatever the points you are following, you can follow freely. But if your trade is going more than 60 points, then don't go for that trade, because it's out of your money management. Always put stop loss. What will happen? Sometimes your stop loss will hit, market will move upside. It's better, you can re-enter it again at the high position, but always follow the rules. Make your own rules. No need to follow any another person rule. You can make your own rules. For example, I am making the rules like I'm able to handle the 60 point loss. So if within first trade 40 point I got 40 point as a loss, then I will only take 20 points trade, 20 point loss trade, so that I will carry that loss. Or make your discipline like only 2 trades per day and only 60 points loss, not per day, whole day loss, so that you are very clear about your money management. Always follow the money management. Also, suppose if you are taking the risk of 30 points, then always expect the target at least for the 30 points or more than 30 points. If you are taking adding stop loss of 30 points and you are exiting in 10 or 20 points loss, then you are doing mistakes. You just need to wait until market cross the 30 points. Always make your mindset, which I am always following. Either your SL will hit or target will hit. Okay. If you bought at 100 rupees, put stop loss at, I am giving one example, put stop loss at 70, expect target as 130. If market come down and if market is at 75 rupees, even if it's 75 rupees, no need to exit. Either market will hit your stop loss or your target. Okay, if market hit target, then it's depend on you how to tell your stop loss, and based on price action you can go. But sometimes what will happen, you bought at 100, market will drop, within 75 rupees you can close the trade within the loss of 25 points. But once you close the trade, market will move upside, and that regret will affect your psychology and affect your mindset, and it will affect your next trade, and you will go for aggressive buying and aggressive selling. Do not go for aggressive buying, aggressive selling. Avoid the aggressive buying, aggressive selling in the market. Okay, and because of, if you follow this one, automatically your mindset will be clear, your trading psychology will be improving. You just need to follow the discipline. How much lots, how much quantity you are trading, just fix that one. Slowly, day by day improving. Trading is not like a Alibaba cave, right? You can go and grab some goals there day by day. It's not like that one. Trading is just like as a beginner, there is high chances that you will lose your capital. It's completely fine. But even after losing the capital, if you are not learning anything, then it's completely your fault. You should learn each and every loss. Suppose if you face the loss, then always mention yourself, like always think that why you faced the loss. What is the reason that your trade gone wrong by your analysis? So just analyze that. Give the time to the market. Market is always supreme. Okay. If your mind thought that I need to buy, even after market is saying selling, don't listen to mind, because market is always supreme. There are crores and lots of millions of people who is following the market, and most of the 90% chances that people will lose, only 10% will earn. Whoever losing 90% will get for the 10%. So it's on you, converting from 90% to 10% or always in the 90%. No need to follow any tips. Be aware of the tips provider. Okay, there are good tips provider as well, but it's always better to learn by yourself and trade by yourself. Invest that much money which you are easily able to earn, or let's say easily able to carry, which will not affect your family, your mindset. Okay, do not borrow money and invest in the market. This is the very bad experience or very bad practice in the market. I talked to multiple people throughout my group, and most of the people doing mistake is borrowing the money as a beginner and investing in the stock market. It's very not good and a good idea. Even if your good friend is saying follow their approach, no need to follow anyone. Make your own strategy, make your own psychology, make your own rules, and do not break the rules is the must in the trading. If you follow the rules, if you follow the discipline, then it would be great. And one more thing, always see the market in terms of points. What is the points? Suppose if bought as 100 and you sold as 130, that means you earned 30 points. Okay, do not see in the profit. Suppose I bought 25 quantity, I bought at 100 and sold at 140, that means I earned 40 points. Okay, 40 points. But how much I earned? 1000 rupees here, because I bought 25 quantity, like 25 into 40, which is equal to 1000 rupees. Do not see the profit in the numbers. Always target the points, 40 points, 60 points. Suppose if someone is trading with the 100 quantity and booking 30 points, that means he will easily get 3000 rupees. Okay, 3000 rupees. And if you trading for the 25 quantity instead of 100 and booking at 100 points, and you are getting 2500 rupees, that means you are much more than this trader. Okay, so always calculate your profit and loss in terms of points. If you are good enough to book lots of major points and small loss, then it's just a matter of increasing the quantities. Quantity does not matter here as a beginner. Okay, that's the reason don't go for aggressive trading and aggressive buying. That's what I'm summarized throughout my career. Well, lots of people doing mistake to not to follow rules, not to add the stop loss. Stop loss is the must. If stop loss hit, also fine. Figure out why your stop loss hit. You can re-enter at the same trade, but do not do mistake by not adding the stop loss. Always add logical stop loss as per your risk capacity. Okay, do not add like if you bought at 100 rupees and put stop loss at 10 rupees, it's not a good idea. Okay, that's the reason why I'm covering all this topic in the video, because most of the people are doing this mistake. More than 90% people who is watching this video, I'm pretty sure you are also agree with me that you are also done same mistakes like me which I did in my earlier days. So hope you got my point. Enjoy the full course, take your time and analyze the market. If you have any query, you can feel free to ask me in the comment section. Thank you so much. See you in the next. Hello everyone. In this video, we are going to discuss about most common order types in the market or in the trading or buying and selling. If you already know, then please skip this video. If you don't know, then please stay with me, because sometimes these 4 order types it will confuse you. Now let's look at the buying point of view. Okay, buying point of view. And let's take first example, that is limit order. What limit order do is, suppose now currently market is at 80 rupees. Okay, 80 rupees. And if you wanted to buy at 100 rupees with the limit order, so if you place limit order at 100, then market will not buy at 100, market will buy 80. So with the limit order, what is the correct way to buy it? Suppose market is at 80 and if you place order at 60, like less than 80, then there is a high chances that instead of saying high chances, if you added limit order as 60, then if market drops to 60, then only it will buy. Otherwise it will not buy. If you place order, if current market running price is 80 and if you buy limit order at more than 85 rupees, more than 80 rupees, like 85 or 90 rupees as a limit order, then it will buy at the current market price itself for the 80. Because in the buying, limit order will work if limit buy price is less than current market price. Okay, I'm repeating, limit buy price is less than current market price, then only limit order will work at the buying side. Now how it work at the selling side? Suppose market is at 80 rupees and you want to sell at 100 rupees, then it will work directly. So here limit order will work for the selling side, like limit sale is greater than current market price, then only it will work. If you place limit order and if you place limit sale order at 70 rupees, if market is 80 rupees, in the sale function it will directly sell at the current market, whatever the current market price is running. So that's the reason I'm not preferring the limit order to buy and sell in the at some given breakout levels or at the given levels. Now let's consider second example, that is stop loss limit. Second is stop loss limit order. What is the stop loss limit order? Suppose if current market price is 80 rupees. Now here let's consider buy first, okay, buying side, and you want to buy at 100 rupees. Then what you need to do is you need to place order between one range like 100 to maximum you can buy, you are able to buy at 105. This is your expectation of buying side. More than 105 you don't want it to buy, and less than 100 you don't want it to buy. So if current market price is 80 and if market is in 100, if market move upside and market is in 100 and 105, then only it will buy. Sometimes what will happen in the fluctuation, market will directly jump from 98 to 1110 or let's say 106 for the case. So it will not buy because you only placed between, you are only interested between 100 and 105. So stop loss limit order will work like this one. We need to give one range. Okay, now third one is, let's take an selling here. Okay, sell example. How it work in the case of sell stop loss limit order? You need to place, suppose current market price is 80 rupees, then you need to place sell order, sell stop loss limit order at 60 to 65 rupees. That means if market move down and your stop loss will hit if market is in between 60 to 65. But what is the disadvantage here is if market directly jumps from 68 or 66 to 58 or 55, means it will not see this range. That means this stop loss limit order will not trigger and unnecessarily you will face some more points or you will face some extra losses. But this is a very rare case. Okay, hope this stop loss limit buy and stop loss limit sell is clear for you. Third one is stop loss market order. What is stop loss market order? Suppose current market price is 80 rupees and you wanted to buy at 100 rupees. In the limit order you need to place 100 to 105, but in the stop loss market you only need to place 100 as a trigger price. What will happen is, suppose market see 100, then market will buy at 100. Suppose market will directly jump from 98 to 110, like 110, then it is directly buy at 110 rupees in the stop loss market order, because whatever the greater than 100 rupees it will buy. Whatever the value greater than 100 rupees, if market jumps at that value, then automatically it will buy at that market price. If it jump to 100, it will buy at 100. If it jump to 105, it will buy at 105. If it jump 120, it will buy at 120. This is a very rare case that market will directly jump to 120. But most probably in the stop loss market, you will buy at 100 to 101 or 102 within 1 or 2 point as a buffer in the stop loss market order for the buying side. How it work in the selling side? In the selling stop loss market, suppose you bought at 80 rupees and you wanted to place stop loss as 50 rupees as a trigger price. Just place stop loss market and trigger price is 50 rupees. So whenever market will move down, if market see 50, it will trigger at 50 only. Okay, if market jumps directly from 55 or any between 55 to directly 45, then it will directly sell at 45. But it will, in the stop loss limit, what will happen? If your stop loss is 45 to 50 and market jumps to 44, it will not trigger and market will move downside to 30, then even then it will not trigger. and you will unnecessary face the losses. But in the stop loss market, in the sell order, if market directly jumps to 40, it will exit your trigger, it will exit your trade at the 40. Directly jumps to 30, it will exit at the 30. That's the reason choose stop loss market order while trading. But in the India, SEBI is nothing but the regulators of the stock market. They removed the stop loss market order. So what we need to do is use stop loss limit as order and put 40, instead of putting 45 to 50 stop loss limit, instead of putting 45 to 50, put 30 to 50, so that within wide range, if market move from 55 to directly to 40, then also you will exit on time. So maximum range is 30 to 50, something like that you can do based on your risk capacity, which I am currently doing. Okay, this is the stop loss market order. Now last order is only market. What is the market here? Suppose current market price is 100, and if you directly put market order type as a market, then you can directly buy at current market price. Or on the sell side, same thing. On the sell also, if your order type is market, and if you click on sell, then whatever the current market price is going on, at that current market price, order will execute, either it is buy or either it is sell. Hope this whole video is clear for you. Okay, and one more thing, each broker will initiate or interfere the order types differently. For example, in some brokers there is only limit order. There is nothing like stop loss limit, stop loss market, only limit order or market order. What you need to do, you need to select stop loss limit or stop loss market with the limit and market orders. See, this is a confusion between different brokers, but this is the whatever I am explaining you, it's a core idea how to choose the order type for the buying side and how to choose order type for the selling side. Hope this video is clear for you as a beginner. Thank you so much. See you in the next video. Hello everyone. In this video we are going to discuss about types of chart. There are different types of chart called as line chart, candlestick, Heiken-Ashi and halo candles. In this video we are going to discuss about the importance of each and every chart and why we are not using some of those chart and why we are preferring the candlestick and Heiken-Ashi chart more. So let's see from the line chart itself. Let's take an example here. This is the TradingView platform which you already know. Now you just need to click on this section like candlestick icon, right, which I am marking. In this section we will get to know about different types of chart. Now let's select the line chart itself. If you check the line chart and I am selecting 1 minute as a time frame, that means data will load as per minutes. So in this, if you see this line chart, you will not easily able to get within that minute how much buying pressure or how much selling pressure in the market. It's just a directional view, but it's not a clear view, or by seeing the line chart we are not able to get the sentiments of the market. That's an issue with the line chart. That's why most of the trader, almost more than 95% or let's say 90% people are not referring the line chart to use. Okay, so hope you got my point. Now next chart is candlestick. Now what is meant by candlestick, what it means by red, what is meant by green, that's all details we are going to discuss in the next videos. That in the next videos you will go easily able to grab the concept of the candlestick and how to analyze the market sentiment using the candlestick. Now next one is halo candle. Halo candle is nothing but the same as a candlestick, but a colored, little bit of color difference, nothing more than that. Okay, now next candle is next type is Heiken-Ashi candlestick. If you see the Heiken-Ashi is also look like a regular candlestick only. There is a one smaller difference, or let's say minor difference in the candlestick and Heiken-Ashi candlestick. That the difference between candlestick and Heiken-Ashi candlestick we are covering in the next video. But for now you can consider that we are only focusing on throughout the course candlestick only. We are preferably using the candlestick because it's easier for us to understand the market sentiment better in the candlestick. If you want, you can also use Heiken-Ashi candlestick. Heiken-Ashi as well. Both are good only, but mastering in the both at the same time, it will be confusing and it will be complicated process as well. So prefer your candlestick by yourself only by observing the market. I personally following the candlestick. Some of the user are following the Heiken-Ashi. Both are fine, no need to worry, because both are representing how much buying, how much selling, actually how much trading happening within that time frame. So it's easier to analyze the market sentiment using both the candlestick. Okay, hope you can enjoy all the videos of the candlestick, and see you in the next video with difference between candlestick as well as candlestick and Heiken-Ashi, as well as a little bit more discussion on the candlestick. See you in the next video. Thank you so much. Hello guys, our today's topic is candlestick. Now in this chapter we are going to discuss about why candlestick is so much important and why people are preferring to use the candlestick. Before starting the candlestick, let me show you the simple chart. Here is the simple trading chart, and if you see or if you Google it, you will get to know that most of the people are preferring the same chart or the same pattern. They are using candlestick because candlestick having its own importance. Let me discuss the importance. Okay, so first start from the basics of the candlestick. If you observe every time, you will get to know that candlestick, it just look like this one. So let's digest the fundamental thing about the candlestick, that is, what is candlestick. So if you see this candlestick, you will get everywhere. Just look at this chart. You are getting this candlestick or this candlestick. Color are different, but I will explain you what is meant by red color, what is meant by green color. But if you look the chart, you will get to know that each candle having its own pattern and own shape. Now let me explain you what it really means. Now everywhere you see this type of candle. So how this candle is forming? It's the first question. Suppose the price opened at 100 rupees and now price is moving upside. So what's happening is candlestick is also move upside, and suppose I chosen 5 minutes or any minutes of time frame, 10 minutes or either 1 minute is also fine. Now price is moving upside and closed at 105. Now this candlestick is a green candlestick. Why? Because buying pressure comes and market is pushed up from 100 towards the 105. Okay, so this is the color coding. But before starting this one, let me explain you the simple very basics of the candlestick. Now what is the basic here? This shape. This is also called as wick, someone called as shadow, or we can say that one tail or top of the candlestick. This whole content called as body of the candlestick, and again this is called as wick or shadow or bottom of the candlestick, right? So let me explain you how candlestick is forming. As discussed earlier, suppose price is opened at 100, price is moving upside and price is closing at 105. That means this candlestick will be green candlestick. As I explained you earlier, there are only two colors except you change the colors from the setting. So first is green one, which is describing about the bullishness. Now what is the bullishness? Bullishness is nothing but the price is moving upside or market is moving upside, and or we can say that one buying candle. And second candle is red color. Red is, we can say that bearishness. Bearishness nothing but selling candle. Okay, so there are total two color green. Now you are clear about what is the green, and now I am explaining the red. Suppose market opened at 100 rupees and market pushed it downside, and instead of saying market, we can say the candle opened at 100 rupees, price opened at 100 rupees and price moved downside and closed at 95 rupees, means less than 100 rupees. So this color will be red color. So indirectly saying, suppose if the opening price is less than the closing price, then it's a green candle. And if the opening price is greater than the closing price, then it's red color. It's pretty much simple, nothing to worry about. So there are different types of candles, different types in the sense, in the candle you see the pattern like this one or this one, or maybe even this long candle. Why this is forming? Let's take another example. Suppose if you have seen this as a candlestick, so what it means, suppose price opened at 100 rupees, then price moved downside, but it took again from here, from the 95 rupees or any rupees which is less than 100, and again price started moving upside, and market closed at greater than 100 rupees. Either it is 101 or 105, but it should be greater than 100 rupees. So I am considering 105 here, 105 rupees. That means what happened is market created this shadow and moved upside and closed here. So closing is matter. Closing is 105, opening is 100, and low of the candle is 95. That's why candlestick is pattern like this. So if you see the chart, if you see this chart, you are seeing different kinds of candlestick. Like this candlestick, what is meant by this candlestick is a red candlestick. Okay, I will explain you. This much big, like I am explaining about you this candlestick. Okay, this much. Within that 5 minutes, I am selecting 5 minutes. Within that 5 minutes, suppose, let's take example, suppose price opened at 100 rupees, price moved upside 105, but not sustained. Again price moved downside near 90 rupees, but price is able to close as 93 rupees. That means this candle will be a red candle because it opened at 100, closed at 93. And these are the shadows because price is not moved upward 105 or not closed above 105 and not closed below 90. That's why it's opened at 100, closed at 93, but not able to close below 90. That's why this pattern is happening. This pattern like shadow, body, and again shadow. So what is this means? Suppose price opened at full red candle in the sense, if this candle, like I am talking about this candle, what is this candle? This is a full red candle without any shadow. So what it means, it opened at 100 and closed at 95. That means full of selling happened within that 5 minutes. So hope these candles is clear for you, how system is deciding the candle and how we are dealing with the candlestick. If you have any doubt, you can ask anytime in the comment section. Thank you so much. In this video, we are going to discuss about the difference between candlestick and Heiken-Ashi candlestick. If you look at the structure of candlestick and Heiken-Ashi, both are similar only. Then what is the difference? The candlestick represent the buying and closing, means opening price and closing price, the high value and low value within that time frame, right? What it means is opening price, closing price, high of that candle or high value of that time frame and low value of that time frame, whatever the time frame you have selected in the live market. And what is the Heiken-Ashi represent? Heiken-Ashi represent the smoothed version of candlestick. What is meant by smoothed version? There are some mathematical intuition behind it, but I don't think so it is required to cover in this video. It is really not required. In the layman terms, it's the smooth version of candlestick, but it's the, whenever Heiken-Ashi we are plotting, it's the momentum average, we can say that movement or trend average, it's an average price. That's why Heiken-Ashi is look like smoother than candlestick. What it means, let's take an example here. If you look at the chart, here is the candlestick chart. You can see lots of volatility here, red candle, green candles, red candle, green candles. Then in between, if you see here, in between you can see some green candles, right, in the downfall also. So if you select Heiken-Ashi, you will not get that red candle. Heiken-Ashi will always follow the trend. See how much green candle I have shown you today, and how much red candles is here. Only one green candle is here, but in regular candlestick lots of green candles are here, right? So in short, Heiken-Ashi is the smoothed version of candlestick. That's it. It's helpful to find out the trend in the market, or suppose if you wanted to find out the trend, or if your mindset is panicking while trading, you can just shift to the Heiken-Ashi. Now the major problem in the Heiken-Ashi is the chart, which in the live market chart, whenever chart is moving, the price here will be different and the movement here will be different, because as I said earlier, in the Heiken-Ashi will plot the average of that movement, like average of that movement in the 1 minute chart, so that it will be print as a smoothed version of regular candlestick. If you don't understand what is exactly mean, don't worry about the definition. You just need to observe in the live market. But I am strongly suggesting you need to focus on, as a beginner, at least one in the sense, either you can go for Heiken-Ashi for at least 1 or 2 months continuously. Do not see Heiken-Ashi today, after tomorrow candlestick, day after tomorrow Heiken-Ashi. Do not see like that one. Do not study like that one. If you select candlestick, go with the candlestick unless and until you will get good entries or you are able to restrict the losses. If you select Heiken-Ashi, from that day select Heiken-Ashi only. Otherwise it will be confused. Market will confuse you, or your mindset will confuse you when to enter, how to enter. So take it very slow. Take your time and observe market by yourself. Then only you are able to understand. So see you in the next video. Thank you so much. In this video, we are going to discuss about which time frame is the best one, or which time frame need to avoid as a beginner. This video, maybe you are agree with this video or may not be agree with this video. Some of will maybe agree with this video. The reason is, in the trading, no one is correct and no one is incorrect as well. What it means is, suppose if I am able to analyze all things properly in 1 minute chart, that does not mean that you are also able to analyze all things within a 1 minute. Your capability is different, my capability is different, same as someone else's capability is different. So in throughout the course I am explaining which pattern is performing best in the which time frame. But the things I am making this video because you need to understand the importance of the selecting the time frames and be the master in the any two types of time frames. Two types of time frames, in the sense either it's 1 minute or 10 minutes, or we can say that 5 minutes or 10 minutes. What I meant to say is one small and one large scale for the intraday. For the long term you can choose any, but I am personally preferring the 5 minutes, 1 minutes and 10 minutes for the intraday. Also for some patterns I am preferring 15 minutes as well, but we are discussing about the beginner, so I am preferring you start at least from the 5 minutes. Do not directly watch the 1 minutes. Okay, start at least from the 5 minutes time frame and be the master in 5 minutes as well as 10 or 15 minutes. The reason why I am saying is because if you observe, if you check the chart, there are multiple patterns like pricing moving upside, coming down, moving upside, coming down, moving upside. So if you are seeing this price action within a 5 minute, that does not mean that same price action or same logic will work within 10 minutes or 15 minutes. For 10 minutes and 15 minutes, game will completely change. And in the trading, the most crucial part is done by the time frames. Which time frames you are choosing and which time frame we are using for the intraday. Now there are multiple time frames starting with from the seconds and ending in hours and days and weeks. But for the intraday, I personally preferring the 5 minutes and 15 minutes. But I personally using 1 minute for some patterns because I am pretty much comfortable with the 1 minute. It does not mean that you can also go for 1 minute because I have lots of practice and patience. Now again, the question is, which one is the best and why not we can choose 1 minute as a beginner. See, if you are disciplined trader, or if you have lots of patience, means if you check this candlestick, and if I choose the 1 minute, you will see lots of up and down, like 2 green candles, 1 big red candles. If you don't have the patience level, then what happens? It will trick your mind and you will end up your position within this red candle or within this red candle. So as a beginner, I'm telling about as a beginner, I'm not telling when you are master, I'm telling about as a beginner, you will exit, you will panic in this candle and you will exit, or you will panic in this candle and you will exit. You will not get to know that when to exit and how to book the profits, a bigger point, and when exactly needs to exit, because 1 minute is too volatile candlestick. So as a beginner, until you get lots of comfortability, do not go for 1 minute. You need to develop the patience and the discipline. If you ask me which one to select, I will tell the 5 minutes is the best as a beginning. And as well as in the next videos, we are going to discuss about types of candlestick. In this chapter, there are multiple types of the candlestick, multiple types and patterns of the candlestick, and some of types or some of patterns are working best in the 5 minutes, some patterns working best in the 10 minutes, some pattern working in the best in 50 minutes. That we are showing in the next videos. Hope you got my point. Thanks. See you in next video. Hello guys, in this video we are going to discuss about spinning top candlestick. Just look the pattern. Spinning top candlestick pattern, it just look like this. Why it look like this? Because first let us understand what is this pattern. It pattern contains the long shadow, a very small body, and again long shadow. So let's understand why this spinning top candlestick is forming, why this type of candlestick is forming a too long their shadows and the lines and very small bodies. Let's take a practical example here. If you observe, like if you consider, suppose price is at 100 rupees, but sellers are pushing price downwards but not able to push more than 80 rupees. But again buyers got activated, buyers is also pushing market to upside and but not pushed above 120. But at the end of that time frame, this price closed near either 105, or let's take another example, opened at 100, market pushed on both the sides, upside and downside, 120, suppose here 85, but market is only closed at 95. Market in the sense the candlestick is open only closed at 95. That's why this long wick is creating and small body is creating. Now what it means, suppose next time if you see this type of pattern, what it means, it not represent any buying as well as it not represent any selling. That's why this spinning stop candlestick is also called as indecision candlestick. What it is called as? Indecision candlestick. The reason is it not represent any buyer's force and any seller's force. But when we can see spinning top, or what is the importance of spinning top? Suppose there is an uptrend is going on and we are seeing some spinning top candlestick here, or downtrend is going on and we can see spinning top candlestick here and market is moving upside. That means there is this, if you see in the downtrend, if you see spinning top candlestick, there is a high potential that market will reverse from here, means market will change his trend. Here is one practical example. Check this example. Market moving downside, we have seen one big spinning top candlestick here. After seeing one big spinning top candlestick, what we need to do is we just need to mark the high of the spinning top and the low of the spinning top candlestick, because we already know If market moving downside, that means if you see the spinning top candlestick, then market will start moving upside again, means market will change his trend. But for the confirmation, we need to mark the high and low and just wait for the next candle. If suppose market is at downside, this one is a spinning top candlestick, mark its high, mark the low, and if another candle is crossing this spinning top high, that means it's a confirmation that market will start move upside from the downside. Same for the upside view. Suppose market is at upside, if you see the spinning top candlestick, then just mark high and low, then whatever the next candle representing, it's all depend on next candle. If next candle is crossing this spinning top, or whatever the candle is crossing this spinning top, that means now uptrend is over and downtrend will start. Hope this spinning top is you got my point and you understood all the things. Now let's take a practical example for this spinning top. Just let me show you the one good practical example here. Let me open the trading platform. Here I am analyzing the Dr. Reddy stock. Who don't know what is Dr. Reddy? Dr. Reddy is pharmaceutical stock listed in Indian stock market, which is NSE and BSE, right? Most of the people, Indian people, are aware of these stocks. Now let me show you one practical example for this spinning top candlestick. If you check here, you can get to know that this one is a spinning top candlestick, this one, right? Now you can ask me how you can enter. See, as I said earlier, if you observe, the trend is positive. Let me zoom out. See, the trend is totally positive, means market moved from here and its trend is almost positive and price action is also positive. Now based on this spinning top, what we discussed is we need to mark the high and the low of this spinning top. Here we need to mark the high and the low of this spinning top. Just a minute. Just mark high and the low of the spinning top. And as discussed earlier, whatever the candle crossing this spinning top, either this one, make position for this candlestick and add stop loss above or below this stop loss. Because of its we find spinning top candle in uptrend, our stop loss should be above this one. If we find spinning top candlestick in downtrend, then our stop loss should be here. There is a high chances that market will move or market will reverse its pattern. Here you can see the spinning top. Again, I will show you another example. There is a high chances that here you can also see the spinning top candlestick, right? Here also spinning top candlestick. Again, market is started moving downside because of, if you see date was changed, that means market closed and again market opened at upside. So it does not make any sense that it's spinning top or whatever the candlestick we have. Let's take some past example. Okay, let me show you again the past example. See, if you observe here, as I said, do not check the color. This is the full of downtrend. Okay, this one is also spinning top candlestick because it contains the high wick but low body, as discussed earlier. So mark the high of the spinning top, mark low of the spinning top. Your stop loss should be here. Just check that which candle is crossing this candle, and after and make entry immediately based on this candle, or as a safe side make entry above this candle. It's your choice. What I am preferring is I am making entry above this candle and putting stop loss below this candlestick. So my stop loss is also secure and I will get enough profit. Now again, the one confusion which most of the people are facing is in which time frame it is working. Mostly here I am explaining you in a 10 minute, and as per my own experience, as per my personal experience, 10 minute is the best time frame for this spinning top. Do not show in 5 minutes, 1 minute and 15 minutes. For me, it does not make any sense in this type of candlestick. 15 minutes is also good for spinning top, but just for analyzing the stock, not for the full day, because within 15 minutes lots of candlestick, or it's very hard to find out the spinning top candle within the 15 minutes. But within 10 minutes is really easy to find out the spinning top as well as make a entry and make a profitable entry in a spinning top within a 10 minute time frame. Hope you got my point. Thanks. We can discuss next chapter in the next video. Thanks. In this video, we are going to discuss about the Doji candlestick. Doji candlestick is look like this only. Now, most of the people are confusing between the Doji candlestick and the spinning top candlestick. Let me show you the spinning top once again. This one is the spinning top candlestick and this one is a Doji candlestick, but both are looking same. Then what is the difference between Doji candlestick and spinning top candlestick? The simple difference is Doji candlestick is very small as compared to spinning top candlestick. Also Doji candlestick, the price, opening price and the closing price is too near, like here 100 and it will close near 102 or 103. But in spinning top wick size is long as compared to Doji candlestick, as well as there is a difference between the price, opening and closing price, but it's not matter. It does not mean that it's a spinning top or it's a Doji. Both candlestick, in some books, both candlestick like Doji candlestick and spinning top candlestick is also called as indecision candlestick. But in some book, instead of calling Doji candlestick as indecision candlestick, people are also calling it as a neutral candlestick. Now let me explain you why it is called as neutral and why Doji is created. Suppose if market or candlestick opened at 100 rupees, it not moved upside that much, as well as not moved downside, but only moving within this range 100 and 98 or 97. Hardly it moved to 95 rupees and on above side 105 rupees. So that's why the size of Doji is always smaller and it's look like a plus sign or this sign or this sign, because for the Doji candle body is very small, or sometimes the opening price is 100, sometimes the opening price is 100 as well as closing price is also 100. So sometimes after moving the market downside or upside, we are getting this pattern or this pattern because opening and closing prices are same. That's why this Doji candlestick is called as neutral candlestick, because it not represent anything. Then what is the meaning of this? It not represent anything. Then why we are using the Doji candlestick? If you check here are example of Doji candlestick, very small candlestick, right? And this one is example of spinning top candlestick. Now what Doji candlestick represent? This is the main question. I will explain you what represent. Suppose the trend is uptrend. Suppose trend is uptrend, and in the uptrend you have seen the Doji candlestick. It does not mean that it will go downside. No. In my personal experience, what happening here is, suppose the trend is uptrend. If you see the Doji candle here, then high chances that market will again continue his uptrend. It will not drop it unless it will create yet another pattern called as a morning star or evening star. That we can cover it in some other video, but just bear with me. It's all depend on the next candle, not a video. Suppose what I mean is, suppose there is one uptrend. You have seen one Doji candle. Just wait next candle. If next candle is bullish candle, that means market will continue again uptrend, and most of the time market will continue his trend. If next candle, suppose market is moving upside, it's Doji candle formed, and next candle is pure bearish candle, that means you need to enter based on this candle. Or suppose market is in uptrend and next candle is bullish candle after Doji, then just mark this candle high and if above high and low and make an entry. What I am personally suggesting is, if you see this example, market is in uptrend, right? you see the Doji candlestick. After Doji candlestick, mark Doji high and low. If whatever the candlestick is crossing this Doji candlestick or crossing above or below, you can make an entry. Or as a safe side, what you can do, after forming the Doji candlestick, mark high and low of Doji candlestick, just wait another candle to close, and whatever another candle closed above the Doji candle, above that one make an entry and make stop loss below this candle. Entry point is above this candle, entry point, and below this one, below low of the Doji is stop loss, above this candle is your entry. It's a very safe position. Now let me show you one practical example in the live market. What is the Doji candle and how it look like? If you see, I am checking in 5 minutes. See, if you observe now, for this chart I am observing Nifty Bank. Nifty Bank is the index. Nifty Bank is the index from the Indian stock market, index formed from the various types of banks in India. Now let's take an example here. If you observe, today's trend is full of negative trend, right? Now where we can find the Doji candlestick? If you ask me where, the answer is very simple. See, this one is Doji candlestick, right? This one is also Doji, this one is also Doji. Why this one is also Doji candlestick? Because the shape of this candlestick is very small. Now what we need to do is, as I said earlier, you just need to check what is the past trend. Like past trend is negative, that means if you see the Doji, that means high chances that market will continue his past trends in 5 minute candlestick, right? I am talking about 5 minutes. It works same, like for example, past trend is positive if from Doji, and it will continue past trend as a positive. It will work very best in 1 minute, 5 minute and 10 minute. Okay, in 15 minutes there is high chances that it will reverse from here. But as I said earlier, as a safe side, we always need to check the next candle. Here is the Doji candlestick. Again Doji candlestick. Next candle is very small candlestick, so it does not make any sense to make a decision based on this candlestick, right? As much you practice, you will get to know that what is the importance and how to make entry. So just mark high of this candle, low of this candle, and make an entry based on this candle. Or as I said earlier, just wait candle to close and mark the low of this candle, make an entry low of this candle, put stop loss above here, entry here. Now if you check the result, see how much it formed. See, it dropped too much, right? From our level it dropped too much. Again you can see some Doji candle here, right? Doji candle is here, Doji candle is here, but you need to mark high and you need to mark the low. Also if you see here, even if Doji candle, you will check the incorrect entry here. Incorrect in the sense the stop loss hit. Suppose this is the Doji candle and you marked the high and the low of Doji candle. Now market crossed this candle, and above this candle we made the entry. But what happened is, market from this point, market exactly got reversed and our stop loss got hit. So as I said earlier, it is a neutral candle or indecision candle. As a safe side, most of the time it will give a profit, but for that just check the past trend of the market. Past trend is negative, then why you should make entry on positive side, right? It does not make any sense to make entry on the positive side if market is negative trend. That's why I am again telling you, for the based on the Doji candlestick, you just need to check the past trend, and based on that you need to enter. Now select the 1 minute. 1 minute also same. If you check on 1 minute, past trend is negative, Doji candlestick. Again we need to check somewhere between Doji candlestick. Past trend is negative and it continues its trend. There's no doubt about that one, and I have personal experience with this Doji candlestick. Now check with the 10 minutes as well. If you check the 10 minutes, see here we formed one Doji candlestick, right? What is the trend from the morning? Trend is negative. but you should be clear with your trend and understanding that as soon as we are covering all the topics, you will be much comfortable. Like, I'm not saying you go and trade with the Doji, go and trade with the spinning top. Just bear with me until the course ends. At the end, you will get to know that what are the multiple things we need to check in the live market to make an entry, because teaching in already happened or in the past recorded chart is really easy, but in the live market making the decision is really harder. So don't depend on only candlestick. What I'm suggesting, why we are choosing candlestick as a topic, because just check market sentiment, so that when next time you will see pattern is negative, it's a doji, do not think that market will reverse from here. You can always mark high and low, and based on that make your market sentiments or make your understanding towards that market sentiment. Suppose here market is full downtrend, why I will make entry at positive side? Most of the people will think market will take support here and market will again move back. No need to think that one. Just check mark high and low. Based on that, just do or just make your analytics skill more powerful, so that you will restrict your loss and increase your profit. Hope you got my point. See you in the next video. Thank you so much. Hello guys. In this video, we are going to discuss about the hammer candlestick. Okay. So what is hammer candlestick? If you look at the pattern of the hammer candlestick, the pattern is look like this one. Pattern is look like hammer one. That's why it's called as hammer candlestick. What it represent? It represent the bullishness in the market or increasing in the buyers in the market. Let me show you one simple example in the our blackboards. Suppose market opened at 100 rupees. Okay, market opened at 100 rupees, and because of the selling, market moving downside. But what happened is, at the 90, most of the buyers are interested to buy, and they push the market to upside. They push the market to upside, and market is able to make a close at 105. Or again, let's take one more example. Market opened at 100, downside to 80 or 90. But because of buyers are interested in this zone, market moved upside and closed at near 100, in the sense 95, or we can say that 98. Now, why buyers are interested here? When candlestick is, or when hammer candlestick is working fine, the one more example is, there is a concept in the trading called as support and resistance. Now, what is support and resistance? We are making one of the best video on support and resistance, and how to draw it and how to visualize the support and resistance in the live market. Now, just for time being, just bear with me. Consider support as a buying zone, and consider resistance as a selling zone. Hope it helps to you. Now, suppose most of the buyers are activated in this zone, right? Most of the buyers are activated in this zone because it's a support zone. Like, most of the buyers are activated into 80 to 90 rupees, so that if they are considering that if market opened at 110 rupees, or just say candlestick is opened at 110 rupees, they are just waiting to price move downside. If price move downside, they immediately buy at 80 and 90 rupees or 80 to 90 rupees, and they pushing market towards the upside, and market is able to make close near 105, or market is able to close near 115 rupees. Anything is possible within that time frame. Now, that's why, because of the buying pressure, right? What hammer candlestick represent? Hammer candlestick represent the buying from the support zone. Because of the buying pressure, the pattern look like this one, pattern look like hammer one. Hope the pattern and the basics of hammer candlestick is clear for you. Now let's take an example here. As discussed earlier, right? This is our support zone. Support zone is nothing but buying zone. This is the buying zone. Now whenever market is taking support here, market is moving upside. Again market takes support here and market created a hammer candlestick. Hammer candlestick in the sense market created this pattern here within the selected time frame. I will explain you which time frame is the best to check the hammer stick candlestick. Because of its support, buying pressure start and market moved upside as discussed earlier. So whenever downtrend is there and you see hammer pattern and support is also there, that means high chances that, or we can say that high probability that market will move upside. Now how to make entry? Now you know this is the support. Now you know market is moving from the downside, right? So when you see the candlestick, as we are doing it from the first video from the candlestick pattern, like from the spinning top doji, just mark high, just mark low of the candlestick. Whatever the next candle, if next candle or whatever the candle is breaking the high of this hammer, then make a entry. Otherwise, if market is moving low of the candle, no need to make a entry. Either change your view or avoid. If your view is saying that, or your psychology, trading psychology is saying that one market is moving downside, this is the support zone, and market will move upside from here, or market will reverse from here. And if again with your psychology market also created the hammer, but market moved downside, do not make an entry and save your capital. But do not hard on the market. What I mean to say is, if your psychology is saying market will move upside and if market moving downside, do not change your psychology. It's better to avoid. So as I said, market moved downside, you say in the hammer, mark high, mark low. Why we mark low? Because stop loss should be here, right? In this example, stop loss is here. On high, your entry is here. After making entry here, you will get decent profit. Now it's time to check in the live market how we can visualize the hammer candlestick. If you observe here, I have chosen the 5 minutes. Again I am telling you, the hammer candlestick work best in the multiple time frames, contains the large time frame like 5 minutes, 10 minutes and 15 minutes. For the intraday, I am again telling you, for the intraday, for analyzing stock, if within one day, if market is downtrend and you are checking the 1 day candlestick, market is downtrend and within the 1 day you see the hammer candlestick, that means that next day if market breaks this high of this candlestick, market will continue the bullish run. The hammer is the part of the bullishness or bullish market. So if you check here, you can see hammer candlestick, a good example of hammer candlestick and the failure example of hammer candlestick. One first start from the success example. Here you can clearly see the hammer stick candlestick in the downtrend, right, as discussed earlier. Because of its support zone, now I know its support zone because I am very familiar with this, the index. You should mark the support and resistance in your chart. How to mark it is a different story and that we are covering in the another chapters. But just bear with me, just for a second, just consider this as a support area. Buying start from here and just mark high. High is almost 40,100 rupees. Here if you mark, it's a 40,150 rupees. So the high of the hammer is 40,150 rupees INR, and you can make entry on this candle, like whatever the candle, as I am saying, whatever the candle breaking this high, you can make entry as 40,150 rupees. Now market moved almost here 40,400 rupees, means almost 250 point profit. 250 point is very good profit if you are trading in the futures and the option in the index. This is the hammer candlestick for you. Now check the failure example of the hammer candlestick. Again downtrend is there. Now you are seeing the hammer here, but we need to check is it support or not. If it's support and if you are marking high and low, there is a high chances that your stop loss hit. If your stop loss hit, also fine, no worries about it. But do not hard with the market. Stop loss is the part of the game, but most of the time you need to trade in the discipline, accept the stop losses. Here you can see the hammer candlestick. Again we need to check where we can find the hammer stick pattern, hammer candlestick pattern, right? Now if you see, this is just like a spinning top, right? As discussed, this is just like a spinning top, or we can say a hammer, one type of hammer only, not a spinning top, because spinning top having the high wick as well, and both the side high wick and body is in between, but here no high wick in the above side. This is also one type of hammer, or this hammer is also called as pin bar hammer candlestick, pin bar hammer candlestick, or pin bar hammer, right? Now just take one more example for the hammer. See here, just take one more. See, this one is also hammer candlestick. Why? Wait, let me show you. If you check the past history, market is taking support from here, right? This is also hammer, one type of hammer. Market reversed, market changed downside to upside here. Market moved downside to upside here. That's why we can consider this as a support zone, or we can say that most buyers are activated in this zone. If you check, this is a clear cut hammer pattern. You just need to mark high, mark a low, make stop loss at the low level, make an entry on this candle, whatever the candle is breaking, whatever the price, almost 39,400 here, and it made high of 39,560, which almost 160 points of profit in the stock market. Because of market closed here and new date start, market directly opened here, right? Hope you got my point. This is also hammer, but this hammer is also called as inverted hammer, or we can say that one. There is one another example, and which is the different topic that we are covering in the next video. Hope you got the hammer, and if you have any doubt in the hammer, then just let me know in the comment section. Thank you so much. In this video we are going to discuss about Hangingman candlestick. In last video we have seen that, and we have discussed about the hammer candlestick, and hammer candlestick is look like this. The hammer candlestick is a sign of bullishness, right? And when we can say hammer candlestick, and when it exactly worked very well, when there is a downtrend going on, and if we say hammer candlestick in our desired time frame, then there is a high chances that market will reverse from here. Means downtrend will complete and market will reverse from here, but the required condition is it should be formed near support, right? Near support, and support is nothing but the buying area, which we already discussed in the last video. Now we are going to discuss about the hanging man. Hammer is look like this, but hanging man is exactly opposite to the hammer. Let's discuss how a hanging man is creating. Wait, I will show you the hanging man example from the basic. Suppose price opened at 100 rupees, right? Price opened at 100 rupees and market moved upside because of the buying pressure. Here, as discussed in the last video, second concept is resistance. Resistance is nothing but seller's zone. Here market is facing some resistance, or we can say that selling. Because of selling, market will move downside and able to close below 100, which is, let's suppose, 95 rupees. That's why whole pattern is look like this. Means in this pattern, because of the selling, market moved upside towards almost 120 rupees, but because of selling, market moved downside and closed below 100. Below 100 means less than 100. That's why this pattern is look like this. Now, why this pattern is created? What this pattern is represented? This pattern represent the strong reversal. But as per hammer candlestick, it's a strong reversal from the bottom to upside. But as per Hangingman, it's a strong reversal from the top to the bottom. The Hangingman is a sign of bearishness. Bearishness is nothing but selling. Now, in this Hangingman, there is only one fundamental requirement, which is like this Hangingman pattern should be formed in some top areas, like in some resistance areas. Then only it will perform very, very good. These areas. Let's take an example in our charts. Okay, I am going to show you the real-time example where Hangingman is forming. Just a minute. I am opening the chart section. Here, if you look at this one is Hangingman candlestick, right? Hangingman candlestick, and I am checking in 5 minutes. Hangingman and hammer will work very, very good at 5-minute candlestick, 5 minutes. Plus, we need to check either it's support or resistance area. Now, what is support and how to draw support and resistance area, that we are covering in another topic. But just bear with me for a second that support area is buying area, resistance area is selling area in layman terms. Now, how I know it's a resistance area, I just need to zoom out the chart a little bit. If I zoom out, see this one in the sense, let me mark it closely. This area full of resistance area, right? Because in this area selling is happening. Whenever market is coming, market is moving downside from this area, and this area is buying area. This is a choppy market. Choppy market is nothing but the sideways one. Now what's happening is, in this area we found the hammer candlestick. Where we found hammer candlestick? Here we found the hammer candlestick. Now, how to make entry with the hammer candlestick? As I am always telling from the first video, just you need to mark high, mark a low of the the Hangingman candlestick, and just check the next candle. It's all depend on next candle, because next candle is always a confirmation candle. Do not check either it is green or either it is red. What matters is the pattern matters. Just check the next candle. If next candle is a bearish candle, which is red, that means you need to enter at breakout at Hangingman low, or you can enter breakout, means you can enter at the breakout at next candle. For example, if I mark high and low, either you can enter here or just mark the low of this candle, high of this candle, because this candle is crossing our low of the Hangingman, and enter based on this candle low. This is also safe entry, but it will work very good at 5 minutes. Hangingman hammer will very good work at 5 minutes and 10 minutes. Now, where should be our stop loss? Stop loss should be here. As market moves, you just need to trail the stop loss. How to trail stop loss within different types of time frames, that we are covering in another topic. But now we are just discussing about how we can make an entry in hammer. Just take another hammer example. If you look at this one, this one is also hammer example, right? And next candle is bearish candle. What you need to do, you just need to mark high and low, put stop loss here, and make entry here within 5 minutes, right? So if you do so, then you will get enough money. Even if it's reversed, then also no worry. If market trend is really negative, then it will give a real good amount and good profit. If you see market after this hammer candlestick, market go downside, and after that it will go it gone to the sideways. That's a different story. But hope this Hangingman is clear for you. Okay, if you have any doubts, you can just ask me in the comment section. But take an assignment is like visualizing hammer Hangingman in multiple time frames, 10 minutes, 5 minutes. Just observe, just make an possible entries with the Hangingman and hammer candlestick. If you do not trade, then you will not learn how to trade and how to control your emotions and what is the perfect entry. Hope you got my point. Thanks. See you in next video. Topic of this video is bullish engulfing. The bullish engulfing is very easier to trade. Now let me explain you what is meant by bullish engulfing. As name suggested, the bullish engulfing is the pattern for the buying or bullishness in the market. Now, how it look like. If you check this example, you will get to know that there is one bearish candle which enclosed within long bullish candle. That means the body of whole bearish candle is enclosed in whole body of the bullish candle. Let me explain you a little bit more detail. See, if I draw the bearish candle, then the bearish candle is red one, and which is look like this one. Because of its red, we can say that it's look like this only. Now, what is meant by bullish engulfing? Bullish engulfing is enclosed, means it's larger than this size. Means the next bullish engulfing is just like this one only. This candlestick will form here. What indirectly saying what it means is the low of bullish candle and high of bullish candle is more than the inside candle. Inside candle is nothing but the bearish candle. Means it should be start from lower side, or the low of the bullish candle is below the red candle and high of the bullish candle is above the red candle. So it represent full of buying. Now when it will work very smooth if we found this bullish engulfing in the support area. Suppose this one is the support area. I can mark here. Suppose this one is the full of support area. Support area is nothing but market is falling. Again, the condition is if market is falling and market is downside and it's at support area and market just moving for some time, and if you find some red candle here, the bearish candle, because of market is down falling, obviously we can find red candles. After red candles, if you find some bullish engulfing, then there is a high probability that market will move upside from here. This is the first condition. Okay. The second condition is, let me mark, if market is at resistance zone. Market is at resistance zone. Resistance is zone nothing but the selling area, right? But you can say this is the represent the bullishness. Then why I am telling you the selling area? The simple reason is, suppose if you find the bearish candle in the selling area, you will find like this one. But again, if it trying to break, if bullish candlestick is closed above this area and it formed like this one, that means still buying is happening. Market successfully break this selling area and market will move upside as a bullishness, and it will continue his bullish run. Why market will move upside from this selling area? Because whoever sold here, or whoever sellers are activated in this zone, their stop losses is above this area, right? Stop loss is above the area. Their stop loss will hit, and the seller stop loss will hit is nothing but they will buy. They need to buy. That means market will continue his bullish run. But doing this trade is a little bit risky one as compared to previous one. This one is very safe one. Now again, the next question is how to make entry this area and this area. Now let's look at a simple example here. If you look at the chart, as I am always telling, always wait for the breakouts. Mark high, mark low, and whatever the candle is crossing this bullish candle, like mark a high of this candle, mark low of this candle, whatever candlestick is crossing this bullish candle, just enter at this level. Means what I meant to say is, just enter at high level of this bullish candle and make stop loss at low level, so that easily your stop loss will not hit. If your stop loss is hit, that means market is not able to recover, or market is not able to continue his bullish run, and again market will start falling. But most of the time it will work. Now in which time frame it will work? In my own personal experience, I have seen the bullish engulfing is work very best in 10 minutes time frame. We can see in 15 minutes as well, but for the intraday I am preferring the 10 minutes. and I am very comfortable with the 10 minutes whenever I am seeing the bullish engulfing in the whole chart. But the condition is when it's safe, as I discussed in the charts, as I discussed in this our blackboards, like if it's in this support zone, then it will work very good. Now just let's check the real world example for this candlestick, right? We need to check real world example on the chart. Just a minute, I'm opening the chart. See, if you check here, I already grabbed some chart for you to understand better. If you see, just let's check. This candlestick is bearish candlestick, right? This candlestick is bearish one, and this candlestick is bullish one. This one bullish and this one is bearish. Is it clear? Because it's a red and it's moving downside. Also, if you check the trend, as I said earlier, the trend is negative trend. See, the trend is negative trend. And why it's support zone? If you again zoom out, you will get to know that this zone is a full of buying zone, right? Because when market is taking support here, moving upside, or whenever market is breaking this support, market is directly moving downside. That's why it is called as support. Now you are familiar with this support and resistance, but still I am covering in the trend analysis or chart analysis videos, like how to draw it, because drawing the support itself requires some analytic skill. Now just check, our main agenda is bullish engulfing. If you check, the whole trend is negative, right? If you check, the whole trend from the morning is negative trend. Now what we find is, we find the bullish engulfing here. Let me zoom in again. Just a minute. See, what we need to did is mark high, mark low of this bullish candlestick, and put stop loss here, make entry at this level. If you make a trade at this level, which is around 36,700 level, as round figure, let's suppose round figure. Now if you check, it gone, or it covered almost 37,700 rupees, like 37,700 rupees to 36,700 rupees to 37,600, means it's almost 900 plus points rally, which is very big in this stock market. You can earn more in this rally if you find this bullish engulfing plus 10-minute chart in the support area, right? Hope this is clear for you. Let's find out the another bullish engulfing example, this smaller one, like how bullish engulfing works. Let's check one more example. You just need to develop your analytic skill to check the bullish engulfing or bearish engulfing, whatever we're discussing throughout the course, so that it's easier for you to trade and understand the market sentiments. Just a minute. The other case, suppose this candle, see, this is full of sideways market, right? It not indicate anything, but it's still a bullish zone. It's still, we can say, the bullish engulfing, but the size of this bullish candle is too high. So here it's better to avoid to say this is the bullish engulfing or something else. We can check some another example. When you always remember, always trade at breakout, but do not trade in the falling market, or do not trade in the moving markets, like moving bigger candles. If you trade, then high chances that your stop loss may hit and you will face unnecessary losses. See, here we can see a clear cut of bullish engulfing, right, in 10-minute chart. Now your stop loss should be here and your entry point should be here. If you enter at here, you are easily able to get more points. But at this point, at this candle, you can ask me why market not moved up from this candle, because market is closed at this candle and we don't have the next day data, or we can say that market is not continued from this time. That's why we don't have the another chart. But because of market is moving downside from the morning, if you check the trend, market is moving downside from the morning, if you see the bullish engulfing here, there is a high probability that market will break all the swings. Swing is nothing but a pattern created by market. This is the swing, this is the swing, and market will move upside. Again, without observing or without developing your analytic skill, you are not able to trade. First, observe the market, check out the pattern in multiple time frames, and just observe the market whatever the time frame I am telling you. And I cannot say that do paper trading or real trading. It's actually your choice, but paper trading not contain any emotions. So in real actual trading, we need to win over our emotions, greed and fear, and that is the most important part throughout the trading skill, because trading is nothing but trading, especially intraday, is nothing but, in my point of view, it's my personal opinion, it's about 60 to 70% of our mindset and 30% is technical skill. You can earn or you can learn technical skill easily by observing market every day, but you can't learn or you can't guarantee your mindset every day at the same. Like what I meant to say in a simple words is, your mindset will differ each and every day. Sometimes you will be in fear, sometimes you will be greedy, sometimes you need to mentally stable, or you need to be achieve your targets on time and exit on time. That's all required in the trading. Hope you got my point. See you in next video. In this video, we are going to discuss about the bearish engulfing. In last video, we have already discussed about bullish engulfing. Bearish engulfing is exactly opposite to bullish engulfing. In bullish engulfing, the inside candle is the red candle. I am considering this as a red candle or bicolor because red candle is always selling candle, and the other candle is green candle, just like this one in bullish engulfing. But in bearish engulfing, it's completely opposite. The inside candle, the child candle, we can say that, is inside to the red candle. This is the pattern for the bearish engulfing. Okay, let's take an example. Here you can check the open and close of this candle is almost or below for the bearish candle. Now, how to measure this? In some books, some great authors are saying that one, always check the body, and in some books, someone saying that one, always check the low and high. Actually, it depends on, both are correct. Because of that time frame, market is not moving this one, not moving upside or directly can opened below this one. That's why it happened in bullish or bearish candlestick or bullish and bearish patterns. But take aside of this all the points, what we need to do, we just need to mark high, mark low, and check the green candle is inside the bearish candle, and yes, it's inside the bearish candle. Now, how to trade with bearish engulfing? Just look at this. We just need to mark high and the low, make an entry at the low point, made stop loss above this one, and just wait for your target. If you check here image, on what basis they selected the target? They selected the target based on the swings. Suppose market created this much swing, then what they did is, this is one support, so first target is, this is another support, because from taking this support, market moved upside. How to decide this swing? That is also we are covering after the trend, drawing the trend lines, how to decide this support and resistance. But for now, you can just consider entry points. Your stop loss should be above this line and your entry point is below this line. Now, when it will exactly work, or when it will work very, very good, suppose market is at higher level and this is the resistance zone. At the resistance zone, it will work very, very best. Best in the sense, there is a high chances that you will get enough profit. Whenever you can see some bullish candle is inside the bearish candle, then you will definitely get the good profit. Now let's take an example from our regular daily charts. Let me show you the example in the live market. I already shortlisted some examples. See here. If you mark, this is the bullish candle, right? As I know, Indian market are running all-time high now when I am recording this video. Just bear with me for a second. I will show you. See, if you check, Indian market is almost running all-time high because we are at this position. We are finding out at this position, right? We are recording video at this position, and market moved almost this much. So it's a very big rally. That's why it's easier to find out the bullish engulfing or pattern related to the bearishness, because selling is always start from the above, or we can say that selling is always start from the top side. Now what I meant to say is, just zoom in, you will get to know that one. This is the bullish candlestick and market is already at resistance zone. How I know? Because if you mark this one, you will get to know that market is exactly reversed up from here. That means high chances that market will again reverse up from here, or it will break from here. But how I confirm that market will reverse from here? First I checked this is the bullish candlestick, but the next candlestick is bearish one, and which is enclosed or which is bigger than this green candlestick. That means it's a bearish engulfing, right? It's bearish engulfing. It's a confirmation. What you need to do, you just need to mark high and low, make entry at this point, make stop loss here. Then you will easily get the good and decent profit. Now check the another example. Look at this one. As I said earlier, our market is all-time high. That's why it's easier to find out the bearish engulfing. Just mark high, just mark low, take an entry here, put stop loss here. There is a low chances that your stop loss may hit in the bearish engulfing, or if you are buying at bottom side, then it's a bullish engulfing. Now let's take a very good example where we got a decent profit. Just here, mark high, mark low. If you check, most of the candle are in this zone, right? If this type of candle is forming, like if it's bearish engulfing as well as it's covering multiple green candles, that means now market is preparing for a very good downfall. Always remember these things. You will get these things when you can observe the market by yourself. See, this much fall you got. This is very big fall as as compared to others, because it's almost from the 38,100 to 37,300. It's again almost 800 to 900 points rally. That's it. Bullish engulfing and bearish engulfing is, hope it's clear for you. Now the question is the time frame. As I said, bullish engulfing work in 10 minutes. Same, bearish engulfing is also work based in the 10 minutes time frame, right? And this time frame is also clear for you. Now some of the student having the question, how we can mark, like can we mark a body or can we mark high and low? Actually, if you ask me, what I am doing is, I am just checking the shape. If this low is too way long, then what I am doing is, I am preferring to mark the body itself. Body is also correct. But suppose if this bullish candle is like this only, then again I need to mark the high and low based on the bullish candle sign. Same for the bullish engulfing as same for the bearish engulfing. Hope this is the clear for you. Again I am telling, if you have any doubt, you can just drop a comment in the comment section with the screenshot if possible. Thanks. In this video we are going to discuss about 3 white soldiers. What it means of 3 white soldiers. First of all, 3 white soldier is the pattern of bullishness. Okay, and what is meant by 3 here? Because we need to check 3 bullish candles. but it should be formed in some pattern. The pattern is look like this one, right? What it means is just check 3 candles which is forming one above another. Let me talk it again, like let me say it again. The 3 candles which is formed one by another means, suppose this candle is formed, just mark at middle level. If another candle forms above this, crossing this, again mark this level, and if again third candle, like first candle, second candle and third candle is also formed like this one, means 3 bullish candle, that means it is a 3 white soldier. So 3 white soldiers. Why I marked the middle? Because for a confirmation, it's always good that this candle will not break the middle of these candles and continue his run above these middles. Sometimes what will happen, you will see, you will check this candle, again this candle, and again this candle. This is not a 3 white soldier. Even if it's one above another, this is not a 3 white soldier. The best 3 white soldier is just to look like this one, like, or if you see in the example, this one, right? Now how to make an entry with this 3 white soldier? It's really simple. After finding out 3 candle, just mark high of the third candle and just make an entry high of the third candle. Now where to put stop loss? The logical stop loss is below the first candle, right? Logical stop loss is below the first candle, but this stop loss is too long and it should be, sometimes it will not be in our risk capacity. So what I am doing is I am putting my stop loss below middle of this second candle, putting stop loss here. So it's easier for me to put logical stop loss in a safe side, as well as I need to book, I will get a good enough profit. Why enough profit? Because first of all, it's a bullish sign and I am taking a trade breakout at this candle. My stop loss is here. Very low chances my stop loss may hit, because indirectly saying it's a full of buying zone. If market come down, again buying will happen and market will go upside. Now let's take a real-time example. Let me show you on the plots, right? Just let me open the plots. See here, I already shortlisted 3 white soldier for you. See, if I mark here, this is my first, second, third candle. So what I am doing is I am marking high of this third candle, low of this third candle, or middle of this second candle. My stop loss is here, my entry point is here. Once my entry point is activated, if you see, lots of buying comes in the market, lots of buying, because it's a pure sign of bullishness. Lots of buying comes in the market, right? This much rally we got. Now again we can say some 3 green candles. Like, is this a 1, 2, 3? Is this a 3 white soldier? In my point of view, no. Why? I marked the middle of this candle, middle of this candle, and middle of this candle, but it break the middle. So I am not comfortable with this type of formation. When I am comfortable, when I see the pure 3 white soldiers, the one above another. Let's take another example here. If you check here, 1, 2, 3, but it's not a 3 white soldier. Why? Mark middle. It's always breaking the middle. So market not contains that much buying pressure. It represent market is not in full of buying zone. Just need to check the 3 white soldier. For example, here, this one we can say that failure example, first, second and third. Even if it's one another, we need to make an entry above this zone, right? Entry here and stop loss is middle of here, stop loss. And in this example, our entry point is got activated in the live market and our stop loss got hit. But it's not an issue. It's it's a market, and profit and loss is the part of the game, and we need to accept both. So it's not like every strategy is 100% working and every strategy is not 70%. It's not like that. It's completely depend on market, but still it will help us to restrict our losses in a much better manner. For example, if you see 3 bullish candle, first, second, third, enter at here, put stop loss at here, and you will get enough money in the sense enough rally to trade with. Now again, one last example I will check and we can close this video. See here, if you see first candle, second candle, third candle, and entry point is here, stop loss is here, and I am getting within 2 candles I am getting the good amount, right? So this is the magic of 3 white soldiers. Again, if you not understand video, again watch this video. But these 3 white soldier is really important and one of my most favorite pattern also. And one more thing is remaining, that is in which time frame it will work best. In my point of view, in 5 minutes it will work very best. Do not check in 10 minutes or 15 minutes for the intraday. The reason why I am telling this, because 10 minutes candle is very long candle and big candles, and it will, suppose this is the 10-minute candle, one, again this is the 10 minute, and again this is the 10 minutes, means already profit will gone, and people are starting people will start book their profit from these zones. So better to check in the 1 minute, in 5 minutes. Do not check in 1 minute or 3 minutes, it will not give that much accuracy. But within 5 minutes candlestick, it will give much more accuracy. You can also observe and let me know in the comment section. Thanks. See you in next video. In this video, we are going to discuss about 3 black crows. 3 black crows is the exactly opposite to the 3 white soldier. 3 white soldier representing the bullishness in the market, same as 3 black crows representing selling in the market. Now if you check the pattern here, you will get to know that the 3 continuous candles is forming below one of previous one, like one after one. First candle, second candle, and third candle. The same logic apply here. We just need to mark the middle of the each and every candle and just check that the next candle will be open below that one, right? Just I am marking in the this image, like middle. Now it's opened at this one, second candle, just mark middle, then this opened at third candle is opened at below this one. Now how to make entry? As I said, just mark the low of this candle and make an entry at the lower point, and put stop loss at middle of second candle as a safe side. If you have risk capacity, then I will suggest put stop loss here up above the first candle. That's not an issue. Now this is a very simple and straightforward example, because you already know what is meant by 3 white soldier. That's why you are easily able to understand what is meant by 3 black crows. So it does not make any sense to extend this video too much. So let's tightly focus on the real world examples. Let me show you the real and exact chart where we can find out this type of pattern. I already shortlisted pattern for you. If you check here, the first candle, second candle, and third candle, both are exactly opening the middle of each other, right? Just mark middle, just mark the middle of the candle, middle of each other. Just mark the low of the third candle, make an entry here, put stop loss here. Then if you observe, you will get enough profit in the sense you will get the lots of fall, because it's a 3 black crows. Again check, if you want, again we can check the another example for the 3 black crows. Here is one more example. First candle, second candle, third candle. Is it satisfying our rules? Yes, obviously it is satisfying our rules. How to make entry? Make entry at this point, put stop loss here. That's it. You will get enough money. Like in the trading, if you have the good money management and good expectation, you will really get good money. That's not an issue. Okay, so this is for the 3 black crows. Hope you got my point. Again, this is also 1 2 3 white, 3 black crows. But why I'm not comfortable with, as I said earlier, rules are rules. Just mark middle, but it's always crossing the middle, so there is somehow buying pressure will be there. But instead of taking risk, always check that each and every candle is opening below the previous middle candle, middle part. Hope you understand these three black cross section as well. See you in next video. Thanks. In this video, we are going to discuss about the Morningstar pattern. Morningstar is also one of the most popular patterns. The Morningstar represent the bullishness in the market, or we can say that the new buying will come in the market. Now, where we can find out this Morningstar pattern? When market is in the downtrend and also market is at support level, there is a high chances that we can depend on the Morningstar. Means if we can see the Morningstar in the falling market and at the support zone, that means there is a high chances that market will change his sentiments towards the positive sentiments, and it will start moving upside. That's the goal of Morningstar. Why it's called as Morningstar? Because it will convert downtrend into uptrend, just like a morning. Now, how this pattern look like what pattern represent and how pattern is look like. See here, if you see this types of candle, then it's a Morningstar. Why it's Morningstar? Because in the Morningstar you will see one red candle, a big red candle. We can say that selling candle or bearish candle. Then you can see some doji candle or spinning top or hammer is also fine, but the case should be it will not break this hammer or whatever the candle support, whatever the candle low or the support zones. Now if you once find out these candles, and if the next candle is a green candle, that means it's a sign of Morningstar, or we can say that we find out the Morningstar. Right? Now hope it's clear for you. Now again the question is how we can trade by using this Morningstar. There are total 2 potential ways to trade in the Morningstar. Let me explain you again. There are total 2 ways to trade in Morningstar. First way is, as we discussed, high breakout. Means the candle high breakout, Morningstar candle high breakout. And second is, after seeing Morningstar, just wait and check for the swing breakout. Now you can ask me what is meant by swing. Just bear with me for a minute. I will explain you what is meant by swing breakout and what is meant by high breakout. Let's start from the high breakout first. Okay, what is meant by high breakout? As I am saying from the first video of the candlestick, when you see this type of pattern, this red candle, this some doji or spinning top or hammer candlestick, and then it's a confirmation candle. After seeing this one, you can just mark high, whatever the candle, either it is, if green candle is high, then mark a high of green candle. If red candle is high, mark high of red candle. Mark low of this candle. Put stop loss at the low, and whatever the candle is crossing this high level, you can just make an entry here. That is the first case. But I am personally not going for this case. The reason is, whenever I gone through this case, or I gone through this stage, most of the time I faced losses. I will tell you the reason. The first loss is because market is giving the Morningstar pattern, but again it starts reversing from here and it is hitting my stop loss. That problem I am facing. So what is the correct steps to trade with the Morningstar? This second one. What is the second one? Is swing breakout. Now what is meant by swing? Now see, this is the swing, this U, or we can say that this is the pattern, and this is the swing, this is the swing. Whenever market took support or resistance, it's a swing. For example, here in uptrend it's a swing, this one is also swing, this one is also swing. The U-shaped pattern or just cup like pattern, inverted cup pattern, right? This is also swing. Now how to trade with this one? Let me show you in detail. Just a minute. How you trade this one? What we need to do? We just need to mark swing high, the last swing, whatever swing we have seen, and the low of the market. Obviously your stop loss will be here, and obviously your entry point is here, entry point. So whenever market break this swing is too much important, because from this swing selling start, from this swing selling start, from this selling start. That means whoever sold here, their stop loss is here, whoever sold here, their stop loss is here, whoever sold here, their stop loss is here. That means when market got here and start buying, obviously they started shifted or trailing their stop loss, and their stop loss is around here at these levels, somewhere around these levels. So what will happen is, whenever market breaks swings, whoever sold, they need to buy, right? When they need to buy, again buying will come and market will move upside. So this is the one of the best case which I ever found in the Morningstar. Trade in this case so that you will easily get a safe trade, very safe trade with the high winning ratio, right? You just need to observe the market every day and break out on high instead of breaking out on these candles. Like entry price is here, better to enter at this swing breakout. This is the good strategy for the Morningstar. Now let's take a real time example on the real charts. Just a minute, I'm opening the chart. Now I already shortlisted the Morningstar for you. If you check here, this one is red candle, like selling candlestick. This one is hammer, or we can say spinning top. Now just mark a low, okay? Just mark the low of the candle, put stop loss here. This is obviously, this itself is a swing, right? Because of its big candle, this itself is a swing, because market took resistance here and selling happened. The last swing we need to check. Now what I can do is, I can mark the high of this part, and I will make entry here and put stop loss at least here. Once I put stop loss here, if I make entry here, if you check, see, market moved a lot from this point, like again I am marking from this entry point to this point. Market moved a lot until resistance level. So if you check the trend from the morning, only trend is negative, and this is the support area. Why it's support area? As I discussed in last video, because market took support from here and trying to move upside. That's why first time market took support, move upside, but not able to sustain. Again try take support and move upside, but this time market have broken this swing. That's why whoever sold here, whoever sold at this candle, their stop loss must be here. If they are whoever sold here, so because of their stop loss got hit, the seller's stop loss hit, that means buying will come. If buying will come, obviously market will move, start moving the upside. That's the logic behind the Morningstar. Hope you got my point. Sorry. Now which time frame it will work best? In my point of view, it will work best in 5 minutes and 10 minutes chart. But we need to check 5 minutes, 10 minutes plus support zone. If these combinations are there, then it's a perfect trade and perfect setup. If you find this type of setup, then don't hesitate to take a risk. You can just take a risk, and otherwise you can just observe in a beginner stages. If you are comfortable with this type of pattern, then only trade. Hope you got this topic. If you have any doubt, just feel free to ask in the comment section. Thanks. See you in the next video. In last video, we have discussed about the Morningstar pattern. Morningstar pattern is the indication of trend reversal. Trend reversal in the sense, if trend is negative and if you find the Morningstar candlestick, then there is a high chances that market will start moving upside and convert change from negative towards the positive positive patterns. Now in this video we are going to discuss about the evening star candlestick. Evening star candlestick is exactly opposite towards the morning star candlestick. What evening star candlestick represent is, if trend is upside and at the resistance zone resistance zone is nothing but selling zone. At the selling zone, if you find out the evening star candlestick, that means there is a high chances that market will start move upside to downside. Now let's take an example here. The evening star is look like this only. What it represents is one strong bullish candle, one doji or spinning top or inverted hammer, right? Doji, spinning top or inverted hammer, all are fine. And then next confirmation candle is strong bearish candle. If we see this type of pattern in resistance zone, that means it's a evening star pattern. Now how to draw resistance, how to draw support, we are seeing in the next sections, but just bear with me. You will easily get to know that how to draw resistance, how to draw support, and what it means and how much importance we need to give support and resistance levels. Now in the evening star, again there are total two ways to trade. First trade is candlestick breakout as we discussed in the morning star as well, right? Candlestick breakout. And second is the swing breakout, same as morning star. Here what we need to do is first just mark the strong either bullish or bearish. Just check which candle is biggest one. If this candle is bigger one, then just mark high and low of this candle, and based on this breakout make an entry, put stop loss above this doji candle or on the top. Just see example here. You are seeing the example which one strong bullish candle, one doji candle, and two doji candles, and this strong bearish candle. This is the evening star candlestick pattern. If you see this type of pattern, this type of swing pattern, then it's a evening star. Now how to trade? Either you can take entry here at this breakout, or as I am saying in the morning star, the very safe entries, check the swing. This is the swing, but I am not comfortable with this swing because of this strong buying comes from this swing. So as a safe side, I will check this swing and I will mark this swing. Now what I will do is I will take an entry based on this breakout. Just for initial stop loss, I will put stop loss here just for a safe side. Once this breakout will happen, then we will get enough rally towards the downside if it's a combination of evening star. But the reason why you are seeing this much spike, because this is the evening star plus there is one price action called as head and shoulder price action that we are covering in the price action section. Just bear with me for some time. You will easily get to know how to check that price action easily. Now let's take a real live example where we can see the evening star candlestick pattern. Here I already shortlisted evening star pattern for you. If you check here, the trend is upside. If I zoom out little bit, you will get to know that trend is upside. Check here, trend started from here, again here. This is the upside, strong indication of upside trend. Now we need to find out, this is also resistance zone. Here we are standing with the resistance zone. Why? Because market got exactly reversed from this zone. Last time also selling happened, and now there is a high probability that market will also start from here. Now if you check, this is one confirmation is it's on resistance zone. Now second indication is the evening star candlestick pattern. Here if you check, this one is strong bullish candle, again doji candle, and this one is bearish candle, but it's not that much strong, but still it represents the evening star candlestick pattern. But for a confirmation side, if you find out the comfortable pattern, then it always good. For example, here is a strong bullish candle, here one doji candle, and here one strong bearish candle we find out. Now where to enter? We just need to check swings. This is the swings and this is also swing, because market go move upside, take support, move upside, take support, and move upside. That's why this is also called as swings. Now based on this breakout, we need to take an entry. Our entry should be on this candle, like this breakout is our entry point for the downside, means we need to short this trade, and our stop loss should be here. if you check here, you will get the enough rally at the downside. The only difference is morning star and evening star is the trend. In morning star, trend will convert from negative to positive, and in evening star, trend will convert from positive to negative. Now, again, the one thing which is remaining is in which time frame it will work best. As my personal experience, for morning star it's a 5 minute, for evening star it's always 5 minutes. In the sense 5 minutes, there is a high probability that you will get the high profitable ratios. What I meant is the success ratio within the 5 minute is more as compared to 1 minute, 3 minutes or 10 minutes. Above 5 minutes, like 5 minutes, 10 minutes and 15 minutes is always good. If you see same candlestick pattern in 10 minutes or in 15 minutes, then it's always good. But for the intraday, in 5 minutes is always helps to enter early in the sense enter at higher position, and our stop loss is also at the safe side. That's why 5 minutes work best for morning star and evening star. You can also analyze by yourself and just let me know in the comment section. Thanks. Hello guys, we almost completed all the most popular and the important candlestick pattern. Now it's time to take some key points and use it while trading. Now, in my point of perspective, first key point is check the pattern and shape. What I meant is, I am always suggesting to check the pattern. For example, this is the hammer. This is the inverted hammer, also called as Hangingman. Either it is red or either it is green, don't matter for me, because what it represent, the hammer represent the bullishness and Hangingman represent the bearishness. Even if it's red, it really don't matter, because of within that time frame market or candle is not able to close above the opening price. That's why it's red. But if you check here, lots of buying comes. That's why it's the bullish candlestick and color don't matter for me. So always check the pattern, not the color. The second key point is do not enter without confirmation of multiple things. Now, what are the multiple things? Suppose if you see the hammer, as our rules, put stop loss here, make entry here on breakout. But I am not suggesting to do so. This is correct, but when we need to check with multiple conditions. The conditions are which we are covering in the next section, but now because of its key takeaways, I am giving some important points. Like for example, this is the resistance zone and this is the support zone. Suppose if you check, if market is moving upside and if you check Hangingman here, then if you take entry here, that does not mean that market will move downside confirmation. It's a probability that it will move downside. But if market trend is full of bullish only, then what will happen? Sometimes market will move here, and what will happen? Suppose this resistance, this is support. If you market go moving upside, Hangingman, high chances that again market takes support near here and market move upside and your stop loss may hit. So what you need to check is, you just need to check multiple things. For example, here is support and here is resistance. Now market is moving upside. Now you check the Hangingman candlestick. Do not enter here. If market moving downside, again market will give some shape and again market will start moving downside. Now you just need to wait for these types of shape, just a retest. We can call it as retest. Okay. The reason why I am saying that one, because when this happen, then seller from this side will move to this side. That means exactly market is not able to break high and not able to move. So it's a confirmation. The reason why I am telling to put stop loss here and enter here, to understand the candlestick pattern more in detail. Always use candlestick pattern for the analyze and trade with the candlestick pattern on the basis of pattern plus another price action which contains price actions which are covering in the next videos, which contains maybe trend analysis or support or resistance or any price action pattern. If you do these types of combination, then only there is a high probability that your trade will be successful. You just need to understand the trend of the market and the pattern of the market. Suppose let's take another example. Here is resistance area, here is support area. Now market is moving upside, and you can check here if again hammer comes, not a inverted, only hammer comes, that means buying pressure comes from the resistance area. Resistance area means whenever market will break the resistance, there is a high chances that this resistance area will work as a support after some time. So if you check this one, then obviously your trade will be successful if you enter here and put stop loss here. If you check Hangingman here, that does not mean that market will directly fall from here. Always remember, when market will move upside, it will move upside, then sideways, then upside, then sideways or upside. For downtrend, it will move downtrend, some retest or sideways, and then downtrend. It's not like that market will directly start moving upside and touch its target, or move downside and touch its target. It's not like that one. Whenever market will move upside, see, whenever market is bullish, market will move upside. For some time, market will move sideways and then upside. For the downside, market will start moving downside, but it will give unnecessary moves like retest, like this type of pattern. Whenever downside happen, this type will pattern happen for the downside, and whenever upside is happening, this type of pattern will happen. Okay, if that trade is too volatile, that stock is too volatile and lots of value. Why I am telling all these things? Because in the next section we are covering all of these topics. Now, why candlestick pattern again work, or why we need candlestick pattern? Just to analyze the market, where market is moving towards, and just to analyze the sentiment of the market. There are multiple ways to trade with the combination. Do not trade without the confirmation. For example, just I said I only showed you hammer and inverted hammer, but if it's what can I say, if a morning star candle, then obviously you can go, because it's a confirmation. If it's at support area, market will move downside, and if you see this pattern, then obviously whatever I'm telling in that morning star video, it will work. Where it will not work, only single candle, because in this single we don't have any confirmation. Always wait for another candle to close. If another candle is also bearish or a strong selling candle, then only go for the breakout at this candle, or this candle is also fine. You will gain this much knowledge by the observation. You just need to observe the market each and every day to understand the sentiment, right? The third point is always analyze with multiple time frames. Okay, what it means, do not only believe on 5 minute, 10 minute or 15 minute. Always try to understand the market in 1 minute point of view, 5 minute time point of view, and 10 minute time point of view. It will take time to analyze in all 3 or all 5, but you are easily able to capture the market sentiment, and you are easily able to make a plan to trade. The winning ratio, if for this all time frame, will be increased if you are able to manage to understand market in couple of time frames. Do not believe on only one type of candle frame, like 1 minute or 5 minute or 10 minute, because every day market will act different. You need to understand the market first. Fourth and most important thing is take your time. What I meaning for this statement is, it will take time to understand the market sentiments. It's not like that one that you completed the course and you are directly ready to trade. No. For suppose now we completed the whole candlestick pattern, you just need to take a time for yourself to understand the market, at least for 15 days or 7 days, unless you get the confidence on the patterns. Once you understand the market sentiment, you build up the confidence, then try to trade. Try to trade with the proper stop losses and proper targets. Do not blind trade. Even if stop loss it, then also fine. You will learn lot of things from the losses instead of profit. But always trade with the rules. Take your time. And also, paper trading will not help that much, because if you do paper trading, then 90% chances that your trade will be successful and you will achieve your target. But if you do real trading, then maybe this 90% will reduce to 70% or 50% or 60%. We don't know. But real trade will help you. So in the real trade, unless you get confirmation or unless you get confidence and the discipline, you just need to trade with your money management, proper stop losses and proper targets. Now, in the next section, we are covering about most important part is support, then second is resistance, then third is trends, and how to draw support, resistance and trend lines, and how to use candlestick plus support or resistance and the trend line breakout. This is very fun ride to understand all those things and then trade. For now, if you completed carefully all the candlestick pattern, now just observe the market. If you want, take a trade with the confirmation candles and confirmation breakouts. Again, in the next coming sessions, you will again get to know more details about the market and how market behaves. But again, I am telling you, use candlestick. I am personally using candlestick pattern to make my plan and candlestick pattern to just understand the market sentiment. I will tell you one clear example. What happened is, suppose market opened at suppose market opened at gap down or flat, and market is full of selling pressure. Now what happened is, I have seen this much long one hammer candle frame. After seeing hammer candle frame, again I have seen this type of candlestick pattern, this type of candlestick pattern. But this is the hammer candlestick, and I know this is the bullish sign, and this one is the support. So if I draw in the wire lines, this is just like this one, and this one. Means here we find out the hammer. Here is this candle represent the here, and market moving upside. So what I will do, I will just enter at here. The reason is, market move downside, I check the hammer, market move upside, but not able to the low of the this hammer candlestick, or just say low of the day. And again market took support here. That means buyers from this candle is also shifted to at this level, so that they are pushing market to upside. Now what is the confirmation? Whoever sold at this position, their stop loss is above this one, here or here. So whenever buyer pushing market from here, if their stop loss is hit, if seller stop loss is hit, that means again buying will start, because already selling happened in market. Again we are trading at the breakout. It's a confirmation set. So played important role here? The hammer. This hammer played important role to change my mind towards the bullishness instead of bearishness, because market is falling and no one will dare to enter at upside. But because of this candlestick and because of this swing and this pattern, I am able to make it. So this is the profitable strategies. You will get to understand more in detail in the next section. Hope you all got my points. See you in next video. Thanks. Hello guys. In this video, we are going to discuss about the trend. Now, before starting this video, I want to make one comment. That comment is, do not see market in a technical point of perspective. Always see the market in terms of buyers and in terms of sellers. If you see the market in the shoes of buyers and sellers, then it will help you to understand market more and more. So from this video onward, just consider or just analyze the market in terms of buyers and sellers instead of saying resistance break, support break. Suppose what I meant is, let me give one simple example. Suppose this is the resistance and this is the support. Now what is the resistance and what is support, we are covering in the next video. Now let's take an example. If buyer bought this much stock, buyer pushed the market towards resistance. Now what happened on the resistance? Some selling come, but again buyer pushed the market, but again selling up, again market moved downside. But now this time what happened? Buyer really moved the market. Now as per seller, what are you thinking? Suppose market is moving this one, but again taking support here, moving this one, again taking support here and moving this one. That means buyers are shifted from here to here to here, right? Let me draw it again. Here is a resistance, here is a support. What I mean is market start buying here, took a resistance, market came down, again took a resistance, market came down, and now this time market is breaking. Now what's happening is this buyer, again buyers are activated here, buyers are activated here. That means buyer are pushing the market towards upside, but sellers are still here, right? Resistance is nothing but sellers. See in the seller's point of view. Now whoever sold here, someone sold here, right? Someone sold here. That's why market dropped this much. But buyer are able to push their positions. Now when market break this one upside, that means whoever sold here, they need to buy. Why they need to buy? Because their stop losses must be here. Their stop losses will hit and buying will come, and market will start moving upside. Now this is the very simple analysis without any technical indicators or without any technical keywords like support resistance. Just see market in terms of buyers and sellers. This is the first key point. Now let's back to our topic again. Our topic is trend analysis, or what is the trend. In the market there are only three types of trends. Now what are the three types of trends? Let me show you. First trend is upside, right? First trend is upside. Second is downside. Now what is the third one? Third one is nothing but sideways. Now what happening in the upside? Upside is nothing but market is moving upside full day. And what is downside? Downside means market is moving at the downside. Then what is sideways? Means either buying and selling is at the same level. That's why market is not either moving upside level and not either moving at downside level. That's the sideways. It's a whole theoretical summary, which is important, not important. It's actually based on you. But because of it's a zero to hero course, it's my responsibility to showcase you what are the trends theoretically. Now the confusion is, most of the people ask me why you are telling me this. Just tell us how we find out the trend. It's really simple. How to find out market is moving upside or market is moving downside? Most of the people losing money because they are not able to analyze what is the trend. How to analyze the trend? It's simple. Again, you need to take help of multiple factors like what are the candlestick pattern market is creating. Multiple time frame analysis you need to do. Multiple time frame analysis, as well as you need to mark support and resistance levels. Now suppose market is at resistance level, took this resistance from moved here, it's uptrend. No, unless and until market break this resistance and moving upside, it's not an uptrend. There is high chances that suppose you entered here because you are seeing that it's uptrend, but there is high chances that market will also move downside from here. Who knows? And your stop loss may hit. This is also possibility. So you need to clear with the trend and always follow the trend. In the stock market, there is a proverb called as trend is your friend, right? Trend is your friend, and you just need to follow this rule. Do not follow your mind, because what your brain or what your heart will think is, now market moved full upside, now market is at the top, now anyways market will fall. So if you see any bullish any bearish candle, you will directly trade at the P side, in the P side, in the sense you will directly trade at short positions. You will short the trade and high chances that you will lose money. Always go with the market trend, and without confirmation do not trade. Now how to draw trend line technically, for that I am making a separate video. Now what is the importance of trend line, that I am showing you theoretically in this video. If you know, then you can skip this video, that's not an issue, but just bear with me, you will understand the few more things. For example, if market is moving upside, market will directly move upside like this line, right? What market will do? Market will create some swing and then move upside. So market will move upside just like this, move upside, come down, move upside. Now what is this? What are these swing represent? This represent the upside in the market. Now you just need to draw one trend line. Wait, let me draw it again. You just need to draw trend line here, so that you will better understand where market is moving towards. You just need to draw trend line which touches this one, which touches some multiple swings. This is the pattern of the trend line. Suppose if your mind is saying, or if your analysis is saying that one, now this is the big resistance, and market will move downside. So what you will do, you can just wait for this trend line breakout. What this trend line represent? This trend line represent the buying. That means if this trend line break, selling will come, right? Why selling will come? Whoever bought here, or whoever bought in this above this trend line, they need to sell here. If their stop loss will hit. That's why if market break trend line, high chances that market will start falling again and again. That's the importance of the trend line. It's for uptrend. Downtrend is also for downtrend is also same. How to draw trend line, that we are covering the technically. But here theoretically, if market is moving downside like this, you just need to mark trend line here. You just need, let me draw it again. If market is moving like this one, you just need to draw trend line this one. And whenever market breaking this trend line at upside, high chances that whoever sold here, they need to buy, and market will start moving upside after breaking the trend line. That's the whole summary for the market. In the sideways, market will directly move to two major support and resistance zone, and who knows, some strategists trade in sideways, then only they are able to make money, but not as compared to uptrend and the downtrend. If trend is clear, then only trade, otherwise do not trade. If you are thinking today trend is downside and your mind is prepared for downside, but market is moving upside, avoid the trade. Do not trade, because market is not respecting your analysis. It's fine to avoid the trade instead of losing money. Okay, hope you got my point. In the next video, we are covering how to draw trend line technically in the charts, so that you are easily able to draw it, analyze it, and what is the swing in the detail. We are covering it in the next video, and which one is the best time frame for the trend line, how to draw, in the next video. I made this video too much long because you need to see the market in terms of buying and in terms of selling, not in terms of this is the zone, this is the pattern. No, when you start seeing the market in terms of buying and selling, you are easily able to understand the market sentiments. That's the whole goal for this video, to make this video long, even for the very, very basic terms. Hope you got my point. See you in the next video. Thank you so much. In this video, we are going to discuss about support and resistance. We are keep talking from the first video, like from the candlestick patterns, about support and resistance. But now this is the time to discuss about what is meant by support and what is meant by resistance. But before starting this video, please make sure that you have experimented the how to draw trend line by yourself in the live market as well as offline market. If you've not done that one, then please at least do 1 or 2 times how to draw trend line in the live market, and then only start watching all the videos from here. Because without your practice, it does not make any sense to proceed with the all other concepts. Maybe you will feel a little bit bored to draw, but it's a evil necessity to draw that one. Please make sure that you are also doing your analysis and homework for the upcoming videos, so that it will be easily help you to understand the price action more in the detail. Now let us discuss about main agenda, that is what is meant by support and what is meant by resistance. Now let's start from the support itself. Now what is meant by support? As name suggests, something is supported to the market to move upside or change the trend. Suppose if this line act as support. When it will act as support? If market is falling from upside to downside and buyers are interested to buy at these levels. Now instead of support, we can say that the interested level of buyer, suppose the buyers are able to buy at 90 to 100 rupees INR. Like rupees is nothing but INR currency. You can also consider as a $1 or $2 or whatever the dollar you are considering, the round figure one. So it's easier for you to understand the logic. So buyers are interested to buy at 90 to 100 rupees. Then when market is falling, market will start upside from this position, and this is called as support. Support is nothing but the buyer's zone. Support is nothing but the buyer's zone. Now the exactly opposite is resistance. If market is moving upside, then people are able to, people are interested to short the trade or close the trade or sell the trade at 1000 rupees. Let's say 1000 rupees here. People are able to sold the share at 1000 rupees. So selling start from here and market will start moving downside for some time. That's the reason it's called as resistance area. Hope you got my point. Now the concern is how to draw resistance and how to draw support. That we are covering in the next video. But for now, there is again one more confusion is, suppose this is the line, market moving upside, market broken the support area. Then why this breakout is more important than any other? Because if whenever market breaking the support, as I'm saying from the beginning, this is the buying zone, and whoever bought here, their stop losses, initial stop losses should be here. So whenever market break this, their stop losses will hit, and again selling will come and market will move downside. That's the story, and that's why support and resistance is more important. Now again, the myth is, suppose this is the support area. If market moving upside to downside and market breaks, okay, now what happening is market will after some time market will move upside and again take support, or this previously it is act as support, but now the same line, I'm again telling you, the same line will act as a resistance and market will move downside from this area if market is coming from down to upside. Okay, let me show you the example, but that technical example I'm covering in the next video. Example in the sense, the logic is simple. Draw one, for example, if market is dropping, just check the past history, draw support line. If market break this and market is not able to sustain above this support, in the future this line will act as a resistance one. If market moving start from bottom to upside, if market is same for resistance as well, resistance in the sense, if market took resistance here and market broken this resistance, whenever market will fall in the future, this line will act as an support instead of resistance at that time. Okay, hope this is pretty much clear for you. Now there is a one myth going on in the market, and it's correct as well. Now I'm explaining you in terms of buyers and sellers point of view. See, this is the line. What people are thinking, there is one myth called as, if market tested this resistance multiple times, then people are thinking this resistance is going to be weak. Market will move downside, again will tested, again move downside, again it tested. Now people are saying that one time, second time, third time. Market tested this resistance 3 times. That means this resistance at the first time it was stronger, at the second time it was not that much stronger, at the third time it is going to be weak. That is the myth, and it's correct. Why it's happening? Just let's take an example. Suppose this is the resistance and total 100 people are interested to sell. Market took resistance here. Out of 100, 80 only sold. Out of 100, let's take 60 only sold. Still 40 sellers are remaining. Again market move upside, that 40 out of 40 again 20 sold, right? But here buying pressure come. Now how many sellers left? Only 20 here, because already we got 60 plus 20, 60 here, 20 here. That means market will, high chances that if buyer gave some pressure from here, market will break this. That's why whenever market will testing support first time, second time, there is a high probability that after more than second time it will break. It will break with forcefully. But you need to check the pattern. Suppose this is the resistance, market move upside, market took dropped too much because it's the first time selling. Again market move upside, again this is the second time selling happened, but this time market is not able to break the last swing. Last swing is nothing but this one, and again took support above this swing, suppose here one. That means in the market buying is happening, and just draw one trend line here. That means this is the buying trend line, and a high chances that whenever it will break at the third time and more than second time, that means it will move upside, so that you will get enough rally towards the upside whenever resistance is break. That's why it's the logic behind the getting support or resistance weaker in the sense whenever tested, their buyers or sellers are trapped at that position. That's why we are seeing that one. More the market testing, it's always better to weaker that resistance and weaker that support. Hope you all got my whatever I am telling to you, and you are understanding. Hope you all got my points. See you in the next video with the technical analysis, that how to draw support and how to draw resistance in the live market or by checking the past history. Thank you so much. See you in the next video. Hello guys. In last video we have discussed about the trend in theoretical manner. Now in this video we are going to discuss about how to draw trend line technically. The drawing the trend line on the recorded chart, or just say after the market, it's really easier one. But being confident on our trend line in the live market is a different story. But for now, just bear with me. How to draw it, I am telling you. Always see the swings in the market. This is the one swing, this is the swing, the swings in the market. What you need to do, you just need to mark the swings, or you need to draw one line in a such a way that it will cover most of the swing. Now you are seeing market is falling, and what your mind is thinking or your analysis is thinking, suppose here is some support area. Let me draw it again. Suppose here is some support area, and your mind is saying that one, from this area maybe market will start moving upside. Now what you need to do, you need to take entry, but you need some confirmation because already market is in the selling pressure. So how to draw trend line is the main and our how to draw trend line is the main agenda. Now in the TradingView platform, just select here. What I meant is, just go here. In this section you are getting the trend line as an option. Just select trend line and just zoom out a little bit, so that draw trend line from actually selling start. Suppose selling start from here or here. If I draw here, does it make sense? No. Why? Because market is moving in another direction, like market is moving sharply in downside. So what we need to do, we just need to mark it from this level, whoever the highest swing is this one. So what I will do, I will just click here and I will draw trend line in a such a way that it will cover most of the point and most of the swing, and I will adjust a little bit. So what I am covering here, I am covering this swing, here market taken the resistance here, this swing, this much swing I am covering. That means it's a good trend line. Why it's a good trend line? Because if your trend line is covering most of the swings, more than 2 swings is fine, but 3-4 is always better, and better is always make importance than the fine statement, right? So what is my logic here? Suppose if this is the support area, and if market is taken support and breaking this trend line, that means from here up move will start. Now I need to make an entry. But whenever market will break the trend line, always remember, just wait for the retest in the sense, let me change the color of the my pencil. See, if market break this, market need to touch this. What is meaning by retest is, whenever market break any key support, resistance or trend line, market will move not directly move upside like this one. Market need to retest it. Market need to respect your support, resistance, or let's say trend line. market move upside, then market will touch your trend line or support or resistance line, then again start moving upside, and this is called as retest. And always wait for the retest. Without retest, it's not a confirmation side that market will move upside. If there is one more chance, if market without retesting, market moving upside because of buying pressure, and if market is breaking this high like last swing after the breakout, that means it's a confirmed breakout. This is also one more possibility. If you're not understanding what I said now, you can just rewatch it again. Now what is my logic? When market break this trend line, market will start moving upside. If you check here, market took resistance here, market move upside, retested it because it's opened at upside and retested it, and again started moving upside like this. But it just moving sideways and again give breakout. But it never came down below the trend line. If you see this one, right? So what is the best trade here? If market break this one, then it's the best trade. Now today market broken this one, that means tomorrow there is a high chances that market will move upside at least at this swing. That's the whole logic of the trend line. Now again I told you theoretically. Let me teach you again how to draw trend line with perfection. As I said earlier, you just need to mark the multiples which covering the multiple swings from the live market. Now your trend line should be just like this one. What I meant is narrow one, narrow in the sense the wide one. Do not mark trend line like this one upside. This one, this is not a trend line, this is not a trend. No, breakout of this trend does not make any sense. So what you need to do, if trend line is looking like this one, just like 45 degrees or let's say 60 degrees, then it would be great. Other than that, it does not make any sense for me, and I am not trading with that trend line. For example, here market move upside. Now I missed this rally, but I want again a trend line breakout. What I will do, I will just mark some trends here, trend line here, just like this, and I will wait trend line to break. If trend line break, took resistance here, if market break the trend line, took resistance here and again moving upside, that means I will make an entry here. Otherwise I will not make an entry. Some fellows or some students, the mistake which they are doing is they are not drawing the trend line. What they are doing, market moved upside, market moved downside, and what they are doing, they are directly buying here, but because they thought from here market will move upside. But if you have the trend line ready, why you need to buy earlier? Always buy on breakout. So it's a confirmation of the trade, and you will get enough rally, and you will restrict your losses too much. Wait, let me show you again a different example of how to draw the trend. See, in this example also trend line is possible. If I mark high and this trend line is called as very good trend line. If market break this, then definitely we will get good profit. But you will say, sir, this already broken, then why we not got good up move? Because if you check the date, it's 20th October, it's 21st October. So what's happening is market directly closed here and opened at this level, but still market is able to sustain above this trend line. And what happened is, if I draw that day trend line, which is another day which market already broken this one, that means market actually start moving upside. But in real market, your trend line should be here, something like this one. Now one thing you need to do in the live market, the thing is, if you draw the trend line, it's not always perfect. For example, I draw on this one, right? I draw this trend line. Let me draw it again. Let me adjust this. Let me draw it again. I draw this trend line. But in the live market, it should not be the case. Maybe I have drawn first time, I have drawn this one and market broken this one. You just need to adjust trend line little bit in the live market, unless you will get retest multiple times or touch the trend line multiple times. Once trend line breakout, always wait for the retest and then only trade. Drawing the trend line is not a rocket science. It's just a easier task. What you need to do for analyzing, just choose any time frame, whatever you want. It's not like you only get to get trend in 1 minute, 15 minutes, or any minute you are able to mark the trend line, and you can mark it as per your analysis. See, here I marked this trend line, and if you see, I marked this trend line. If you see, market move started upside from this trend line. That's the story. You need to do same thing for the upside as well. For upside, draw from bottom to the top here. Wait, I will remove it all the trend lines. just a minute, just let me draw. I need to remove this one, and always remove trend line if market is moving further or market is not respecting your trend line, if you are not comfortable with the trend line. Now I marked this one. Why it's a confirmation? Because market took resistance, swing here, swing here, swing here. That means high chances that buying comes from here, buying comes from here, buying comes from here. That means high chances that if market break this, that means market will move downside. And this, see the results in the live chart. Market broken this trend line and we got the enough money. So what is my analysis? If I check my, if I do my analysis, I'm always, if I analysis saying that one market already moved a lot and I need to short, I need to make a short side position at the downside, like I need to make a position for the downside, then I will wait for the trend line breakout and then only I will make an entry. Other than that, I will not make an entry. Now, what is your homework? Just analyze any task in the live market, because drawing the trend line in the offline market or when the market closes, it does not make any sense. It makes zero sense. You need to draw it in the live market and check it with the multiple time. If possible, I will share the live market video as well, but I need to check because the machine which I am using are completely different than machine which I am using for the trading. So let me figure it out something for you. But take an homework for you. Draw the trend lines in the live market. If market is not respecting your trend line, adjust your trend line little bit. And in the first go you will fail, second go you will fail. But every day if you do same practice, then you are able to catch how to draw the trend line and how to draw the perfect trend line, or how to analyze or how to get the trend every day, trend patterns every day, or let's say clear with your mind in which trend you are trading, on what basis you are trading. Trade with the multiple confirmation. Hope you got my point about how to draw trend line. It's little bit easier one. Okay, thank you for being with me, and see you in the next video. Thank you so much. In last video we have discussed about support and resistance in theoretical manner. In this video we are going to discuss about how to draw support and resistance technically. Now whenever market moves, market will create some pattern and then market will move. Okay, so market is also known for repeating his past histories. Now we just need to mark out those levels whichever market is taking support or market is taking resistance. Now if you see a simple example, I will mark this, I will mark this. I will just mark the levels which market got rejected and which market got support. Now for as per this example, this is my resistance and this is my support. Now suppose if market start falling from upside at this line, that means this resistance will act as a support in future. Same for this support. If market is moving upside and taking resistance here or facing selling here and moving downside, that means this line will also act as resistance. It's not like it's a strong support, or it's not like it's only support line, it's only resistance line. One line can represent both support and resistance. Now just check an live example where we can see some support and resistance, and I can mark the support and resistance in front of you. Just give me a minute. Now see, if I the first rule is use any time frame which you are comfortable with. For example, for now I am choosing the 5 minute. You can use any just for analyzing the stock. Now what I will do, I will just check from where market got rejected. Now this is the today's chart. Now what I am able to understand by using this chart is market is taking support resistance here, market is taking resistance here. Also market is taking support from here, market is taking support from here. So what it means, these two represent, or this area represent the resistance area and this area represent the support area. Are you getting my point? Let me reframe it again. This is the resistance area, this is the support area. The reason this is support, because market contain the buying pressure exactly from this area and selling pressure from this area, because it's called as resistance. Now again, how to mark it? See, in this panel, in the TradingView, in this panel, what we need to do is, this is the TradingView platform. For now I am using the up stocks just for analyzing the charts, but who don't know what is upstock is nothing but the broker which can provide chart options and many functionality for the trade in Indian stock market. Now this chart is directly integrated with the TradingView. Now what we need to do, just need to grab the horizontal line from here and just mark it. If you mark it, it will mark past history as and it will stay here until future use as well. Like whenever until you delete it, it will be at 40,100 rupees like for the lifetime unless you can delete it. Now mark this support area. Now you mark it as resistance and support. Do same thing, just zoom out little bit, just mark some high and some lows as well. For example, this is the low, I will mark this low, and just mark the swings, like wherever market took resistance or wherever market took support, just mark it, just for whenever you are starting as a beginning start. Now I marked as 40,100. Now is it correct or not? Just check past history, or there are total two ways to check. For example, today you marked, then in the future you need to check, is it really support and resistance or not? Is market really respecting your lines or not? If you check here, it's almost 40,150 rupees. Or you can check here, it act as a support as well as it act as a resistance line. Now let me reframe it again. Now let me check, sorry, undo. Let me cross check it again with the past history as well to check whether market taking or got rejection from this line or not. See, multiple times market taking support here. See, market taking support here, and whenever market taking this support, it's falling like a hell. Falling like a hell in the sense, it just start falling because it break the support area. Same thing we need to check for every line which we have marked in the live market as well. So what I will do, when tomorrow market will open, I will just cross check whatever the lines I marked, is market respecting my lines or not. For example, if market is not respecting this line and market is directly respecting this, then I will directly adjust my marker into as per that day. But if you do this at least for 10 to 15 days, after 15 days you will realize that whatever the marked level you have is correct one and exact one. Within first go you are not able to mark it very perfectly, but as day by day if you mark it and adjust it as per the market, then you will get the exact lines. If you check my other trading account, or someone knows which is part of my group, then they knows that the levels which I marked is the perfect one, because I am marking from last 6 months or 7 months. That's why I got the perfect lines itself. So you will also get within 15 days you will get your results. That's not an issue. Now again, for marking there are total two ways to mark, just like one line. For some student or for some in some books, they are saying that each one line does not make any sense, because someone is marking the body just like I marked the body, and someone marked the wick as well. Wick is nothing but candlestick whole bar. Now what's happening is, why I marked the body here, because if you check here, this is also from here exactly it is taking support, from here exactly it is taking support. Why it fall like this one? Because of the selling pressure, and selling pressure is not handled by buyers. That's why it fall like this one, but again started recover and moved up back from these zones. So again, the second way to mark is the rectangle. A rectangle we need to mark using, we just need to select the rectangle from the TradingView or whichever broker you are using which is integrated with the TradingView. What we need to do is, just a minute, what we need to do is, people are marking the wick as well as body and considering it as a whole support or resistance zone. If I choose this, what I will do, I will mark, just let me remove this first. You need to backtest each and every meter multiple times, then only you will get exact results. Now what I will do, I will just mark it like this one, which contains the wick of the candles. If I want to mark the above levels, then how I can mark? Suppose this level I need to mark. If I remove this line and if I want to replace this line with the rectangle pattern, what I will do, I will mark like this. Wait, just a minute. I will mark the body and the wick as well, and I will just drag it further. Now this area is full of resistance area for me because market taking support here as well as wick is also inside this. So inside this rectangle I will not trade. But if you ask me what is the correct method, actually both are correct. It depends on you which method you are comfortable with. But personally, if you ask me which one you are preferring, I am always preferring the lines instead of rectangle because I have the good experience with the lines instead of the rectangle support and resistance. Whenever I mark rectangle support and resistance, it will confuse me while trading, but line is pretty much simple. Now how to trade with the lines, it's a different story. By the combinations of price actions, chart patterns, it is very useful to make an entry in the support and resistance lines. In the next section, we are going to discuss about how to make an entry with support and resistance. Now once you mark it, you just need to comfortable with your support and resistance or chart trading skill. Then only the price action section you are easily able to understand. Hope you all got my point. Take your time, mark it, and then watch next videos. Unless and until you are comfortable with your support and resistance, do not proceed with the next videos because next video required the good amount of confidence as well as support and resistance knowledge, so that you are easily able to mark it, or you are easily able to understand the price action logic behind it. Now if I mark it again, previously I marked it like this is taking support here, this is taking support here. If I go back, see again this is taking support here and exactly started buying pressure from here. So this is the magic of this support and resistance. It's always better as a beginner, it's always better to mark support and resistance for the first time and observe for the rest of the time, like each and every day. Once you are comfortable with this, some other people are only preparing drawing support and resistance for today only. Means suppose market opened today, what they will do, first they will mark today's high, they will wait for some time, hour or so, they will mark today's high, today's low, and they will check where market taking support, or they will just check past histories and they will check where market taking support or where market taking resistance. They will just mark one or two lines and either breakout at above side or downside of that trend line or the resistance or support line, they will make an entry. This is also good strategy, but for now you can just focus on this one in the sense the strategy means mark it, observe it for every time. No need to go for second one. I am again repeating second one. Just a minute, I will remove all the lines. What most of the people or what some people are preferring is, suppose today market opened, what they will do, they will wait for hour or 45 minutes, whatever the time frame they are using. What they will do, they will mark today's low or they will mark today's high. Now if they will check the market sentiment based on the candles, suppose market started taking resistance here, let me mark it again. Market start taking resistance here, coming down, but it is moving like higher high formation, higher high in this is buying, pushing the market from here to here to here. So what they will do is they will make a logic, if market break this resistance line, then they will make an entry at upside. Or what they will do, this is the one possibility. Second possibility is after marking this one, they will just zoom out and they will check from where market exactly got upside or exactly got reversed. Suppose from this red line market exactly got reversed. So what they will do, once market touch this red line, they will directly make a short position here at downside position. So it's for this one, for intraday basis or day-to-day line, you need to be perfectionist and you need to analyze the market sentiment itself. But as a beginner, you can go for our first strategy. First strategy is nothing but mark it, observe it, which I am also personally preferring because I don't like mark every day and just check and just go for breakout. It will help me to analyze the stocks on the daily basis to where it is taking support and where it is taking resistance, and it will help me to set up my plan according to the tomorrow's trade. Means I will make a plan today itself based on tomorrow's market opening. That's the whole story behind how to draw support and resistance. Hope you got my point. See you in the next video. Thank you so much. Hello guys, in this video we are covering the overview of what we are going to learn in the price actions. Price actions is the most important part in the trading because as compared to any indicator, price action having the better accuracy. If you are master in the price action, it will help you to restrict the losses and improve your profit ratios. Now, we already learned about candlestick, support and resistance, which these three will help us to understand the market sentiments. How? Suppose if this is the resistance and this is the support, if market breaks this crucial resistance, that means the market sentiment is positive. Same for support. If market is breaking this crucial support, that means overall market sentiment is negative. And third type is if market is just moving around support and resistance and in between support and resistance, that means market is sideways. Now you just need to take your time, understand the market better by drawing support and resistance lines, trend lines in the live market. Without this confirmation or without learning this one, please do not proceed with the price actions video, because price actions is purely depends on these three topics, right? So these three topics is able to make you understand the market sentiment most, but price actions will help you to exactly make an entry, how to make an entry, where to put a stop loss, and what is the market sentiments. So without wasting time, let's start with the next video and we can learn more details about the price action. And there are multiple types of price actions, and which we are covering most important price action in the whole section. So just bear with me, take your time, understand the market for each and every day. If you not learned these three things, I am again repeating, please go watch it, because watching the video is not enough. You need to spend time, you need to give time to the market and experiment by yourself. Then only you are able to understand. Hope you got my point. See you in the next video. Thank you so much. In this video, we are going to discuss about our first ever price action called as ascending triangle chart price action. What it needs is, we need to understand how to draw resistance, how to draw trend line first, and this topic we already covered. Now if you already familiar with the resistance and the trend line, let's proceed with the ascending triangle chart. What it represents is the bullishness in the market. When it will represent the bullishness in the market, if market break the resistance line and sustain above this resistance line, then only market will start move upside. Now how we can trade with this type of price action using ascending triangle? If you look at this syntax, or just a syntax example, market is trying to break this very important resistance. This is our resistance zone. What's happening is, first time market rejected, second time market rejected, but buyers are pushing the market upside, but sellers are still here. That means in one of our video I already discussed with you that whenever market took resistance multiple times, we can consider this resistance will convert into weak resistance in the string. Whenever market first touch at this resistance first time, it was strong, but after onwards, whenever it will touch this one, it will make getting weaker and weaker. That's the story behind it. Now if market break the resistance upside using this trend line, then there is a high chances that market will start moving upside only. Now where to put stop loss and how to make an entry, let me show you one example. Once you will get to know that, suppose let's take this example only. This is the resistance and this is the trend line which we adjusted. Now what happening is, once market break this resistance, you need to put stop loss at below this trend line. Stop loss is here. Why? There are total two reasons. First, which is below the trend line, means which is below the more buying zone, because if sudden fall comes, at least it will again take support here and move upside. And second thing is this swing. I am always preferring the put my stop loss below the swing. This is the swing and I am putting my stop loss here. Now how to make an entry? See, we need to make an entry based on these swings or retest, do not make an entry at this position. No, do not make this mistake. As per safe side, what you need to do is, now suppose this is the ascending triangle pattern and market broken this one. Always wait for the retest. If it's really breakout, it will retest it and again start moving upside. Now whenever it take retest and start moving upside, you need to make an entry at here and put stop loss at here. If you do so, this is the profitable ratio or the success ratio is increasing, or let's say success ratio is more as compared to directly making entry at this breakout. You will understand more when you trade live. Now let's focus on the learning things, like whatever I am telling, like if break at this one, wait for retest and always break out the retest. Whenever market breaking the retest swing, then make an entry here and put stop loss below this swing or below this swing. Now again there are second stage involved here. We can use this type of price action within two types or two ways. Second way is, suppose this is your resistance and this is your trend line. Now market is moving like this one. Now what market will do? It's not chances that market will only move upside. It's high chances that market will break downsides as well. If it's break the downside, when it will break the downside? When this support is strong enough. Strong in the sense high sellers are activated are here. Most of the time we can see this type of pattern if market is running all-time high, or market is after long time market is facing the most crucial resistance, or if market is at round level, for example the 40,000 rupees or the 50,000 rupees, the round level always having the strong resistance zone or strong support zone. Now how to trade if market break this one? How we can trade? Let market break this trend line, market will retest it and again fall. At that fall, again this breakout, this swing breakout, we can make entry here, put stop loss above this resistance. And what are the target we can expect? This is our first target, this is our second target, and whatever the swing created, this is our third target. Let's take an example from here. If market break at the downside, I will make after retest I will make entry here. Suppose market broken here, retested and downside, I will make entry here. My first target is this one, my second target is this one. If you consider this syntax example, suppose if I make entry here, put stop loss here, this is my first target, this is my second target, this is my third target, this is my fourth target. I will trail stop loss as per my this target, put here, trail stop loss here, trail stop loss here, something like that. So this is the second stage. And as per my experience, always wait for the after the breakout, always wait for the retest, and after retest you can make an entry. Do not enter or do not directly enter at this position unless you have very proficient in the trading. As a beginner, this is the very safe logic to trade. Now let's take an graphical example or live market example. Here it's really hard to mark the levels after the market is going on, after the recorded chart, or let's say in the offline market. If you see this chart, this is the ascending triangle pattern, because this is the trend line, this is the trend line which we have drawn, this is the resistance. Now tomorrow, and luckily I got this pattern because today it created the ascending triangle pattern. Now tomorrow what will happen is, suppose market is open here only, what will happen is, what I will do, if market break this, I will not make entry here, I will wait for retest, and after retest if market move upside, I will make entry at this position. Now again you can ask me, what sir, if market will directly move upside and it will not make a retest, what will do? I will simply skip that trade and I will save my capital. But always follow your own disciplines and your own rules. As per my discipline, I will always wait for the retest or after breakout at least one swing, and on this swing breakout I will make an entry. It's not like that it's always retested and move back. Always wait for the swing, and if market sudden give sharp breakout, then wait for some small swing and then enter. But always do not enter in between in this whole running market. It will be more dangerous as compared to any other entries. Also, do not enter here or do not enter here. As a safe side, wait for retest and then enter. Now if market moves, suppose if again market drops from here, where I will make entry, I will put, first of all I will put stop loss here. I will make an entry at retest at, suppose I will make an entry at this position, entry. Now my first target is this one, sorry, my first target is this area, second target is this area, or I will book all of my profit at this zone, because this zone is more strong resistance zone, because this one is 38,900 and this one is 40,100, which is almost near to round figure. That's why this logic will work fine in the market. Hope you understand these price actions. Now again, the most important question is how to check and in which time frame we can check. We can check within 5 minutes and 1 minute. I am personally checking this type of pattern in 1 minute. If you want to trade, if you are checking with 1 minute, let again show you one example. If you are checking with the 1 minute, what will happen? Market will break this, it will take a retest and again move back. Then you can make entry here. For the 5 minute, follow same logic, nothing change. Always wait for the retest. But for the 10 minute, what you need to do is, for the 10 minute, what you need to do is, after breakout, just wait any 10-minute candle to close. If any 10-minute candle close here above this resistance area and the next candle crossing this closing candle, then you need to make an entry. Otherwise, do not make entry. What is the two rules? After 10 minutes or 15 minutes, more than 10 minutes, market, suppose this is the resistance, market need to close one candle here. Close in the sense, you know what is the close. Then if any candle crossing this candle, then make entry at this crossing line. This is the difference between 1 minute, 5 minute and 10 minute. You can observe first and then only trade. Do not directly trade. I am not suggesting you to go and trade. Observe the market, analyze the market and then only trade. Hope you got my point. Thank you so much. See you in the next video. In last video of a shaded triangle, we have discussed about two cases. That is, the first case is, suppose this is the resistance and this is the trend line. The first case is, if it break upside, then after the retest we can make entry here. And the second case is, suppose this is the resistance and again this is the trend line. If market break downside and after retest, I can make an entry. I also give the live chart example. If you not watched the previous ascending triangle price action video, please go and watch it. Now let me show you the real time example. Yesterday we only have this much data until this date. We only have the data until this date. The date is nothing but, let me show you, the date is 2nd November. If you check last video, we don't have the 3rd November data, but now we have the 3rd November data because I am recording today and the last I am recording the video at 3rd November, but the last video I recorded at 2nd November. Now let's, in yesterday only, what I told you, suppose if market open here and if it break upside, then I will make an entry at the upside position. If you not watch the last video, then I am again telling you, please go and watch what I told you. If it move here upside, then after retest I will make an entry here for the upside. If you observe here, let me zoom in properly, just a minute. If you observe here, you will get to know that one. market broken the upside, that's not an issue, but it failed at retest but not able to move upside. So what was my entry point? Market broke the upside, come down. So this one is my entry point. If market took support here and again move back, then I will make entry here. But in this case, is it happened? No, but it broken the resistance, right? So what I did today is market broken the trend line at downside instead of upside. This second case is happened here. So as our rules, what we need to do, after breakout we need to wait for one retest, and after retest we need to enter at here. Now if you check 5 minutes, you will get to know that there is nothing a clear retest until here. Let retest or the best swing, here you will get enough profit. So what I did is, I am pretty much comfortable with the 1 minute chart. So what I did is, I shifted my time frame to 1 minute in the live chart, because I am always checking 1 minute and 5 minutes. So once market broken this trend line, let me adjust the trend line a little bit so that you will understand. Because of the zoom in and zoom out problem of this broker app, this is happening. Just a minute. Now what's happening is, market broken this trend line. Let me cross check again the trend line. Let me adjust it. We need to adjust the trend line little bit here, because of we shifted the time frame. Just a minute. Just a minute. Just bear with me, friend. I'm extremely sorry about the delay because of some technical issues here. Now it's done. Now what we need to do, as I discussed earlier, within 1 minute what I did is, market broken this trend line. Market broken this trend line, right? Here broken this trend line. As per rule, after breaking trend line, it need to be retest, and after retest, when it come down, we need to make an entry. So what I did, I had make an entry at this position. I also updated this price action into my Telegram channel. Okay. Now what I did, I made an entry here. But what is our target? As discussed in the last video, I just zoomed out little bit and I need to check the target. So my first target was this one. But it directly gone for falling. So what I did, I booked some profit at this line only when it come back to retest. But what I did, again I re-entered at this breakout, because come down, I booked a profit somewhere around in this zone. Then again market trying to break the low, so I make entry here. So I made entry here, and market moved downside. Then what is my expected target after second entry? After second entry, let me cross check. After second entry, my second target was the last swing. The last swing is nothing but this area, right? This area is our last swing. So at this position, I booked all of my lots, all the profit. Then again from this zone only market start moving upside and but again fall. This is about the Nifty Bank, which is one of the index listed in the Indian Stock Exchange. So the purpose of this video is, whatever I discussed in the last video about the ascending triangle, if you go and watch once again that video, you will get to know that what I told. I will always here got the breakout, but I not traded, because within 1 minute candle also, after retest it never came, it never moved upside, but at the breakout it moved upside, and it also it's created some price action, right? Fall, retested and breakout. Again, this type of price action is a safer one, and I am always following this type of price action and booked a very, very good profit. That's the purpose of this video, to show you the glimpse of how market is working and how to analyze. So yesterday only I told you I am going to do this because I have the plan, and today same thing happened, and I got a good amount because I am pretty much clear with my understanding. That understanding you also need to develop. Hope you all got my point. Let's continue with our other price actions. See you in the next video. Thank you so much. In the last video, we have discussed about the ascending triangle chart, which is look like this one, and the ascending triangle represent the upside potential in the market. Now we are going to discuss about the descending triangle chart. Now this descending triangle price action represent the downside movement in the market. How? let's see the example. Suppose if you have the support area here, or let's say support here. Now what's happening is selling start. You need to draw one trend line, just like we are showing in this image. If market is testing this support multiple times, and if it gives a breakout, then high chances that market sentiment will convert into negative, and it's the sign of bearishness. Now how to trade with this type of price action? What you need to do is, after the breakout, just wait for retest. Like for example, if this is the trend line, this is the support line, what will happen is, after the breakout, just wait for retest, and after the retest breakout, enter here, put stop loss below here, or above here. Now if you see this example, where my entry point, if market break this, I will not enter here, even because I'm not comfortable to enter here as per my discipline. What I will do, I will check one, retest it, and if market again breaking the retest breakout, I will make position here. Yes, it's a late position. We can say that it's a late position, but it's very safe position. Either enter at this swing breakout, unless you have the confidence that if market break this, it will fall more, then only enter here. Else, without confidence, always wait for swing breakout and then only enter. Yes, there is another method to enter at this swing. How to measure? Using, there is one indicator called as Fibonacci retracement, which we are covering in the indicator, and which we are designed a separate section for Fibonacci retracement, and how to use Fibonacci retracement to enter at the retest, or how we get to know that this this support is perfect one or not, or the breakout is good one or not. That's a different case, but this is the more than enough to trade for now. After the breakout, wait for retest and then only enter. That's the safe entry using descending triangle chart. Hope you understand the descending triangle chart. Now let's take a live example, from the market. Here I already shortlisted, or I already find out this resistance or this support and trend line. In my Telegram channel, I'm always updating this type of pattern in the advance, and the channel name is @Free Bank Nifty Learning, which is specially designed for Indian stock market, which I am on daily basis I am sharing my update. So in that group you will get to know that one before. Like, I will first draw this one, and after breaking out I will draw this one. So if you look at this example, let's take this example. If you check, this is my support area, this is my support area. What will happen? Market taking support, moving upside, taking support, moving upside. Now market need to break downside, but what happened is market break on downside? No. As I am telling earlier as well, there are total two cases. If market breaking downside, and in this case also same like ascending, market will break this upside, market will break the trend line and then make an entry. But in this case, market broke on the upside, and I found this example very quickly, so I am suggesting go to this example. If market breaking this one, again taking retest and again breaking this one, so here I will make an entry. See, and just a minute, I will zoom out. See, I draw the trend line. What happened is, first time market broke this one, right? But market again fall, not able to sustain. But as per our rule, when to make an entry, if market after breaking this, market takes support here, retest here, and on successful breakout we can make a enter here. But what happened is, market breaking this one or not after taking retest? No, because retest got failed and market again fall. So suppose again, if market break this trend line, either you can enter at this position because it's already broken, or after again breakout, let's wait for fresh retest. After fresh retest, you can enter at retest breakout, which is your entry point must be here. Entry point must be here, and your initial stop loss is last swing, which is the last swing is here, and which is below the trend line, which is here. Your stop loss is here. And what is my target? If I zoom out little bit, my target is based on the swings which is created by trend line. Now as per this chart, my first target is this one, but I entered at this one, so my first target is this swing. Which is 38,500, and I entered at 38,350, almost 350 levels. So if you check, after the retest I got the enough money. Otherwise what will happen is without retest, if you have entered at the breakout and if you have entered at this candlestick, what will happen is market will got reverse and your stop loss may hit. So for increasing our winning ratio, we need to wait for retest and the breakout. Now again same question arises, which time frame it will work? Within 1 minute, 5 minutes we need to wait for the retest, but within the 10 minutes we need to check the candle open and close. Let me show you. Within 1 minute I already discussed. If I click on 5 minutes, let me find out pattern again which I marked. See here, if you check, what happened is within 5 minutes, if you check it here, I got one breakout. Market took support here, go upside, took support here, go upside, and this time market broken, retest and move upside. I will make entry here. My target, at least first target is, my first target at this position, target, right? So entry here, and I will put stop loss at least here within the 5 minutes. Now let's switch to the 10 minute. Just a minute. 10 minutes. Now within 10 minutes, how to enter? As I discussed earlier, what we need to do is within 10 minutes we need to wait for the candle to close. Let me remove this one. Let me remove this line. Sorry for the delay. I'm extremely sorry for the delay. Now within the 10 minutes, what we need to do is, see, the candle closed here, right? The candle closed here, and the candle which is crossing this one, I need to make an entry at this position within a 10 minutes, and I will put stop loss below this line here. Now if you check, within 10 minutes also retest happened and market move upside, but within 10 minutes, if candle close this one, as a safe side, what I will do, I will just check this swing as well, because from this one market reversed, right? I am gaining. As a beginner, what I am doing when I was learning this descending triangle chart, I am making the entry at this position, at this candle. But after onwards, I will get to know that, I got to know that it's better to enter at this breakout. So what I did is, the last swing I entered at this breakout, put it stop loss at this swing, and I got the enough rally here. The winning, as per my experience and practice, my winning ratio got increasing day by day. Same thing will happen with you. You just need to take some time, observe the market. Now your homework is observe the market, and let me know in the comment section. Hope you got my point, and hope you understand the descending triangle pattern in the two ways in the sense, breakout at the upside and breakout at the downside. Hope you got my point. Let's analyze market by yourself and let me know if you have any confusion. Thanks for watching and see you in the next video. Thank you so much. Hello guys. In this video, we are going to discuss about the head and shoulder pattern. This pattern is one of my most favorite pattern because the winning rate by using this pattern is more for me. Now, what this pattern represent? This pattern represent selling in the market. So it's the sign of bearishness. So how this pattern will look like? If you see this syntax here, it having one left shoulder, one head, one right shoulder. Now we have to make a entry. See, this is the left shoulder, this is the head, this is the right shoulder. So market having one common touch point or common swing. If you connect that swing using some support or resistance lines, then these swings is called as the neckline. Okay, this swing is called as necklines. What we need to do is we just need to mark these swings. If you check this example, market created one left shoulder, one head, one right shoulder. Now this one is the common swings. Now what is the correct entry? If you draw this trend line or the support line for the neckline, whenever market breaks this neckline or at this position, we need to make an entry for the downside. That means we need to trade short, like we need to make a position at the shorter side, not the long side. So why this represent the bearishness? Let's take in some theoretical approach here. Suppose market moving upside. What happening is, whenever market moving upside, some profit booking will come. So market will move downside. Again, because of the buying pressure, it will start moving upside, but this time lots of selling pressure come, market move downside. So what will happen? Someone bought here, right? Again buying will come, because still buying is there from the bottom. Again buying will here, but this seller shifted to now at this position. Again selling will come. Then logically, whoever bought here, like if you draw this trend line, whoever bought here, they need to sold somewhere around here, right? Their stop loss is somewhere around here, right? Or whoever bought here, their stop loss is somewhere around this, below this swings, this swing. So by the logic, whenever market this neckline, the buyer stop loss will hit, and because of the selling pressure start from here, and because of the neckline buying stop loss hit, again more selling will start and market will start falling. It will not fall like straight fall, not just like a straight fall, but it will give a good amount, or we can say that it will give enough rally to book our profit. That's the whole summary of head and shoulder pattern. Now the harder thing in the head and shoulder pattern, the finding out the head and shoulder pattern in the live market. It requires lot of observation skill. Once you are comfortable with the head and shoulder pattern, then you are easily able to find out. Now let's take an chart example here. If I take chart example, let me open the chart here. Just a minute. See, I already shortlisted head and shoulder. I'm pretty sure most of you don't know where is the head and shoulder. For me, see, I'm again marking it. For me, this is the shoulder, left shoulder, this is the head, and this is the neckline, right? So what I will do, I will mark the neckline here, right? Neckline it's not like neckline is always straightforward. Maybe it's trend line as well. It's not an issue. Here, there is one another. Suppose if I mark this as a left shoulder, this is also possible. If I mark this as left shoulder, head and right shoulder, then I need to connect the neckline part. What I will do, I will make position at this side, entry at this one. I will make a stop loss above this run here or above the head, whatever is in my risk capacity. Now, but safe stop loss is here and this stop loss is also fine. Now I will make entry at this position. If you check, I am getting the enough rally, like whenever it broken, it just like it just fall. The market, completely converted from buying to the selling. That's why head and shoulder is most important. So it will help you in two ways in the sense, first way is to make an entry for the downside, and second benefit is, if you are in the upside and you are waiting for the breakout of higher high formation, then you should close your position at this neckline. This is the second approach. So it's on you how you are utilizing this approach, but finding out this type of pattern or marking, it will take, I'm pretty sure it will take 15 to 20 days for you if you observe the market each and every day within multiple time frames. If you check here, see, when market broken this trend line, market just fall. But it's not like that it will fall every time, it will fall like this one. Maybe fall may be smaller or fall may be bigger, we don't know. If I mark another head and shoulder, I just need to check. I'm checking in front of you only, that if I found any, then I will mark it. See, this is also head and shoulder pattern for me. This one, right shoulder, then this one. I will mark this neckline. Whenever I break out, I will trade at the breakout. I will get enough rally. If I check it, I will get enough rally here. But more clear the pattern, that means more confirmation it is. Now someone who are easily someone who is struggling to find out the head and shoulder pattern, the another simple approach is just shift candles to the Heiken-Ashi. Once you shift candles to the Heiken-Ashi, you will get to know that, see, as per today's analysis, see, this is the head, right? This is the head, and this is the right shoulders. But here, if this is also a left shoulder, but I am not comfortable with the left shoulder because the neckline at very bottom level. The right shoulder must be like this one, so that I am very much comfortable. Now let's take I shifted to Heiken-Ashi. Let's take another head and shoulder pattern. See, don't you think this is also head and shoulder by using Heiken-Ashi, right? How? I will mark it. Wait, I just need to zoom out. You will easily able to find out the head and shoulder by using zoom out and zoom in. It will give a clear pattern for you. See, because I have that observation skill, I am easily able to find out where is the head and shoulder pattern. This is the right shoulder, this is the head, and this is this is left shoulder, head, right shoulder. I will put stop loss here, and at the breakout of this trend line, I will make entry, right? Means my neckline is like this one. So what is the multiple confirmation? This neckline itself is act as a trend line. Anyways, market movement is downside. Again, I seen head and shoulder pattern, so I will make entry at this position. This is the multiple confirmation pattern, and whenever you have the more than one confirmation, you can go ahead and take a trade. For me, this is also head and shoulder. If I mark it, see, this is the left shoulder, head, right shoulder. Now, this is my neckline, right? Because here, this is the common thing. Like if I mark very closely, like this one, this is my common touching point. I will make position below this one. That's the whole summary for the head and shoulder. So in the Heiken-Ashi, it's really simple to find out the head and shoulder. See, you can also observe by yourself and let me know your thoughts in the comment section. Now, again, one more question comes is which time frame it will work best. As per my personal experience, I personally expressed this pattern in multiple time frames, but I got more winning ratio. Winning ratio is more in 1 minute. Yes, you are listening it right. 1 minute, even if it's trading 1 minute is dangerous for a beginner, but this pattern will work very smoothly in 1 minute and 5 minutes. Whenever I'm seeing this pattern in 1 minute, I am not hesitating to trade at the downside. I will always make a position for the downside 1 minute and 5 minutes. Why not I am going for the 10 minute or 15 minutes? I am using 10 minute and 15 minute just for analyzing the chart or clear my understanding about the trend. Because farming out this type of pattern like head and shoulder and neckline for 10 minutes and 15 minutes, it will take 1 day or 2 days to form this shoulder, then head, then this shoulder. That's why for the intraday, always go for 1 minute and 5 minutes for this pattern. For this pattern in the sense the head and shoulder pattern. Most of the people are not comfortable with the 1 minute and not agree with me as well. But you can observe by yourself and just let me know in the comment section. That is the whole summary for the head and shoulder. Hope you all got my point. See you in the next video. Thank you so much. In last video, we have discussed about the head and shoulder pattern, and the head and shoulder pattern is look like this, and we are making entry here, and the head and shoulder pattern is the sign of bearishness, right? Bearishness. So there is a opposite term called as inverted head and shoulder. Inverted head and shoulder pattern is the sign of bullish trend. It's exactly inverse to this head and shoulder pattern. That's why we are calling it as a inverted head and shoulder. Let's see the syntax here. If you check the inverted head and shoulder syntax, here neckline is here, left shoulder, head, right shoulder, the same position. After breaking neckline only we need to enter. Now someone will ask me, what is correct the approach? Suppose this is the head and shoulder pattern. What is the correct approach? Can we wait for the retest and then break out, or we can directly make position here? For me, as per my personal experience, within 1 minute candle frame and 5 minute candle frame, whenever market created this head and shoulder pattern, I am directly making entry at this breakout. I am not waiting for retest and putting stop loss here. There is a low chances that market will get back for the retest and again move back. Even if we get back for the retest, there is again low chances that we will get at the same position or same amount, same entry point. So I am always making entry at this neckline breakout and putting stop loss above the shoulder. So my risk is minimum and my entry point is correct one. Same for the inverted head and shoulder. I will make entry at this breakout, this neckline breakout. Now if you check the live example here, live in the chart example, the left shoulder, head and the right shoulder, and if you draw this straight line as suggested, it may be trend line or support or resistance. Support or resistance, may both lines are same. So I will make entry at this position. This is the correct approach to do inverted head and shoulder. If you are able to find out the head and shoulder, then you are easily able to find out the inverted head and shoulder. But again I am saying, you just need to give time to the market. Now let's take an example from the chart itself. Let's open the chart. I already shortlisted head and shoulder pattern. See, I am using the 1 minute chart. I am using the 1 minute chart. See here, 1 minute chart. Now what I am doing is, see, if I mark head and shoulder, where I can mark, see, this is my left shoulder, this is my head and this is my right shoulder. And where is my neckline? My neckline is just look like this one. Okay, this is my neckline. Where I will put stop loss? My stop loss is at this position, stop loss. And where I can make an entry? I will make entry at this line, or as a safe side, I will also mark a horizontal line here and I will make entry based on this horizontal line here, entry. If I remove all those things, I will make entry at this position as a safe side and putting stop loss at here. So if you observe, market moved a lot once market broken this inverted head and shoulder. Like market moved from here to here, which is almost 36,800 to 37,300, which is almost 500 points movement. See, this is the big difference within a 1 day of inverted head and shoulder. Now you can simply say that, what sir, you are just marking in the offline market, it does not make any sense for us, like how to check in live market. It requires skills and it requires the observation. Now how to check inverted? Now again you can ask me like, you are only showing the success example, where is the failure example? In the inverted head and shoulder, even if it's failure, the failure rate ratio or failure ratio is very less as compared to winning ratio. Like losing ratio is very less. Again I need to mark here, then I will mark here, shoulder and here. Where I will make an entry, I will make it at this position. If I zoom in little bit, you will understand much better. If I zoom in little bit, see, yeah, don't you think it's a real head and shoulder? Shoulder, head, again shoulder. Where to make an entry? At this position. Because this is the neckline, this is the neckline. Whenever market broke this, market go upside. Here is my stop loss and market moved almost 36,000 after breakout, 37,050 rupees to 37,200 rupees. That means is a 200 points rally. Okay, hope you got my point. It will require observation skill itself, nothing more than that. Again, the same the same time frame applicable here. It will work very best for me at 1 minute and 5 minutes. I am showing this on 1 minute. Let's take an 5 minute example as well. Within a 5 minute, it will take time to show because I need to cross check now in front of you only. I not shortlisted for you. maybe the same inverted head and shoulder is applicable for the 5 minute as well. Let me check for you. Here I am not able to find out until now. See, again, this is the clear head and shoulder, head and shoulder. Then we just need to mark the neckline. After marking the neckline, here is entry. If you check, it moved a lot. This same example, the example which we have discussed in the 1 minute candle chart, both charts represent the same thing. Then what is the, again, one more confirmation we need. Suppose the neckline, if the neckline itself is your resistance line, suppose this is itself is a resistance and also it is acting as a neckline, means suppose this is the resistance, it is acting as a neckline. That means there is a high chances that when market will break this, then it will break very forcefully and market will start moving upside. So whenever you find this type of pattern in the resistance area, directly go and trade without any hesitation. Okay, go and trade means I'm not suggesting to directly go and blindly trade. You take your time, understand the market logic, and then only trade. Without confirmation, do not trade. Okay, hope you all got my point, and see you in the next video with another price action. Thank you so much. Hello everyone, we are going to discuss about double bottom pattern in this whole video. Now what is meant by double bottom pattern? It does not mean that market will move downside because the word contains the bottom. Whenever we formed the double bottom pattern is just look like a W shape. Okay, W1. Whenever we found double bottom pattern, there is a high chances that market will move market will start its movement towards the upside. So we can say that double bottom pattern is the pattern for the bullishness, right? Pattern for the bullishness. Now let's take a syntax here. What is the syntax? If you check here, market moved downside at some support level, or let's say at resistance level. I will explain you with the two examples. See, first example is, suppose this is your support area. Which area? Support area. Support area is nothing but buying area. Market will move downside, took a support here. Again market will move upside, but because of the selling pressure here, market will move downside because someone sold here. Most of the people sold here. Already selling happened, like selling happened from here, selling happened from here. Now what will happen is, market will took support here, but this time buying pressure was less. But again this time buying pressure will come and market will easily able to move upside. Now whoever sold here, this we can call this as a neckline of the market. Neckline. Whoever sold here, their stop losses are here, because I'm always saying from the first topic of the price action, view this market in terms of buying and selling, not in terms of technicalities, neckline, support, resistance. See, it's very, very simple. Someone sold here, that means they need to buy here because their stop losses will hit. So whenever market break this swing, that means market will move upside, because of this, first of all this buying came, again because of seller stop loss hit here, again buying comes, and that will push market upside. That's the reason we are calling as a double bottom pattern as a bullish pattern, because high potential market will move upside. Now this is the first case. What is the second case? Suppose this is your resistance area, or sorry, this is your support area. What will happen? Market will move downside, break the support, and market will again move upside, again move downside, but again move upside. What it means? Someone bought here, again bought here, and someone sold here, right? But it's already a support area. Market break on the support area. Then where to enter? If market break this neckline, this support will act as an neckline. That's the story. Acts as a neckline. It does not mean that if it's break the support and market will what people will do, because of it broke the support, it go to retest. They feel that they feel that it is the good retest or it is the successful retest, and they will sell or they will sell their they will start making the position at the sell side here, and they are pushing market downside. But because at the same level buying pressure will come and market will move upside. Even if they sell, what is the correct approach for the enter if market break this support area? If market breaks support area, it will retest it and again it will fall. Then this is the correct approach for the entry. But in the double bottom pattern, what will happen is market will break this one, move this one, again break this one and move upside. So it not break this one. Sometimes what will happen is within sudden spike it will go down, it will go upside. This is also case. But no worries, sometimes its stop loss will hit, but the winning ratio of double bottom pattern is also good as compared to other patterns, or instead of saying as compared to other pattern, the winning ratio of double bottom pattern is good only. Now let's take an example here. See, there are total again two ways to enter: at the breakout of the neckline, and this another approach is after the retest. I am always waiting after the breakout at the red line. I will show you in a graph example, just bear with me. See, market took resistance support here, move upside, took resistance support here, again market move upside. So what is the entry point? Here the retest, and after this one I will enter here if this type of retest happen, or I will enter here. Both are fine. Now here is the stop loss. Our stop loss should be below the swing. Swing is nothing but bottom of the W pattern. Here your stop loss, here your entry, or at the retest your entry should be here. You can observe this double bottom pattern in the live market. Now let's take an example from the chart itself. If I open the chart, see, I already shortlisted for you. As I am doing always. See, here market contains some selling pressure, right? Selling comes, then what happened is market took support here, move upside, took support here, move upside. That means it is W pattern, right? Double bottom pattern. So whenever market, as per definition, whenever market break this neckline, this is the neckline. Whenever market break this neckline, we need to enter. One approach is enter here. What I am doing is I am always drawing the trend line as well. If I draw trend line, then what will happen? If below trend line, if I found the double bottom pattern, then I will directly enter at trend line plus double bottom pattern. So as I am always saying, I got two confirmation, right? And neckline breakout as well, means three confirmation is double bottom pattern. It took support, like first confirmation is trend line breakout, trend line. Second confirmation is it is at support zone, means this is the support, this is the support. And third one is double bottom pattern. If I have this much confirmation, then why I will hesitate to trade, right? I always trade with the multiple confirmation. So I will make entry here, I will put stop loss here, and what is my target? This is my first target. First target is this one, my second target is this one, and third target is whatever the resistance I have ahead. What I will do, I will book partial profit here. Partial in the sense, if I have the 50 quantity, I will book 25 quantity here, and or 25 quantity here, or if I got the enough profit, then I will exit whatever the target I have expecting in my mind as per your risk reward ratios. Always maintain your risk reward ratios and then trade. This is the example of double bottom pattern. Now when it will be work, like in which time frame it will work very best for the intraday. I'm talking about the intraday. Okay, in whole course, whatever the price action I am taking, mostly my focus is the intraday, but it is directly applicable for the long-term investment as well. But for the long-term investment, you need to check more than 15 minutes or 30 minutes or 1 day candle frame for the long term. For the long term, I am personally checking in the 1 day and 1 week candlestick, but mostly I am focusing on the 1 day. It will also work in any kind of any kind of time frame. But for the intraday, if you are a trader, and most of the trader are the intraday trader, So based on that, it will work very good at 1 minute. Yes, 1 minute. It will work at 5 minutes, but it's really hard to get double bottom pattern to in the 5-minute chart. So I am personally going for the 1 minute candle frame with confirmation of the retest or trendline breakout or support zone. If this confirmation I have, then I will directly go for the 1 minute. That's why I am again and again telling you, always be master with the one smaller time frame and one bigger time frame. So I am pretty much comfortable with the 1 minute and 10 minute as well as 5 minute also. So it's on you which time frame you can choose. If it's 5 minute and if you say the double bottom pattern in the 5 minute, you can enter here. But you should be backtest your methodology multiple times. Again, one more example here. See, if you tell me if you ask me, this is also double bottom pattern, right? I will enter it here, or as a subset, what I will do, I will enter at this swing. This swing I will enter, right? This is the support because market move this one, not able to break this support area. If I mark the correctly, market is not able to break the support area. When your market touches this, market got buying pressure, and this time market created this first swing and second swing. So if when market breaking the second swing, I'm making entry here, and I made it. That's why I'm telling you, this is the double bottom pattern in the live chart. I also shared this chart with some of our students or some of my students. Hope you got the double bottom pattern in detail. If you have any confusion, doubt, feel free to ask me in the comment section. See you in the next video. Thank you so much. In the last video, we have discussed about the double bottom pattern, which is look like W, and which is a sign of bullishness in the market. Now we are going to see the exact opposite pattern, which is look like M, which is also called as double top pattern. Why it is called as double top pattern? Because it just look like double tops, which is just look like M pattern, and which is the sign of bearishness in the market. Okay, bearishness in the market. Now what this pattern does, whenever we can see this type of pattern, it represents the selling in the market. If you see the syntax here, moreover, we can see the double top pattern at the top level or at the resistance level, just like this one only. Whenever we can see the double top pattern plus rejection from the resistance level, then it's a confirmed trade, or with the confirmation trade. We can trade with the confirmation. Now if you observe here, market move upside, face resistance at first time, move downside because someone sold quantity here. Again market move upside, again face resistance. Now this time resistance will be more powerful, so that it broke the support or it break the neckline and it will move downside. Again same, we can trade at this same logic, whatever we logic followed for the double bottom pattern. Let's take an initial examples here with our simple dashboards. Now if you observe, this is the resistance zone. My first time market will face resistance here, it will move down, it will face resistance here. So most of the people, buyers are trapping here, but because most of the people will try buy here, but because of its resistance zone, if market move downside and break this one, that means we need to make an entry at this swing, right? At this swing. So your entry point should be here and your stop loss should be above the resistance area. Now again another approach is, this is the resistance, market face the resistance, break this one, wait for the retest and break down, or wait for the retest or at least some swing created by market and then enter. That is the confirmed trade. As I am always saying, because of I am very comfortable with this type of swing, I will make entry at this one, because I know some resistance or strong resistance by using open interest data or just by past history. For example, the round figure level is 40,000 are here, and if I check the double bottom pattern here, that means high chances that I can make an entry here. But as a beginner, I am not suggesting you to make an entry at the neckline breakout. No, what you need to do, once you find out the double bottom pattern, just wait for one pullback, add the pullback, and again if it fall with some price action, then make an entry here and put stop loss above this swing or above this swing. That's the whole summary of the double top pattern. Hope you got what is the double top pattern. Just look like this one. What you need to do, after breakout, after retest, I will make an entry at this position, and this is the very safe entry. I will put stop loss here, or as a safe side, if I have the risk capacity, I will put stop loss here. Now let's take an example from chart itself. If you see, this is the double bottom pattern. Yes, it's not that much clear. Market move upside, took a support here, move upside, took a resistance here. This is the strong resistance area which I am marking here. Now whenever market moving downside, let's take an example here. Market opened actually at the 2nd November, market opened here in itself flat, and market move upside, create this double top pattern. It's not like market moved from downside to upside. At 2nd November, if you check the date here, at the 2nd November, market opened at this candle, moved upside, created the double bottom pattern. So where is my entry point? My entry point is at this zone. Like my entry at this one, my stop loss is above this one. So there are, again, if I am proficient enough, then I will make entry at this position. Or what I will do, as a beginner, what you need to do is, once market break this one, always wait for one pullback. This is the pullback, and you can enter at this position and put stop loss below this one, above this one, here or here. And if you observe, and if you hold it for multiple times, or if you hold for for a long time, you will get enough rally from, if I measure in the amount, 39,800 to 39,590, means 39,600, which is almost 200 points rally, which is more than enough for our targets. That is the whole summary for the double bottom pattern. Hope you got my point and you are learning something new here. And the goal of these price actions to restrict our losses, as I am always saying from the first video. So without confirmation, multiple confirmation, do not trade. What is the multiple confirmation here? Market is facing resistance. Second confirmation is breaking the swing, and or what is the retest? This is also retest. Breaking the swing, pull back. If I mark correctly, breaking the swing, pull back, and again breaking. So I will make entry here, put stop loss here or somewhere around here. That's my entry point. Now in which time frame it will work? For the intraday, it will work 1 minute and 5 minutes, the best time frame for the working for the double top pattern. For the swing trading or for the long term trading, you can always check in the 1 day time frame. 10 minute and 15 minutes are also there, but 10 minute and 15 minute will confuse you. So it's better to look into 1 minute, 3 minute or 5 minute in the lower time frames. For swing trading, check the 1 minute. Hope you understand this video. If you have any doubt, feel free to ask me. Thank you so much. Hello everyone. In this video, we are going to discuss about bull flag pattern. Bull flag pattern is representing the bullishness in the market, or let's say buying in the market. Okay, buying in the market. Now if you see the price action, the main and most important role is played by the trend line. Trend in the sense the previous trend. If you check the syntax here, what are the syntax? Suppose market moved upside. After moving the upside, market will go to consolidation phase. Consolidation phase is nothing but, in simple word, it's a sideways phase. After sideways, it will again give the breakout and again will move upside. That's why it's a bull flag pattern. Why it is called as flag? If you see the formation of this price action, in the whole formation, you will see the pole, you will see the flag, and again pole. Now you can ask me why this is the pole, why this pole is forming, and what is the purpose of this? In this bull and flag pattern, suppose if you see this trend and if you see this pole size, always remember, whenever market will give the breakout at flag, the target must be same as pole size. Means suppose pole size is like this one, that means target should be like same size. So this is also pole, but this pole is also called as target pole, and this is also called as trend pole, or let's say a simple pole. But the size of this pole and size of this target pole should be same. So you can expect the same movement after giving the breakout of bull flag pattern. Now let's take a simple example here. If you see here, this is a flag, this is the flag, this is the pole, and the same size, we can expect the same target here. Now where to put stop loss? In my point of view, I am always putting stop loss at the swing of this flag, last swing of this flag. And when to take an entry, we can take an entry at this swing or this swing, but personally I am taking entry at this swing, which is more safer than any other entry. Let's take an example from the chart itself. Just a minute, I am quickly changing to the chart. Just a minute. Now if you see the chart here, it requires lots of observation. Again I am telling you. Now if you see the chart, we can see the bull flag pattern, but now I am pretty sure you are not able to find out, but I will mark it for you. Suppose now this is the double bottom pattern, right? So what is the bull flag here? Now if you check, if you draw the trend line from here, like suppose if you draw one trend line from here and trend line from here, let's take a trend line itself. Just a minute, so that you will clearly able to understand the market behavior. If you draw like this one, and if you draw the bottom one like this one, then you will get to know that one, this is the bull and flag pattern. What is the pole? I can draw pole from here to here. The reason why I am drawing pole from here to here is, just a minute, I will draw like this one, I will draw like this one. The reason is this is already double bottom pattern, so I am drawing from the last swing. Last swing is nothing but, just a minute, last swing is nothing but this swing, so I am marking from it. So what is our target? I just copy paste, I will just recreate the same pole, copy paste, I will recreate the same pole, and I will place this pole on the chart like this one. If I place this one, if you see, I am getting the exact target just like a pole one, right? Just like a pole one. Whatever the pole size I am getting means indirectly saying this is the pole, this is the flag, and this one is the target pole. So if you observe here, the size is almost same, or we can say that we achieved our target by using the bull and flag pole, bull flag pattern. Now I can put stop loss, we can put stop loss below this one, here the stop loss. And what is the best entry point? As I suggested earlier, after breaking this one, either this is your entry point or this is your entry point. Instead of saying this one, I'm always preferring this one, because when your market break this last swing, the bigger swing, high probability that whoever sold here or whoever sold here, their stop loss is here, their stop loss is here. If I see market in terms of buying and selling, that's why more buying will come and again market will move upside. That's why it is creating the same pole size like this one in the bull and flag pattern. Hope this pattern is clear for you. This is very simple pattern, but observing this pattern is very, very difficult. It requires the development in the analytics and observation skill. You can develop it easily, but you need to give the time to the market. Now the last question is, in which time frame it will be better? For trading, I am preferring, like, this pattern will be good in 1 minute, 5 minute for the intraday. Intraday is nothing but day trading. And for the swing trading, I will go for 10 minute or 15 minute or even 1 day is also fine for the swing trading. Whenever I saw this type of pattern in the 5 minute or 10 minute, then it's a confirmation of bull and flag pattern, and whenever market will exit from this flag, it will move upside. Again, the question is, what is the successful chance of this pattern? Successful in the sense where we can see, suppose if I telling you, if I am telling you, suppose let go for our main dashboard. See, this is the resistance line. If this is the resistance line and market is in consolidation phase at resistance, and if market break this resistance line, then again high chances that market will move consolidation phase. And whenever after breaking the resistance and if market create this flag pattern, then there is a high probability that it will again move upside and give the good results. So whenever you see this pattern, just like this pole at the resistance breakout, then you can make an entry at this position, and this is the safer side. Whenever you need to find out this pattern, you can find out the pattern above the resistance line, so it's easier for you to trade instead of trading the whole pole area, because it's risky in the trading in the running market. Just wait for the market get stable. After stabilizing the market, just make an limit order to this position, like this area, and enter here, put stop loss the last swing, and expect the target minimum of the pole size. This is the whole summary of the bull flag pattern which I am personally following, and the winning ratio is more in the bull flag pattern. But we cannot observe this bull flag pattern in day-to-day trading. Day-to-day trading in the sense in the everyday. But you can find out within a week or whatever the market you are following, like index market or the stock option market. Now in the index market you can find out, but whenever you will find out above the resistance and pole is starting from the resistance, then do not hesitate to trade. Directly go to trade. But again, it's your choice, it's your profit, your loss, and your risk. So before investing anything, you need to think twice, observe the market, study yourself, don't believe on anyone, observe the market, and then only trade. Okay, hope you got my point. See you in the next video. Thank you so much. In the last video, we have discussed about the bull and flag pattern. The bull flag pattern is look like this one, and this is a sign of buying in the market. Now in this video we are discussing about the exact opposite pattern, which is called as bear flag pattern. The bear flag pattern is representing the selling in the market, or let's say bearishness in the market. Now let's check the syntax here. If you check the syntax below, the pole is nothing but the negative trend or negative trend line. This is the flag, same as bull flag pattern, and again the this another pole is target pole. This is no difference between bull flag and bear flag except the direction. Both will work as same previous one, like both are same. Now let's take an example on the chart itself. Now if I go to the chart, just a minute, if I go to the chart here, then you can see the bull flag pattern. I am taking a pause for 3 to 5 seconds. Now you can consider in mind what is the bull flag pattern here and where you are seeing the bull and flag pattern. Okay, now I am marking the bull and flag pattern. See here. If you check, this is already head and shoulder pattern, right? This is already head and shoulder pattern, and this is the neckline of head and shoulder. After neckline, market break this one to this one. So as per my experience, I will mark the pole from here to here. Again I will mark the flag like this one. Now if you observe here, this is the pole, this is the flag, and I will just copy paste the pole for the target line. If I place this here, then my target is here. So let's again check the example. This one is the pole or trend line. This is the target pole, and this is the flag. Here is my entry point. My entry point is this one. Here is my entry point. My target point is, this is my first target, and my stop loss is above this swing. This is the whole summary of bull and flag pattern. Hope you understood the, I mean to say is bear and flag pattern. Hope you understood the bear and flag pattern. Again, the same time frame like bull and flag. It will work best in the 1 minute and 5 minute for the intraday trading. Now, let's take another example. If you check here, this one is the pole size, but after the pole it also created the flag, but market not able to cross this flag. That means it is not continuing the selling selling trade. So we not make any entry at this position because our entry point is not got activated. If you sell at this flag zone, then it's dangerous for you. This bear and flag or bull and flag is helpful for those who missed the exact entry point, or let's say support or resistance breakout entry point. So this will help you to make entry late but the confirmation of the entry. Now let's take an example here. This type of pattern will see at the time of support breakout. If this is the support, if market break this support, it will go to consolidation and again will move downside. Then this is the flag, this is the target pole, and this is the our main trend line or main pole. It will, whenever you can see at the support zone, it will be great. And we can see this type of pattern at resistance zone itself. Resistance zone, how? When market move upside and when lots of selling pressure will come. When lots of selling pressure will come, if the resistance area is bigger one, like suppose if market is running all time high, then we can see this type of patterns. Market will fall like this one, go to consolidation and again fall like this one. Then we can see at the resistance level. But most probably as a beginner, you can go for the support area. Whenever you can see the breakout at support, and if you miss the entry at this pole area after breakout at the breakout of support, then just wait for the flag and make an entry at the breakout of the flag. Nothing change as a bull flag pattern. Bear flag and bull flag. If you understand the bull flag, then definitely you will understand the bear flag pattern itself. Hope you got my point. See you in the next video. Thank you so much. In this video, we are going to discuss about falling wedge pattern. Falling wedge pattern is the trap for the sellers. Don't go for the name. In the name contains the falling. It does not mean that market will fall. It is the trap for the bears so that more upside will come. If you check the syntax here and here, if you check this syntax is saying in the market is uptrend, and if you see the falling wedge, it will again move to the uptrend. This is also correct, but indirectly this syntax is telling the flag and pole pattern, right? But here we are going to discuss about falling wedge pattern. So do not consider this syntax. Then you can ask me why you are included this syntax in the PPT, because most of the people confusing between the flag and pole and the falling wedge. Now falling wedge look like this one. It's all depend on the trend line. If you draw the trend line is like this one and the bottom trend line is like this one, what it means is bottom trend line and top trend line, the difference getting the minimal and market will go to consolidation phase, and after that it will give the breakout at upside. After giving the breakout at upside, then most of the sellers, like who sold here are getting trapped, and again buying will come. That's why it's called as falling wedge pattern. Now most of the time this pattern we can see at the time of support zone. Suppose this is the support area. Let's go to our dashboard. See, suppose this is the support area. Now if market created this type of pattern, then there is a high chances that market will break this one and move upside. Now how to make an entry here? If you check this example, like this example, after breaking out this one, there are again two ways. If your pattern look like this one, After breaking out this one, wait for the retest of the trend line, and after retest enter here. And second case is, suppose the falling wedge look like this one, market is moving like this one. After breaking out this one, make entry here. Why entry here? Check this swing, make entry at this swing. Like if you check the example here, this is the swing, right? Make a entry here and put stop loss below the last swing. This is your stop loss. Now what is the target for this falling wedge? Check the highest swing of the falling wedge, like from where trend line start. This is the first target, and there is high chances that if market break this trend line, then again buying will come, because whoever sold here, their stop loss must be buying at the upper side, so their stop loss should be hit, and because of their stop loss will hit, again more buying will come. This is the meaning of the falling wedge pattern. Now let's take an example from the chart itself. Now here, if you look at the chart, I already marked the falling wedge pattern for you. This is the support area. This is the support area. Now if you look at the pattern, this is the resistance area. Selling comes from the resistance area, and if you look, the market is look like this one, but market is moving in the consolidation phase, but the size is getting minimal at the type of the mouth in the sense it just look like a funnel, right? Funnel, and at the bottom the size of the funnel is smaller, and at giving, most of the time it need to give breakout at this level, but in this our case, market give breakout at this zone, market got retest and again move upside. Then what is my entry point? As per first logic, my entry point is this one, my stop loss is at below this trend line, like here or here. But you again, as per second entry point, your entry point must be here, this swing, because market broken this swing. Sorry, again I can mark broken this swing. So this is your entry point, this is your stop loss point. What is the target? Your first target is this one, second target is this one, and third target, whatever, if market break this one, then whatever the target expecting, your third target is above this line one. That is the full falling wedge pattern. Hope you got this pattern. Now which time frame it will work best? Within 1 minute and within 5 minutes it will work best for the intraday. Within 1 minute, same logic will apply. You can entry at this position. Within 5 minutes also same logic will apply. Entry at this swing, or entry at the after retest you can enter at this swing. Okay, now if you look this pattern, if you are the swing trader, and if you look this pattern at the 1 day time frame, then it will work very, very good, because of its swing, whoever sold here, buying will come, and when market will exit from this trend line, high chances that market will move upside. Again, there is one more method for the confirmation of this breakout is Fibonacci retracement. That I can tell you how we can combine the multiple price action with the Fibonacci level, so that you can trade according to the Fibonacci level with the confirmation of multiple support, trend lines and Fibonacci level, so you can enter at the perfect trade. Okay, this is all for the falling wedge pattern. See you in the next video with rising wedge pattern. Thank you so much. In this video we are going to discuss about rising wedge pattern. Rising wedge pattern is the indication of the selling in the market. Why? Because whenever market is in the uptrend, if we see the rising wedge pattern, then there is a high probability that market will move downside. Now let's take an example here. The market, suppose this is your trend line and this is your downwards trend line. Means if market is moving upside but it's creating this type of pattern, and the size of this mouth, or say end of this both trend line is minimal, and market is moving like this one, and If market break this trend line, then high probability that market will start moving at the downside. Now how to make an entry? If you check the example here, after the trend line breakout, if you check the syntax here, after the trend line breakout, you can wait for the retest, and after the retest you can enter here. Or again, the second chance is just mark this last swing. Now here, this last swing, this is the swing, enter at this position. In this syntax, enter at this position. Your stop loss must be above this one. Here your stop loss is here, or this swing is also fine. If you enter here, then your first target is this second swing, third target is another swing. If you take a syntax as an example, entry point is here, first target, because entry point and this is almost the same. First target is this one, second target is this one. This one in this is whatever the swing created by the market. This is the trap for the buyers. If market is moving upside from last couple of days or 2 or 3 days, then there is high probability that we will see rising wedge pattern. We can see rising wedge pattern at the top of the market, like if market is all-time high or there is a continuous buying in the market from last couple of days. Now let's take an example from the chart itself. If I show you the chart, if you see this one, market is moving upside. Now trend line is look like this one. Now you can ask me, why you drawn trend line like this one? There is a high probability that the trend line is like this one, right? Why I not marked the trend line like this one? This trend line is also correct, and this is also rising wedge pattern. If I mark these swings, then if you check here, market is moving in the consolidation phase only. It is not moving upside properly, because if you see the swings, it's just moving in the moving upside, coming down, moving upside, coming down at the same level. So it's a consolidation phase, and once it gives a breakout, it's retest and again down. So my entry point is at this position. Entry at this position or at this position is also fine. In my point of view, if you get some experience, then enter here. If you are a beginner, then you can enter at the retest. Retest in the sense breakout, retest, and again breakout. So your entry point is here. Your stop loss at above this swing, or the best stop loss is above this swing. And what is the target? Your first target is this one. Second target is this swing. Let's see, this swing and this swing is almost same. So this swing. And third target is whatever the swing, the last swing created by the market. Hope you got what is meant by the rising wedge. Why it is called as rising wedge? Because market is at the rising level. That's why it is called as the rising wedge pattern. Rising wedge pattern is helpful to change our mindset towards the downside whenever it give breakout at the downside, down trend line. If you check from the last 2 or 3 days, market is just moving upside. So I saw this rising wedge pattern, and I will make an entry here. In fact, when this happened, at that time I already made entry here. That's why it's easier for me to show you this type of pattern, and I shortlisted this type of pattern because I have the experience with this at that day, like 6th, I think it's at the 6th October. I also updated this chart in my Facebook page called as Bank Nifty Learning. Also, I updated the same price action in my Telegram channel on the live Indian market. This Telegram channel is helpful for the Indian people who is getting the update in the live market. So the same channel name, the Bank Nifty Learning. Now the question is, where we can see this type of pattern, like when we can go for this type of pattern. It will work best in 1 minute and 5 minutes for the intraday, and for if you are the swing trader, then prefer the 1 day or more than 1 day. Both are fine, but I am personally preferring for the intraday 1 minute and 5 minutes. Whenever I saw this pattern, I will make entry at the breakout and the retest. You just need to practice each and every price action and observe each and every price action at least for 1, 2, or I can say 3 months. Then only you are able to understand the logic behind it. See, in terms of buying, like for example, whoever bought here, 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 their stop loss is at these positions, right? Their stop loss is at these positions. That's why their stop loss got hitting and market moving downside, and downside will come. That's the logic behind the rising wedge pattern. Hope you got my point. You just need to observe by yourself. Thank you so much. See you in the next video. In this video, we are going to discuss about cup and handle pattern. The reason why this price action called as cup and handle, because if you look at the syntax here, you will get to know that this price action is just look like cup and handle. Now how this price action is forming? See, suppose if you have a resistance here, first time selling market touch this resistance and selling will happen. Then market will move slowly and again touch same resistance, but second time again selling will happen and market will just drop for some time. But this time market will not break this last swing, so it will create the higher low formation and move upside only again. After moving the upside, it will break at this resistance, and if you look at this type of pattern, then this type of pattern called as cup and handle. The another visualization is selling will start here, market will touch here, again selling will start here, market will move downside like this one. This trend, if you dot this trend line, then also this is the cup and handle pattern, and once market exits from this one, then we can say that it's a clear-cut formation of cup and handle pattern. Now, what is the sign of cup? What cup and handle represent? The cup and handle represent mostly it represent the upside movement in the market. It just need to break out the resistance. Now, again, second case is, which I'm not going to suggest you to trade in that case because it's a risky one. Whenever I'm following this one, most of the time my winning ratio is very less. But the finding out cup and handle pattern itself is the hard thing. Now let's take another case. If selling will happen here, again market will touch here, again selling will happen here. Now this time what will happen is, if this resistance is very bigger resistance or very stronger resistance, when it's stronger resistance, most of the time if market is running all time high and we are near about the round figure level like 40,000, 50,000 level or 39,000, something like that. So most of the time it will drop from the here, like it will drop from the here. When it drops, it will drop very forcefully. The reason is, whoever bought here, here stop loss is here, their stop loss must be here. So what will happen is, if some selling will happen, then market will start dropping from here. If you take example from this case, then market will start drop from this case, from this point. But I'm not suggesting to go for the downside trade in this cup and handle pattern because it's a very risky as per my personal experience. So what you need to do is, let's consider an example here. Suppose this is your resistance line. First time selling happened here, market created this type of pattern. Again second time selling will happen here. So this time what will happen is, market will break this resistance. After breaking the resistance, you should not trade in this candle, or your entry must not be here. No, it's completely incorrect. What you need to do, you just need to wait for the retest, and after the retest you need to enter. Like what is your entry point? This is your entry point and your stop loss must be below this swing. This is the correct approach to trade with the cup and handle pattern. Otherwise what will happen is, market will confuse you. Market will break this, but from this only market will start falling at the downside moment because of the strong resistance. So always wait for the retest. After retest, always enter at retest breakout. This is the good way to trade with the cup and handle pattern. Now let's take an example. From the chart, it's really harder to find out the cup and handle pattern, and I not seen cup and handle pattern whatever the stock I am preferring to show you in the whole course. but I'm promising you that I will introduce the real-time cup and handle pattern formation when I see in the real life market from today onwards. Because now when I'm recording this video, I'm not find, or let's say it is time consuming to find the cup and handle pattern. Yes, I found one cup and handle pattern, but that's for the dropping, and it will drop like just sideways only. So it's not good, it will confuse you. So just for your better understanding, I will first find out, I will mark it, I will record the live trade, and then only I will update in the course, because I'm always updating my course whenever I am seeing the good videos or good synergy from that trade. Okay, so now let's consider from this pictorial representation only. If you observe here, market move upside, this is the resistance area, right? Resistance area. Why? Selling happened, market move upside, again selling happened, but this time market will not able to break the low, market creating the higher low formation, and this time market break, retested it. Retest indices, because of it's a weekly chart. If you observe here, this weekly chart, retest is smaller, so retest is also fine. And another thing is, if you find after breakout, if you find some swing, it's not like that retest in the sense retest will always touch the line. No, may not be, or maybe. What you need to do is, after breakout, I'm not talking about cup and handle, in every resistance or every support, after breakout, if market need to drop for some time, and if market created this type of swing, then this swing breakout is also fine. It's not like market need to touch here and only move. Sometimes what will happen, when breakout happen, market will move very faster, and it will just take some pause. Market will move faster, it will take some pause, and again will move upside. So you need to enter at previous swing. That's the correct entry point for the avoiding the false breakout as well, which we are covering how to avoid false breakout in the false breakout videos. But for now, you can just observe here and learn from this cup and handle pattern. If you observe here, this is the resistance line, market created cup, market created handle, and market broken this. Now what is the target as discussed in this? Just mark the depth of the cup. Whatever the depth of the cup, after the breakout, just copy that line. That is your full target. At least minimum target you can consider. Your stop loss must be below this one, so that you will get safer entry at the cup and handle pattern. For observing, analyzing cup and handle pattern will take too much time, because for me as a beginner, when I was beginner, then it was very confusing me, like find out the cup and handle pattern in the live market. But it's not every day you can find out cup and handle pattern, just like double bottom or double top or head and shoulder. Within 1 month you will find at least 1 time or 2 times, not more than that, or maybe if you are lucky enough, then 3 times. But it's very forming this cup and handle pattern will take time. It's not a day-to-day guarantee that it will appear in everyday trading cycle. So hope you understood this cup and handle pattern. If you have any doubt, feel free to ask me. See you in the next video. Thank you so much. In this video, we are going to discuss about the most famous price action called as inside bar price action. The inside bar price action is also one of my most favorite price action. The reason is the winning ratio by using this price action is much better as compared to any other. It does not mean that any other price action is not good. That price action is also good, but for day-to-day trading, inside bar will help you more. Now, what is the inside bar? Just look at 2 examples. This is the first example, this is the second example. Okay, if you see the first example, this is not an inside bar. Okay, and this is the inside bar. Now what is meant by inside bar? We need to check the first big candle. Okay, the first big candle, either it is bearish or either it is bullish, doesn't matter. Now if any other candle forming opening and closing in between high and low of the bigger candle, then we can say that this is the formation of inside bar candle. Now this candle is called as mother candle, and this candle is called as baby candles, or let's say child candles. Okay, child candles. Now how to trade? It's really simple. If any candle is breaking its low or breaking its high, at that position you need to make an entry, put stop loss, suppose make an entry at downside, put stop loss above this one, or vice versa. Means if you entered at upside entry here, then put stop loss at below of this mother candle. It's so much simple. Let's consider another example by using the PPT. Let's take why it's not an inside bar. If you check here, this candle is high of this candle is this one, and low of this candle is mother candle is this one, but the next candle is just a crossing. Either it is open or closed, doesn't matter, but it's breaking the high of the mother candle. That's why next candle, because of this candle, we can't consider this candle as a inside bar candle. The next candle should be inside the mother candle, just like this one inside the mother candle. It should not be above this. Like if I draw this one like like this one, if you find another candle like this one, then it's not an inside bar candle. Inside bar candle is, it should be inside the mother candle. That's the whole logic behind the inside bar. Either it is red, either it is green, doesn't matter. Whenever it breaks at upside or downside, you should make entry at that trend or at that position. Hope this is inside bar is clear for you. Now let's take a chart example here. Okay, now before taking the chart, I want to confirm you that if you remember same logic, almost same logic we talked about bullish engulfing, right? Bullish engulfing or bearish engulfing, right? If you remember this one, if you not, then please go and watch that video again. But in bullish engulfing and bearish engulfing, the most important part played by the trend. If trend is negative and if you find out the bearish engulfing like this one, then you can make an entry here and it's a sign of trend reversal. But what inside bar is telling? Inside bar is telling the trend. Like if you see any candlestick like this one and any side breakout represent that, any side breakout will represent that trend will be forming soon. That's the whole summary of inside bar candlestick. Now let's take an example from the live chart itself. Just let me open the live chart. Now if you see here, see what is the inside bar candle. If you mark high and low of this candle, but this is the crossing, so this is the inside bar. No, it's completely incorrect. Now what is the inside bar candle? If you look at this one, mark the high, mark the low. Now this candle is crossing. No, it's reversing. Just some some small point gap is here at the opening, but still it's not crossing the high of this candle, so it's an inside bar candle. And if you look at this one, this candle is broken this one, and we get this much reversal, like from the 39,850 to almost 39,400. It's a 400 point rally, guys. It's a 400 point rally within a single candle. So this is the importance of inside bar candle. Whenever inside bar candle will give the good breakout, then it will give very good profit or very good trend. Now again, what is the more confirmation of the inside bar candle? Suppose this is the inside bar candle. Yes, obviously this is the inside bar candle. Let's take a case here. If this is the inside bar candle, if I mark it clearly, then we can check that this is the inside bar candlestick. Maybe people will enter here and their stop loss may hit, but most of the time it will give the winning ratio of this inside bar candle is more. Now one more thing is, if suppose this is the inside bar candle, and more the candle forming inside this one, more the candle, better the trend will form after the breakout. If one or two candles, then also trend is good. But if market is spending lot of time within this mother candle range, then whenever it will break out, it will give very good fall or very good upside momentum. Now let's take another example here. See, mark high, mark high of the candle and low of the candle. The high, low, put stop loss here. This is the mother candle, this is the child candle, or let's say baby candle. Okay, now whenever market broken, this one make an entry here, put stop loss below this mother candle, and you can expect the good amount of rally in the market. So again, the last question is, in which time frame it will work best? In my point of view, as per my personal experience, I got more winning ratio. I am telling more winning ratio. What is the winning ratio? Is more profit in the 15-minute candle frame timestamp. If you saw, if you only follow inside bar, then also great. Inside bar with some support and resistors, then also there is a high chances that you will earn good amount of money. But yeah, you need to check 15-minute candle. Most of the traders, like which is trading in the multiple lots, like 1000 quantity to 2000 quantity, most of the time they are preferring 10-minute or 15-minute candle frame. And for the particular price action like inside bar, 15-minute will work very best. No need to check 5-minute. 1 minute, 5 minute will not give that much good result, but 15-minute and 10-minute will give. But instead of 10-minute, I am personally suggesting you to observe the market in 15-minute, observe this inside bar for a couple of days, then only you are able to comfortable with the inside bar candlestick, and then only you are able to trade with this inside bar. Hope you got my point. Okay, and hope its inside bar candle frame is clear for you. If it's not clear, then again rewatch the video, again observe the market. But this is the very good price action for the beginners and for the advanced trader as well. Hope you understood this video. If you have any doubt, just feel free to ask me in the comment section. Thank you so much. In this video, we are discussing about most common pattern which we are seeing in day-to-day trading is symmetrical triangle pattern. Symmetrical triangle pattern. Okay, this symmetrical triangle pattern is confusing for the beginners. Why? Because at the beginning stages we don't know where is market moving and where it will give the breakout. If you look at the pattern here, it contains the upper side trend line and downside trend line as well. Now maybe resistance is here, support is here. Now what will happen is, we don't know where it will break. Either it will break upside or either it will break downside. Okay, but for this type, for trading in this type of pattern, your trading psychology will help most as compared to any other techniques. Now let's take an example for the symmetrical triangle pattern. What will happen is, whenever symmetrical triangle will form, what will happen is, suppose market will move in some patterns like this one, but market will slowly will go to some consolidation phase like this one. And if someone draw the trend line from the top to bottom, then trend line is look like this one only. Now what will happen, at some stage market will exit from at the upper side or at the downside. Now what is the logic here? If market will break at any side, that trend will go. Now what will happen if market break this one? How we need to trade? Just wait for the retest. After retest, again if market fall, then make an entry at this position. This is the first case. What is the second case? Suppose you have this much. This is the symmetrical triangle pattern. Now what you need to do? You just need to place the limit order already. If and only if your market sentiment is negative side. If market sentiment is positive side, then make an entry at the last swing. That's why I'm telling you, for this price action, symmetrical triangle price action, your market sentiment will help you a lot. If you put it, then whenever will market exit from this one, it will directly go falling with forcefully in the sense very fast. So if you look at the example from the chart here, let's take an example from the chart here. See, I already mark the levels for you. This is the symmetrical triangle. Why? Because I marked swing, and after some time market just gone for the consolidation phase only. After consolidation, it broken the trend line at the downside. What is the second case? If it broken the upside, then its upside movement will start. But for this scenario, it's broken the downside. Now what is the entry point here? The entry point is in the first case broken, wait for the retest. After retest, or let's say in another word, the swing, market created the swing. Now this is your entry point, and your stop loss must be above here. So if you enter at this position, which is almost 39,650, you will get profit is almost 39,520, which we can consider almost 100 point profit. But if you have market sentiment, and if you have good market sentiment analysis skill, then you can enter at this position and your stop loss must be above this trend line. So it's very safe, and you will get more rally like 39,800 to almost 39,550 rupees, or let's say 550 rupees. It's almost more than 300 rupees. 300, instead of saying rupees, we can say that 300 points, more than 300 points the rally we can see. But because of the developing the market sentiment skill, it requires lot of effort, lot of time. It's nothing, no any lecture video or nothing will help you out. You just need to take time to observe the market each and every day. Then only you are able to understand the sentiment in the market. This is the best case to trade in the symmetrical triangle, and always trade with the retest as well. If you are a small trader and beginner, wait for the retest and then only trade. Before that, do not trade. I am always waiting for the retest, but whenever I am seeing the symmetrical triangle, what I will do, in this case, it's not like, I also don't know at the time, I also don't know that market will move downside. The reason is, if you check here, what is forming? The trend is higher high formation, like trend is higher high formation. That means most of the chances that market will move upside. So what I will do, I will make, what is the last swing here? Last swing is like this one only. So what I will do at the upside, I will make limit order at 39,900. So market not seen 39,900, so I am not able to make an entry, and market move downside. It's better now. It's better because at least we saved our money by avoiding the wrong trades. Sometimes this is also happen, but no need to worry. This is the market. Market will always give the lots of opportunities. Now let's take second example. Market broke this one, took swing, again broke this one. But this time what happened is, if you enter at here and put stop loss at here, your stop loss will hit and again will market move downside. This is the failure case of the symmetrical triangle. That's why I am telling you, symmetrical triangle is the most confusing pattern I ever seen. But with the help of psychology, it will really help you to understand the symmetrical triangle pattern. If you look at this one is also symmetrical triangle pattern. For now I am checking 1 minute. Now if you look at this, market broken the trend line. At upside. Look at this, market broke trend line at upside, but within one candle it created the swing. This time your stop loss got hit. If you just a minute, I am zooming in for this type of pattern. What will happen is, market broken this trend line, took retest and again moving upside. But what happened is, because of this sudden movement within 1 minute, what will happen is, your call will get active and your stop loss may hit. It's completely fine, no need to worry. Now another entry point is, as discussed earlier, like suppose if market break this one, took support here and again breaking this one, enter at this one, put stop loss below somewhere around this one and make a entry. After making the entry, you will get enough money. This pattern is also, we can consider this pattern as the our ascending triangle pattern as well, because symmetrical is nothing but combination of ascending triangle as well as descending triangle. Suppose maybe this is the support, we can draw this line as a support line. This is also main point. I think I discussed the same pattern in the ascending triangle chart. Okay, hope you got what is meant by symmetrical triangle. The best scenario for the symmetrical triangle is this is the resistance, this is the support, and if you check this type of price action between support and resistance and market break at the peak of this one, then it's a best case to trade. If break this one, then it's not a best case to trade. The best case is peak trade out, peak trade, and below this or below the resistance and above the support, something like this one. This is the best case to trade. Now in which time frame it will work best? Within 1 minute, within 5 minutes, we need to, after breaking out, we need to wait for the retest and then breakout. But within 10 minutes and within 15 minutes, we need to wait for candle to close above the trend line. Suppose this is the trend line. This, if market broke this one, candle should be bullish candle and it should close above this one, just like candle look like this one. So that it's a after candle closing, just wait for entering at above high of this candle. This is the scenario for 10 minute and 15 minute candle frame. Just observe by yourself. If you have any doubt, then just ask me in the comment section. Hope you understand the whole concept and whole videos of the price action. See you in the next video. Thank you so much. In this video, we are going to discuss about moving averages and some theory behind the moving averages. So whenever you are using moving averages in the live market, you already know the some mathematical concepts and theory behind it. This is also important to cover the fundamental topic of the moving averages so that you can align with your study. Okay, so don't forget or don't skip this video. Now the first question is, what is the moving averages? Now if you see moving averages, whenever you apply moving averages, there are total two words like moving and average. Average, you already know what is meant by average. Now what is meant by moving? Suppose we are checking 1 minute time frame. Okay, 1 minute time frame, and our moving average value is 10. So what it means is, in the live market we can see the 10 1 minute candles frame, right? If moving average is equal to 10, then we need to check the 10 candles of each of 1 minute. Now how to calculate average? Each candlestick having its opening price and closing price, so need to record each candle closing price. So here our value is 10. So what we have now? 10 closing prices of moving averages, summation of 10 moving 10 candles, 1 minute candles, divided by how much numbers we are calculating? 10, because it's a formula for average, right? Divided by 10. So 10 closing price divided by 10 because total number of count. So that after calculating this much, we will get one value, and that value we are plotting into the line, plotting into the chart, and this chart will move like this one and it will create the line on chart. That's why it's called as moving averages. Now how to calculate moving averages? Suppose this is the first, second, up to this is the last candle. Now we are calculating 1 point and we are plotting 1 point here, okay, here. And what will happen when another 1 minute candle form here, which is the 11th one? So by default it will neglect, like we can forget this last candle and we can calculate from the 2 to 11, and again we can calculate the average for these closing prices and we can plot here. Again same thing will happen. If 12th candle will form, then we can neglect second and we can calculate from the third candle to the 12th candle. So on an average we are sliding, like we are moving the window upside, like forward. For example, this is the 1 to 10. Now this is the window. Now this window will shift further as candle will form like this one. Again this will shift further as candle move like this one. So whatever the calculation we are getting, we are plotting here. That's why we are getting, in the end we are getting one line. That's why it's called as moving averages. Hope this theory you got my point, and hope this theory is clear for you, right? Nothing serious. And how to plot it, no need to worry about it, because nowadays TradingView platform is already giving us the indicator called as moving average, and this moving average we can directly select, and that indicator will directly plot those values into the our live market. So nothing to worry if you don't know the theory behind it. I'm explaining you theory, just you can play around the theory, and so that you will better understand the market. Hope you got my point. See you in the next video with some technical terms. Thank you. In the last video, we have discussed about the theory of moving averages and how we are calculating the moving averages. Now, in this video, we are going to discuss about how to select the levels for the moving averages. What is meant by level? Like in the last video, I have discussed we are calculating moving averages is equal to 10, means we are getting the average of 10 candles from the 1 minute chart, right? I explained this example. But now question is time frame. It's a different story that I will tell you which time frame need to select or which time frame we can use. But how to select 10, like why we are selecting 10, or is there any other number? Because from the infinite numbers, which number we can select, that's the question, right? So for this question, there are multiple authors and there are multiple books. So with the help of that books, most of the authors are suggesting to use moving averages as 20, 50, 100 and 200 with the combinations of 5-minute chart, 10-minute chart, 1-day chart or 1-week chart. Now this 20 and 50 moving averages is applicable for the intraday. If you are checking for the long term, then at least check 100 and 200 moving averages. Now what it means by 20, 50, 100 and 200? These moving average values are playing most important and critical roles while analyzing the market. How? Because this 100, 200 or 50 will act as a support and resistance of the market, because we are plotting this based on the past history, right? And market is always known for repeating his past history. So if we plot the lines, then this line will act as a support or act as a resistance. Now for the intraday, these two are applicable. So how we are utilizing these moving averages? There are total 2 ways to utilizing. For analyzing the stock, analyzing the support and resistance, and second is to make an entry for the intraday, to make an entry for intraday or the delivery stages or positional trades. So how to make an entry? For the entry, there is one. For first, let's take a first example, analyzing. How to analyze? Just plot moving averages on the chart and check either it is above moving averages or below moving averages. If it's above moving averages and it's touching the moving averages like candle like this one, that means it will move upside or it is taking support of these moving averages, or we need to wait until it cross this moving average line, whatever the moving average you are chosen, like 50, 100 or 200. Now another strategy is crossover strategy. What is the crossover? In many or multiple YouTube videos you have seen that, suppose there is a line, suppose you plotted the moving average line which value of 50. Now again you can plot another line like this one, and suppose this value is 20. I intentionally crossing over. Suppose what is the logic behind the crossover moving average trade is, suppose if 20 moving average line is crossing the 50 line, that means in the market bullishness will come and you need to make entry here. Got it? Or vice versa. Suppose 20 moving average like this one and 50 moving average like this one, means again what it means this 20 and this is the 50. This 20 is crossing downside, then you need to make an entry for the bearishness or for the downtrend or put side. That's the theory behind the numbers of the moving averages. Now without wasting time, let's take an live example from the chart. Now this is the TradingView platform. Actually this is the broker platform, but the TradingView we already integrated, or let's say broker integrated TradingView into their platforms. So how to choose? Go to indicators, just type moving averages. Now you will get multiple moving averages. Multiple moving averages plays different rules. But now in this video, we are going to discuss about simple moving averages. Just click on moving averages. Right? If you click on moving averages, you will get one line here, right? If the blue line. Now select, go to setting. After setting, length 9. What is the ninth? The past 9 candles closing price will averaged. So we can change to 20 first, and we can click on OK. Now this line will adjust for the 20 candles of the 1 hour chart. We can choose any, but for now I am choosing the 1 hour just for explanation. Or suppose I am choosing the 5 minute as well. That's not an issue. Okay, this is the 5 minute moving average chart. How it is plotted, you already know. It will take last 25 minute candles closing prices and it will plot, and it will move like this one. Okay, now we need to add one more. Again type moving averages. I'm extremely sorry about the background noise. Okay, if you heard about some horn, or car horn or truck horns, I'm extremely sorry about that one. Just adjust for this video. Now go to this line, go to again setting, type it 50. If you want to change the color from the styles, you can change. I'm keeping as it is. Okay. Now if you look at it, the orange color line is 50 moving averages and blue color line is 20 moving averages, and I am checking 5 minute chart. So what is the logic behind this one? See, if this is the blue one is 20 minute and the orange one is 51. So if the blue line will cross the orange line, that means bullishness will come, and you need to entry at this position. Where? At this candle. You need to enter at this candle and put stop loss below the orange lines. That's the crossover strategy for making the entry only with the help of indicator. But again, the trick here is we are checking in the already happened market or offline market. Even if you check the line in the live market, you will get this line as it is. But the thing is, it's a late indicator in my point of view. Okay, in my point of view, maybe your point of view is different. But as a beginner, when I was started using this strategy, whenever I was trading, I got this strategy from the YouTube videos and from some books. And I thought, okay, it's very simple forward. What we need to do, we just need to check some crossovers like this one. Whenever crossover will happen, I will make entry. Otherwise, I will not make entry. I also done same thing. But this is the very late indicator, and most of the time, I faced the losses. That's why I am not using moving averages for the intraday. Then when I am using, this is my personal opinion. Okay. Before that one, let's plot the 100 and 200 moving averages as well. Moving averages. I will plot first. I will go to here. I will plot for the 100. Okay, and I will plot for the 200 as well. This is the standard values which mathematician comes here, or which researcher comes here. Now what I am doing is I am just checking first 20 and 50, like with the multiple time frames. Like for example, I will check for the 1 hour. If you check 1 hour, it will play very important role for analyzing the stock. What I am doing is, one day before I am checking with the 1 hour, like tomorrow. Before tomorrow I am checking, okay, today market crossed this blue line with the orange line. That means buying will happen in the market. So what is my view for the tomorrow? My view should be bullish in the market. So with the help of this one, if candle forms above this line and taking support of this line, that means unless and until market is above this line, my view is bullish one only. Or let's say candles is also above this line and candles is also not crossing the orange line. Unless this position, my view is bullish only, because market is taking support and moving upside, taking support, moving upside. But when market crossing this one, then I will not do unless and until this line cross this one. Once market again 20 moving average crossing, like blue line crossing the orange line downside, then I will change my view to the bearish view. Same thing I will check with the 1 day time frame. Okay, now if we can observe the bullishness in the bullishness in the market from this line, okay, from this line. But what happened is now candle is started trading below this line, so obviously some selling is happening. So what I am doing is I am just checking multiple time frames. If you want to invest something and if I want to analyzing the stock, then with the help of multiple time frames I am using that one. But for the intraday, I am personally preferring the price action, which we already covered in the previous videos and previous sections. I am checking the moving averages, so I will clear with my mind what to do tomorrow and what is the my market psychology behind what is the market psychology. It will really help. It really helping me to change my view or clear my mindset. Again, I am telling you, for the trading I am not using moving average. I am clearly using the higher high higher low formation or pure price actions, which is obviously with my experience. I am telling you, if you want, you can observe this moving averages by yourself and just let me know your feedback of the moving averages. Again, which time frame you can choose. You can choose more than 5 minutes, 10 minutes, 5 minutes and 10 minutes for the intraday. For the long term, you can choose 1 day and 1 week to analyzing the stock or analyzing the moving averages. Hope you got my point and hope this topic is clear for you. I can see you in the next video. Thank you so much. In this video, we are discussing about the another indicator called as VWap indicator. The long form of VWap is volume weighted average price indicator. Now, this indicator purely depends on the volume in the market and current price. So, this is the formula. I am pretty sure no need to worry about the formulas, but just for your understanding, I am explaining the formula in a short way. What is the price? Summation of price. Summation of price is nothing but, suppose if you selected a 1 minute candle frame, 1 minute candle chart, within that 1 minute candle, what is the high of the candle, what is the low of the candle, what is the closing price of the candle, and divided by 3, then you will get one price. Now what, and you can price it, you can put price here, like this price is this one. Now what is the volume for that 1 minute candle frame? What are the volume required? So that volume will come here. And what is the summation of value? Total volume in the market, that is the summation of value. If we divide, then we will get one price. So for each and every time frame, we are plotting that point and we are connecting that point, right? And we are forming the line in the market. So let's take an example here. What is the difference between moving averages line and VWap, both indicating the price, right? And formula is also different. So moving average representing the simple average of the latest prices, whatever the time frame we have selected. It does not affect volume in the market, or volume does not affect the moving averages. But VWap don't care about the past data. Moving average is helpful for analyzing the stock from the past history and need to check for the what is happening tomorrow. But VWap don't depend on the past history, right? Past history is not required for the VWap. VWap will always change day by day. So for the intraday, VWap will play a very important role, but not for the analysis of the stock or not for the long-term investment. In my point of view, go for the VWap if you are the intraday trader. Go for the moving averages. If you want to choose between these two, go for the moving averages for the delivery trades or positional trades. Now, the VWap is playing important role. Let's take an example here without wasting your time. Okay. Now consider an example here. This is the formula for the VWap which I have grabbed from the Google. Now I am closing this one. Okay. Now what we need to do is same thing. Go to indicators, go to VWap, type VWap, select VWap. Okay. Go to settings. If you go to setting, you will not get any numbers like 9, 100, 10, 20, 50, just like moving average, because VWap is depend on the time frame which you are selecting. Based on the time frame, it will automatically calculate based on the volumes. Now, if you observe here, how VWap playing the important role, I am selecting the 1 minute. VWap will play as a support and resistance line. If price is above VWap, then there is a high chances that it will move upside. And if you price below that VWap, then it is high chances that price is downside the VWap. Now, again, how to make an entry using VWap? It's really simple. I am personally using the VWap and I am telling you how to use how I am using the VWap. Now what I am doing is, with the help of price actions, I am using VWap. For example, I will draw the trend line here, right? And this blue line is nothing but VWap line. Now this is the trend line. Now I want to make an entry with the trend line, right? How to make an entry with trend line? See, instead of enter here, if VWap line is nearest one, there is a high chances that market will move upside and move downward. It will take resistance from here. So I am making order above this VWap line. If breakout is happening and price is above this one, then I will put price here, put stop loss, whatever as per price actions. Okay, as per price actions. This is the one scenario. What is the second scenario? Hope you got the first scenario. First scenario is nothing but trend line and price action. I am always combining price action with the VWap. Now what is the second scenario? If market broken this VWap, market touching down here, and again if market after pullback, market moving upside again breaking this one, then I am making a entry at here. This one is the best entry, and for this entry, where to put stop loss? Put stop loss below the VWap line. That's also fine. Okay, if you check here, market broken this one, right? If I mark is market broke this one, market move downside and market move upside. So what is our correct entry point? This one is your correct entry point. Put stop loss here, then you will get enough rally in the market. That's the whole summary of the VWap. VWap line is act as a support and resistance. As I said earlier, VWap will change as per date. VWap line start from here because this date start from this candle. So VWap will always change, but moving average will play important role for the past history based on the past data as well. If you check here, see, whenever market touch here, move up, down, touch here, down, touch here, down, touch here, down. But it's always better to enter in the market if suppose your entry point is this one. So instead of enter at here, if price is also above this one, always make, if you want safe entry, then choose price above this one, then also fine, and put stop loss here. I am always doing these things and I am getting the winning ratio is good only. It's not bad or not, we can say that 90% or 85%, but sufficient only. If market is in the trend and if you can combine price actions, I'm not telling directly go VWap upside or downside, combine price actions plus take support of VWap. Do not depend on VWap too much, because I'm not depending on any indicator too much, because indicator is always indicating things very late. So what is the price action here? Suppose this is the price action, inverted head and shoulder. Okay, this is the VWap line, this VWap line, and this is the neckline. VWap line is also acting as a neckline. For example, this is the head and shoulder and this is the VWap line, right? This VWap line is also acting as a neckline for the head and inverted head and shoulder. So obviously this is the VWap confirmation, this is the head and shoulder confirmation, this is the neckline breakout. So with the help of 3 confirmation, why I will hesitate the trade, right? I will directly trade here and I will get enough amount, whatever the requirement I have. There is nothing like target in a VWap, but it is useful to make an entry. Suppose you already in the trade and market is above this VWap line, no need to worry. But when market below this VWap line, then you need to worry, because there is a high chances that market will move downside. Now in this VWap, time frame will play critical role. I am using 1 minute and 5 minute for the intraday. You can use any, but I am personally using 1 minute and 5 minute, so that I will get clear understanding where market is moving towards. Hope you got VWap indicator in detail. You need to observe VWap by yourself. You can observe and let me know your feedback in the comment section. Thank you so much. See you in the next video. In this video, we are going to discuss about our next indicator, that is RSI. RSI is called as Relative Strength Index Indicator. which is one of the most famous indicator for the analyzing the stock. The RSI indicates the overbought or oversold situation in the market. It will not give you the trend, or it will not suggest any kind of entry or exit points. It's just a momentum based indicator. What is the RSI? I'm again repeating, momentum based indicator. So based on the RSI we can decide, can we go for downside, or is it safe to make an entry or not. Now without wasting time, let's take an example here. As usual, you go to indicator, select the RSI. After RSI, just select it. You will get RSI band like this one. Okay, this band is RSI band, whatever you are showing, I am showing here. Now in the RSI there are total two ranges. The upper line is 70 and downward line is 30. 70 represent oversold, and 30 represent overbought, below 30. Okay, overbought. That means if market is above 70, that means it's already oversold, so it does not make any sense to go for short position now. Okay, go for the short position now, or it's already oversold, unless and until market is again below the 70, then you can go for the trade. If it's above 70, in simple words, if it's above 70 or below 30, do not initiate any trade. That's what traded, or do not initiate any kind of investment. That's what this RSI is indicating. RSI is not indicating where to enter, where to exit. In some videos or in some blogs, you will see that what people are doing, people are making the trend line like this one. Okay, and they are entering based on this RSI. If RSI breaking this trend line, then they are making position at this one. But here the winning ratio is very, very low. In my earlier stages, I also tried this one. Okay, and I am losing money. I learned a lot of things by losing money only. That's why I don't wanted to do same thing with you, or I don't wanted to I don't want to teach you the wrong things. So the purpose is, do not make entry based on this trend line. After the trend line, you can make an entry. If you check here, see, after the breakout, market moved very, very good, right? Market moved very, very good, and in the chart also it moved very, very good. But trust me, in the live market, the winning ratio is very, very low. But I'm not saying that RSI is bad. RSI is really good index, really good indicator if you use it as a momentum based indicator. Means if RSI is between this trade, and based on this trade and based on the price action, you can make an entry. Okay, but if RSI is already indicating below 30 or above 70, so it's really dangerous to make an entry at this type of position. Okay, hope you got my point. RSI is pretty much straightforward, and if you are a trader, so always depend on the price action. No need to depend on the RSI. Okay, as a trader, I am not using RSI. Never use RSI as a trader. Never, in the sense, in fact it's your choice, but I am personally not using the RSI as an intraday trader. Just use RSI to check in multiple time frames, like 1 hour, bigger time frame, better the result, 1 day, for the analyzing any stock, or if you wanted to do some investment or the swing trading for the 15 days to 30 days, something like that. So you can check RSI should be normal, about 30, or this is the normal range to buy or sell anything. Okay, hope you got my point, and if you understand the RSI, no need to worry if you're not understanding the RSI, because I don't think so this will make any impact in your trading career or anything else. It's depend on you, how you are viewing the market or how you are visualizing the market sentiments. Okay, see you in the next video. Thank you so much. In this video, we are going to discuss about the most simple price action, or let's say indicator, called as Darwas Box indicator. You already familiar with the Darwas Box, but why I am again repeating this? Because you already know this price action, but you don't know the name. Okay, so what is meant by Darwas Box? Let's consider one scenario here. Suppose if market give one movement, and after movement market will go for consolidation phase for the long time. When market will go for the consolidation phase, then we just need to embed that consolidation phase into one rectangular box. Okay, this is as much simpler as it look like. So this rectangular box called as Darwas box. See, Darwas box. See, I already told you, you already know this price action, but you don't know the name. After consolidation phase, if market break this upside or downside at any side, that means that trend will start and market will again continue the trade with the faster momentum. That's the reason, or let's say that's the theory behind the Darwas box price action. Now let's take the chart example. Here this is the chart. In the indicator, previously if you type Darwas box, then you will get Darwas box as an indicator. But nowadays TradingView is removed Darwas box. The reason is Darwas box is giving the false signals into the chart. So how to draw Darwas box? It's really simple. Now let's go to here. Instead of brush, select the rectangular area. Okay, if you already observed that how Darwas box look like, then only you are familiar with. Otherwise Darwas box is always look like this one. Why I marked this one? If you look at this one, most of the chart, like most of the pattern are happening in this chart only. Okay, this is the after giving the breakout, it is the consolidation phase. Now what is the correct entry point? If market break this one, took support and market will break this one, that means market will move upside only. Upside moment will down. Upside moment will start. If market will move downside, then market will break at the downside, then downside movement will start. That's the logic behind the Darwas box. Now when to use Darwas box? As a intraday, I'm not suggesting go to Darwas box, because in the intraday just check the inside bar candlestick and more candle inside, that definitely itself is a Darwas work, acting as a Darwas box indirectly. But you can choose one day as a time frame, and if you are going for the swing trading for the long term, like 15 days or 30 days, swing trading, or you want to trade or you want to invest for the equity, for short term equity, then only go for equity. Is nothing but investing. Go for the Darwas box price action. I am not suggesting you to go for the Darwas box only for 1 hour or 2 hour or 1 minute or 10 minutes. It will work, but the good amount of winning ratio is in 1 day time frame. More the time frame, better the results. That's the theory behind the Darwas box. If I shift to 4 hours, then again you will see good example of the Darwas box. 4 hours, let's embed this Darwas box here. 4 hours, then only you can see the good example of Darwas box. Good rally in the Darwas box. That's the full reason behind the Darwas box. Hope this is not that much complicated as compared to other price actions. Other price actions is also simple, but this is very simple price action. Just thought share with you so that you will familiar with the Darwas box. Okay, hope you understood the video. See you in the next video. Thank you so much. Hello everyone. In this video we are going to discuss about our next indicator, that is Bollinger Bands indicator. Okay, let's take a chart example here, because the theory behind the Bollinger Band is really simple. Now once you open the TradingView platform, just go to here. This is here to load the indicators. Now after clicking on this one, you just need to type Bollinger Bands. Now out of this 5, just select simple Bollinger Bands. Okay, now after selecting Bollinger Band, you will get 3 lines. Now out of the 3 lines, just click on settings of the Bollinger Band. You will get 20. Now this 20 is nothing but this middle line. And what is this middle line? Middle line is simple moving average, which we discussed in the moving average section, and 20 represent the 20 candles moving average. Okay, so hope this time you got to know that what is the moving averages and what is the middle line. Now the lower line is like support for the Bollinger Band, and higher line is resistance for the Bollinger Band. Now, the Bollinger Band will work very best if and only if market is in sideways. How it will work? If in the sideways market will touch the support, move upside, touch the support, move upside, touch the support. This pattern will happen. So in the Bollinger Band, if market is in the sideways, then what you need to do is you need to buy at the whenever market took support here and market creating bullish candle, buy at here, and when to sell whenever market touch the resistance line, then you need to sell. Means buy here and sell at this line, or when you touch, sell at this line. If market is sideways, then it will give good profit. But it's not a 100% confirmation or not even 80% confirmation that it will work very best. I previously, when I was beginner, I started to using the Bollinger Bands, but after that I not found any good accuracies here or good profitable ratios as per my understanding. So I'm just using Bollinger Band sometimes when I wanted to enter in the market if market is in the sideways. Okay, so again, if market is trendy in the sense one-sided, like either it is positive or either it is negative, then how to trade with the Bollinger Band if you wanted to trade in the Bollinger Band? Okay, I am not suggesting to use Bollinger Band every time, but if market is broken something and you wanted to enter at pullback, so pullback and after enter, so if Bollinger Band is like this one, then you can enter here so that market will move downside again. But when market is in the trendy, how to enter with Bollinger Band? Suppose you should be clear with your mindset where you are entering, like either negative side or positive side. In this case, in this my chart, market is negative scenario, because when market opened, after opening the market started moving the downside level. Okay, market started moving the downside. If you check, market opened at here. After opening, market started moving the downside direction. If you check the price action also, it's a downside. So I wanted to make an entry for the downside. So what I will do is, whenever market will touch upper side, okay, whenever market will touch upper side, I will make short position here, because I know trend is negative. I will not make any buying position at the downside because market is moving the downside. So with my clear understanding, what I am doing is I will do enter here at these candles, put stop loss somewhere around here above these lines, and I will expect target the last line of the Bollinger Band or breakout of the Bollinger Band, this breakout or this breakout, so that market will move faster to the downside. Okay, so as per our understanding, what we need to do, when market touch here, we need to sell it. But after selling with this candle, what happened is our stop loss got hit. It's fine. Again, we need to select this candle. Okay, whatever the candle touches or moving downside, short it, put stop loss around here above this line. If you check, market dropped too much. Okay, market dropped too much. Again, let's take another example. Sell here, book here. Okay, again sell here, sorry, sell, not stop loss. Sell here, book somewhere around here or somewhere around here. It's your choice where you are booking. But if Bollinger Band size is too minimum like this one, then it's better not to trade with this range. Bollinger side should be larger in the sense, not this one. Like this is also not good. Okay, this is also not good. Let's take an example where Bollinger Band size is bigger. For example, here, if you check, the difference between these two bands are maximum. Distance between these two bands are maximum. So this is the good scenario to make a position here, short position here. Okay, let's take another example. If you check here, if you check another example, let's take another example. See here. Here Bollinger Band size is again maximums. Like this one is the Bollinger size. This is the maximum. So what we need to do? We need to make buy position. Like here you can buy, here you can sell. Again here you can buy. Obviously, if Bollinger Band breaks, then obviously market will move upside very fast. So in this case, here you need to book, or at least here you need to book. So this is the case. But to be very honest, I'm personally not using Bollinger Bands. When I was beginner, I was using the Bollinger bands, but now I am not using the Bollinger band that much extensively. But because of you should aware of the indicator, that's why I am covering in this video. Hope you got my point. Thank you so much. Yeah, see you in the next video. Hello everyone. In this video, we are going to discuss about our next indicator, that is SuperTrend. SuperTrend is useful for finding out the trend in the market, or let's say super indicator indicates that where to enter in the market. Okay, I am not fully believe on the super trend because I am the price action and breakout strategy person. That's why I more focused on the breakout and price action topic more. Now the reason why I am telling you, or why I am teaching you the super trend, because it's better to having some grasp or having some knowledge about some indicators as well. So let's get started with the super trend indicator. Now what you need to do, as usual, go to indicators, type super trend. Once you type super trend, you will get some lines here. Once you get the lines, what you need to do is you just need to go to setting of super trend and be sure that you are using length as a 10 and factor as a 3. It contains some mathematical formula behind it, so no need to cover that one. Now why we are using 10 and 3? Because it's a globally accepted value, or let's say it's a standard value which everyone is supposed to use. You can change as per your experimentation, and you can figure it out to the way how to use that value by your own experimentation. Okay, now this is the super trend. Why it is suggesting is, if you zoom in little bit, you will get some markers here. See, you are getting the markers like you need to make a short position here, or you need to make a buy position here, right? So whenever you can get the marker like this, you're supposed to enter in the market. It's that much simpler. Okay, see, this is the green marker, red marker. What green marker represent? Green marker will represent buying in the market. Red marker represents selling in the market. Now how to trade? It's really simple. Whenever you get this marker, this is super trend is very useful for the scalping strategy. And as you know, scalping is nothing but capturing the small movements in the market. For example, enter here, exit at this position. This is the scalping strategies. If you are using the super trend for the long position, or if you want to hold your position for the long side or long time, then super trend will not help you that much if market is not trendy. Now if you get the marker like this one, you need to make entry at this candle and put stop loss above this marker. As well as the best time frame which I gone through, or which I experimented and which I found, is 5 minute will work best for the as per intraday. But there are multiple time frames which we can use. More the time frame, better the result. If you choose, instead of 5 minutes, you can choose 10 minutes as well, and just check the results. In the 10 minutes, see, it will confuse you. If you enter here, then your stop loss will hit. If you enter here, then you will get enough rally, something like that. So you need to figure out by your own way. But in my point of view, as an intraday trader, 5 minute and 10 minute will be fine. But for the swing trading, you can choose more than half hour, like 30 minutes or 1 hour time frame, or 1 day time frame to use super trend. But I will suggest you 30 minutes and 1 hour is good for the swing trading. But for now, you can focus on the 5 minute and 10 minute for the super trend. Super trend will not give 100% accurate that market will buy here, or market from the market selling will come from here. Okay, it will always confuse you. So it's better to combine super trend as well as the price action. Now how to combine? Go to 5 minute chart, because 5 minute will work very good as a price action. Just check the trend clearance. Now what is the price action here? If I hide super trend for a minute, see what is the price action here. Market created double top pattern, right? Market created double top pattern, and if you check this price action with the super trend, then what super trend will suggesting is, super trend is suggesting sell here, right? Sell here, something around here. Now you need to go for the selling at this candle, put stop loss above this one. That is also fine. This is also one more advantage for the super trend, for the clear understanding of the trend. Now if you say buy from here, then also fine, because the reason is, see, market moved upside, market moved down, market moved upside. Now how it will work best? Suppose if you have this support and resistance level, for example, this is the resistance level, this is the support level. If super trend and the support resistance level is also mentioning same thing, like it is breaking the resistance, as well as super trend is also suggesting for buying, then go for the buying. That's all we need for the super trend. But do not believe too much or do not depend on too much in the super trend. I am personally not using super trend. I am purely depend on the price action in the market. Okay, so you can try and experiment by yourself. You will get to know. Make trading as simple as possible. No need to add moving average, no need to add super trend, no need, super trend, moving average, support, resistance. If you combine all these things into one chart, it will confuse you. So always better to follow create your own method, strategies, market sentiment. It will help you a lot. Thank you so much. Hope you understood the whole concept of the super trend. You can take your time analyzing the market. Thank you so much. See you in the next video. In this video, we are going to understand the basic theory behind the Fibonacci retracement. So before directly jumping on Fibonacci retracement, let's understand what is the Fibonacci numbers in mathematical way. The reason why I am covering this topic, because if you understand what is the Fibonacci numbers, then you are easily able to connect the dots between Fibonacci number and Fibonacci retracement, and why this is so much important in the market, or why Fibonacci number levels are called as critical levels, as well as it will act as a support and resistance in the live market. Okay, so before wasting time, let's start. What is the Fibonacci number? The Fibonacci number is look like this one. Let me bring it up first. 0, 1, 1, 2, 3, 5, 8, 13. Now you can ask me, what is this number? Okay, it's really simple. Means what is 0 plus 1? 1, right? The answer will go here, 1. Then the addition of previous number and current number will go to next number, like 1 plus 1 is 2. Now 1 plus 2 is 3. 3 plus 2 is 5. Now what is meant by it? 3 plus 5 is 8. Okay, and 8 plus 5 is 13. That's the whole mathematical calculation of the Fibonacci numbers. Addition of previous number into current one. Whoever are the computer science students, they easily able to understand the Fibonacci number, because it's completely older concept for them. In the first year itself they will learn. But who don't having the knowledge of Fibonacci number, hope with this video you got the what is the Fibonacci number. Now let's take an stock market example here. See, these are the whole our Fibonacci number. With the help of this Fibonacci number, the Fibonacci indicator in the TradingView platform, they are created one important level from this Fibonacci number, right? Which the levels are 0, 0.23, 0.38, 0.5. In fact, 0.5 is not considered as a Fibonacci level, but because of the middle number, we are considering 0.5 as a level in the market. Now 0.61, 0.17. Now how these are calculating? It contains some mathematical intuition behind it. For example, 144 divided by 233, we are getting 0.61. Like 377 divided by 6010, we are getting 0.618. So if anyone want to know more details about how we are calculating these numbers, like 0, 0.23, 0.38 with these Fibonacci numbers, then I'm pretty sure it's not helpful for you, but I will share the important link in the video descriptions. You can go through that one, so that you will easily able to understand what are the mathematical calculation behind it. Most probably it's a Zerodha links. Okay, now see, I marked this level with different color. Why? Because in the Fibonacci concept, the most important level which we are going to focus on is these three. These three level is also called as green or golden levels. If market is breaking this type of level with some price action, that means it's a confirmation of the trade. Okay, so now we are discussing more technicalities like how this Fibonacci numbers are working in the live market in the next video. But for this video, let's consider in point of buyers and sellers. If you see numbers, Fibonacci number, one shifted to here, this one shifted to here, this one and one, these two values are shifted here, right? We are considering as a 2. Now this one and these two making as a 3, right? That means one value is pushing another value, right? So same as we can interpret same thing in this Fibonacci number, because I am considering in my psychology that this number will act as like this. Maybe right, maybe wrong, but just bear with me for some time. Now what I am considering is, suppose whoever sold here, market gone here, market will move upside, again market will gone here. So someone need to sold here, market will again will go here, market will go here, something like that market will do. So this 0 shifted to 23. Now 23 becomes 38. Means sellers are getting more powerful. Sellers are getting more powerful. Now again this shifted to here. That means this seller is pushing the market downside. This seller added to this seller added to this seller. Now what will happen is, suppose if pullback comes from this one and pullback happens, then what will happen is, most of the sellers are activated at the golden levels, right? Most of the sellers. That means their stop loss should be above this golden level. So what will happen is, when market break this golden level or trend line, what will happen is, market will again start moving upside. The reason is, most of the sellers are pushed the markets and most of the sellers are 0.5 level. 5 level in the sense, we are considering 0.5 as a 50% level. So 50% sellers are activated here, but market moving upside. That means there is a high chances that 50% guarantee that, or let's say 50% chances are that their stop loss will hit if market move upside. And this seller, whoever sold here, their buyers will be here, right? Buyers will be somewhere around here. So their stop loss will hit and market will start moving upside. That's the reason Fibonacci level will always work with the help of trend line and some basic price actions. If you're not understanding this, no worries. When we are drawing in the actual live market, I am going to discuss it again in the chart itself. But if you're not really not understanding, then again just walk through this video one more time. You will easily able to get it. Or if you have any doubt, just let me know in the comment section. I will happy to help you. But watch all the technicalities and how it is working in the chart or in the market in the next video. See you in the next video. Thank you so much. Hello guys. In this video we are going to discuss about different types of Fibonacci levels. Let's consider chart itself. How to draw Fibonacci levels, that we are covering in the next video. But let's understand the very basics of the levels. See here, the levels are 100%. This 0.78 is nothing but 78%, 61%. This is the 50%. This is the 38%. This is the 23%. Now how to interpret this data? If you observe, market is at negative zone. Okay, market is moving negative. So as per logic, what will happen? Market took support near 50%. That means there is a 50% chances that market will retrace from here. Retracement is give some reversal from here. It's not like complete reversal, but at least one pullback. We can say reversal means pullback from here and again drop. So whenever people are doing trading at the pullback levels, then this level will helpful for them. How to interpret this? Market broken here, market give support at the 50% pullback level, market pullback, again break this one, again 50%. But this time market trend is negative because market not broken 78%. That means whatever these sellers are here, they are now activating this seller. Suppose this level contain 5 sellers are activating these sellers. So what is the range of these sellers? 5 plus whatever the sellers are here, 3 is equal to total 8. For example, let's consider like this only. So it's easier for you to build up your psychology. I'm not saying this is the correct way to think, but this is the good way to think which I am thinking. Like suppose if taken resistance from here, that means there is a 78% retracement happened, means 78% confirmation that market got reversed from here and you can trade at the pullback. More the confirmation, better the trade. In the flow, I'm not talking about, suppose market move this one and market given breakout. I'm not talking about the breakout level. I am talking about the pullback level. So you will easily able to understand in the next video more. Okay, pullback happened, again market moved down, again market move upside. Like at this time 38% chances only that market will move downside. Here we have 78% chances that if market is not able to break 78%, not able to break 78%, that means pullback will happen. There is a, and now here there is only 38% chances that market is not able to break. Other than that, there is a high chances in the sense there is almost 62% chances that market will break this level, but only 38% chances that it will give pullback, and pullback happened. Nothing like it will not happen. So this is the simple logic behind the Fibonacci retracement. No need to worry about anything if you're not understanding this time. It will take some time. Next video it will be much clear. After the next video it will be much more clearer. But you can just start practicing it from this video only. How to draw, how to make entry, we are covering in the next video. So see you in the next video. Thank you so much. Hello guys, in this video we are going to discuss about the Fibonacci retracement technicalities. But before starting technicalities, let's again one more visit Fibonacci retracement. The word Fibonacci retracement. Okay, the Fibonacci, you already know what is the Fibonacci numbers, but what it's meant by retracement. The retracement is nothing but it will reverse from there. Like it will start moving. Suppose market will move upside. Retracement is it will at least one time it will move back, like it will move opposite direction from upside to downside. That is the retracement. Like changing the direction itself is called as retracement. Hope it's clear for you, because the word retracement I not cleared in the last video. Now let's go into technicalities. How to draw Fibonacci numbers. Okay, Fibonacci levels. First, where we find out Fibonacci retracement indicator in the TradingView platform. The below trend line, like below where you are finding the trend, like where you are finding this drawing the trend line toolkit, below that you will find out this type of indicator. Okay, just click on the here. So that means I'm clicking on, that means you will get lots of indicators. Here select the Fibonacci retracement. Don't select trend based Fibonacci extension, just select Fibonacci retracement. After selecting Fibonacci retracement, there are total two ways to draw the Fibonacci retracement levels. First thing is when market is moving upside to downside, and you are thinking that when market took support, and suppose here this one is your trend line, that means market is moving upside to downside. So what you need to do is mark high of the high swing and low swing of the today or whatever the low swing we are seeing in the live chart, whatever the time frame you are using. Okay, why I marked this one? Because if you observe, this is the high of the market and this is the low swing of the market. Mark high and low swing of the market. If I zoom out, why I am choosing these two? Because as an intraday trader I am choosing this one. If I zoom out, then what I need to do is I need to mark high from this one and low from this swing. Like I need to mark high of this one and low of this swing, but this time I'm not marking this one because I'm only choosing that day high and low swings, because I wanted to enter at that day only. Because as an intraday trader, if you swing trader, then choose multiple days, like for example 2 days or 3 days, swing, mark swing high and swing low. Now after marking this, what it means, suppose this is your support level. After marking this, what you will get, if you check, see market dropped here, market took support of 0.50% and market retraced. Okay, and again market again retraced and dropping. So what is use of Fibonacci retracement here? See, the confirmation is, suppose market broken this trend line, market broken this support. So if market is going to broken this support, what is the confirmation? First thing is trend line. Okay, second thing is, first market took a retraced here, second market took retraced, market moved back, and there are total two types of entries. First at the swing breakout at this time, and second thing is at this level, right? At this level. Why this level? Because most of the experienced people, I'm not suggesting as a beginner you can do this, but if you as much as you gain experience, then only you can go for it. For example, if you want to enter early before breakout, but you don't know when to enter early, like for example, you want to enter at a downside for this level, but you don't know when to enter. Many people will enter here and most probably their stop loss may hit because the gap is too large. So what we need to do after drawing Fibonacci levels, then you need to just wait for the one pullback. Okay, one pullback, and we need to check from where it will get retraced, like 0.78% it will get retraced. So you can short here at this red candle, it's also fine. Now your question is, sir, this is already happened. So in the live market, if you want to enter at downside, this is not a case, right? So what we need to do, let me delete it for you for a sec. What we need to do, just mark high, just mark low. Okay, after marking high and low, you will get pattern like this in the live market, because let's consider all other pattern is not here, high and low is only here. So after marking this, you will get rejection from at least 0.61%. that means after marking this one, that means there is a high chances that market will start falling this level only, 0.5 or 0.61. So if you short at this candle or at this level, then also fine. Then what will happen is, instead of making an entry here, as an experienced trader, you will enter here. So you are easily able to enter early as well as a safe position. Okay, this is for the downside movement. Same for the upside. What we need to do is, suppose we need to draw Fibonacci level for the upside. What I will do is, I will just zoom out it and I want to make entry for the upside. What I will do, I will just mark it as this one. Okay, let's consider how to mark for the upside. Now when market moving upside to downside, how to mark? As per trend, upside to downside. If market is moving up, downside to upside, then how to mark? Mark this one to this one. This is the case. Now how to interpret this one? Suppose market broken this trend line, market took resistance here, market again come back. So at the retest, whenever I am saying at the retest and breakout, whenever you want to enter early, at the retest you can buy here. That's the logic behind the Fibonacci retracement, because there is a high chances that it will retrace from here and it will move back. So market will always creating pattern like this, and based on this level, market will support the pattern. So hope the marking is clear for you. Like in fact, in short, what we need to do, if market is moving upside to downside, mark Fibonacci retracement as per our understanding upside to downside. If market is moving downside to upside, mark Fibonacci retracement from the downside to upside. Again, what we need to do, see, what we need to do is, suppose there is again one more chances. Suppose you thought market will reverse from this support area, market will reverse from this support area. Okay, this support area. So, and you wanted to make an entry for the upside. So how to make an entry with the confirmation or confirmation breakout? Okay, so instead of waiting for another indicators, just draw Fibonacci retracement from upside to downside, upswing to low swing. What you need to do is check breakout level. Okay, check the breakout level. That means what you need to do is, after breakout the trend line, do not enter. Where you to enter 0.38%, your entry point should be 0.38%. Okay, and 0.5%. These are two golden levels. If market is breaking this trend line as well as market is breaking 0.38%, then directly go for the trade. It's a confirmation sign of reversal. That's why Fibonacci retracement is playing the most critical role when we are trading on the breakout levels. Okay, hope you got my point. Again, in the next video, I am telling you same concept, but in the little bit detail how to combine price action, trend line as well as Fibonacci retracement. For this, now let's consider one homework or just an assignment. You can draw Fibonacci retracement and just draw it and check with the trend line. You will get to know what I meant to say, and just observe by yourself with multiple time frames. It will work in any time frame, 1 minute time frame, 5 minutes time frame. Time frame will not matter here. The matter is your logic and how you are drawing it and how you are making entry. Okay, so what you need to do is, you just need to draw it in a live market and make your mentality or make yourself as a practitioner for the Fibonacci retracement. It really helps to avoid the false breakouts. If this breakout happen, then if Fibonacci retracement is also giving the breakout, then only enter. If Fibonacci retracement, there is a high chances that market will move downside from this retracement level and breakout will not happen. But if it's breaking the Fibonacci retracement golden level or green level or these three level like 61 to 38, then there is a high chances that market will move upside only. That's the logic behind the Fibonacci retracement. Hope you got my point. We are discussing in the Fibonacci retracement more in the detail in the next video. See you in the next video. Thank you so much. In the last video, we have discussed about some basic technicalities of how to draw Fibonacci retracement. Now in this video, we are going to discuss about how to draw Fibonacci retracement as well as how to combine with some particular price actions and how to make an entry with the Fibonacci retracement indicators. Okay, as usual, as I am always saying, you need to be clear with your mindset. For example, you should be clear that you are going to make an entry for the downside or you are going to make an entry at the upside. Now, suppose if you look at this chart and if you really gone through each and every price action videos and you have given time to the market to understand and analyzing the price action in the live market, then only when I look at this chart, then only you are able to get one price action here. Okay, by only seeing the chart. Okay, one or two price actions. Now what is the price action here? Let's see. Don't you think it's a double bottom pattern, right? Why double bottom pattern? See, look at it created the bottom at some support area. That's why it's a double bottom pattern. Now, what is our logic? What is double bottom pattern represent? The bullishness in the market. If you still don't know what is the double bottom pattern, then please, I'm kindly requesting you go and watch that video again and spend some more time in the market. Do not complete the course within a one day. It will really not helping you out. Not even this course, not even any other courses in the world which is make you a good trader within a one day. Okay, so you need to take a time. Okay, now let's take an example here. This is a double bottom pattern, sign of bullishness. So what I can do is I will mark trend line like this one, right? Trend line. I have the trend line. Now what is the confirmation? Double bottom confirmation, double bottom breakout confirmation. Okay, double bottom breakout confirmation. But if again I want to confirm the breakout and confirm the entry, because from the morning only market is dropping, so I will mark this much. Okay, why I mark like this one? I marked the high swing and I marked the low swing. Okay, and this is also swings, but this is the middle swings, not the lower swings of the today. After marking this, you have the trend line. Now what you need to do is, see, market having the golden ratio of golden levels of 0.38% like this one. So as per our logic, what we need to do, and double bottom pattern, after breaking out trend line, wait for the retest and go for the entry at the retest breakout. So how much confirmation are here? Let's test again. First thing is double bottom pattern. Okay, second thing is trend line breakout. Third thing is Fibonacci golden level breakout. If there is a combination of, always remember or note it down somewhere, if there is a combination of a breakout, either it is support resistance or the breakout of the trend line plus any golden or green, or this means 61%, 50% and 30% breakout, 30% level breakout are the same or nearest, then you should go and trade. Anyways, it's your choice to trade or not, but it's a good sign to trade and with the multiple confirmation. So in this trade, double bottom pattern, trend line breakout, as well as we need to enter at this golden level breakout. If you observe here, market moved up from 39,390 rupees to 39,500, almost the rally of 110 rupees. Okay, so this is the big rally. 100 point is a bigger in the market. Okay, and we will get momentum in the market. If you are option trader, option buying is nothing but capturing the momentum in the market, and you will easily able to capture with the help of Fibonacci retracement. Okay, so What I meant to say is there are total again two types of entry we can do here. First, either breakout, swing breakout plus confirmation of golden level breakout, or you are experienced trader, then I will suggest you after breakout it will take a retest. After retest it take a retracement of 0.23, like here you can buy here and place order, stop loss here, buy here. The reason why buy here, to confirmation, because we know from this onwards market will now not move downside, because after giving breakout it took a retest and you can buy here at a second green candle. Okay, so there is a high chances that market will move upside only, so you will get early entry and you are able to book a maximum profits. But I'm personally, what I'm personally doing, even if I'm considering me as advanced trader, not an advanced that much, but as a good trader, because I'm easily able to capture the profitable trades, as well as I'm easily restricting my loss nowadays. So after swing breakout, I'm entering at this position. That's my correct entry point. Okay, I'm telling you in my personal point, personal experience. Hope you got my point. So this much confirmation you can trade. So again, what is the logic behind market is moving this much faster at upside once market broken the Fibonacci trend line, Fibonacci retracement level? As I said, what Fibonacci retracement represent? The market, seller are pushing market to the downside. So that means seller are combining. For example, here one seller, here two sellers, 1 plus 2, here we can see 3 sellers. These 3 sellers will push market towards the 5 sellers. So what will happen? This all sellers stop loss will hit at the same time. So when your market break this level, that means buying will happen, and this is the breakout trade. So buying will happen. That's why market is moving this much faster. Okay, now what is the confirmation? Double bottom pattern, trend line, as well as Fibonacci retracement. So why we need another confirmation? If this much confirmation you can see, then it's good to trade in the market. Okay, this is the first trade I am seeing in the chart. What is the second trade? See, again, if you want to enter at downside, see, if you observe here, the left shoulder, head and right shoulder in the market. Okay, what is the neckline? Neckline is this one, right? And what is the retracement level? Again, golden level, 0.5%. That means there is a high chances that market will at least touch one more level or two more levels. That is the probability, and then only market will touch this, then only retrace and market will move downside or completely reverse. So we will get easily able to get rally by using the Fibonacci retracement levels. Hope Fibonacci retracement is clear for you. Please do not make a mistake to skip this topic, or if you not understand, just let me know in the comment section. Okay, but always try by yourself, then only you are easily able to capture the movement in the market, as well as you are easily able to understand how to draw and how to utilize the Fibonacci. I am always using Fibonacci for the breakout levels. Some people are using Fibonacci for the entry level. For example, market is moving upside and they don't know how to enter. So what they will do, they will just mark Fibonacci high swing to today's low. Today's low means, if I mark this one, wait, I need to remove this one. Just a minute. Just give me a minute. I need to remove this one so that you are easily able to understand. See, what people are doing is, people are marking low and high like this one. Okay, what is the high? I am marking based on today's high. I am not considering this is happening. So what they will do is, after taking retest, after market moving upside, taking retest, they will enter at the retest level, like they will enter at the bottom levels, so that their stop loss will be secure. Okay, but I'm not suggesting you to go to this strategy, because as a beginner this strategy will not make you convert you into good winning rate ratio. So always wait for the breakout strategy, or always go with the breakout strategy at least when you are the beginner, so that you are easily able to restrict your losses. After that, it's your choice how to combine the price action and Fibonacci retracement. There are multiple ways to utilize the Fibonacci retracement, but in my point of view, as per my personal experience, I am explaining you what are the way I am following, I'm not telling you can only follow that way. There are infinite number of ways to follow Fibonacci retracement with some indicators or with some price actions. But this is the best way. I'm not telling you only double bottom pattern. There are maybe inverted head and shoulder will be there. Or if you want to enter for the downside, then also same thing will happen. You need to draw the Fibonacci retracement level, and if you see any downside movement for the Fibonacci retracement, then mark it and make an entry like this. If I mark like this one, what I will do, because I am making at the downside entry, this is the inverted head and shoulder. This is the inverted head and shoulder pattern, like inverted head and shoulder pattern, which we discussed earlier as well. So what I will do, after I know this is the inverted head and shoulder, I will make an entry here only if I am pretty much confident that head and shoulder. And this much confidence you will get not within 1 day, 2 day or 1 week. At least you need to spend 3 months. Okay, 3 months to understand each and every price action, its logic, its stop loss, need to enter in the market, live market, control your emotions, then only you are easily able to understand. So you see how beautifully it works. Like it exactly took retracement from this level and again took reversal or rejection from 23 level. Then there is a high chances that it will drop. So I will enter here and my stop loss will be here. So I am able to book as much as possible, the more points, more profit and less loss. This is the logic behind the video. Maybe this video may be longer, but hope this will help you in the future trade. See you in the next video. Thank you so much. Hello everyone. In this video, we are going to discuss about Elliott wave theory, the introduction of the Elliott wave theory. The Elliott wave theory discovered by Ralph Nelson Elliott. This researcher or this investor found that market is always following some kinds of pattern, and he divided that pattern into the waves, and he found that there are some waves which are always repetitive in the market. So based on that waves, it's helpful for everyone to make an entry or to make an exit. But what he suggested is it will helpful for us to make our trading plan while trading or while investing. What he found exactly? He found that market is always following some kind of waves, like this is the wave, and if market follow such kinds of wave, then we can clear our mindset about where is market moving, like heading towards, like either it is up in uptrend or either it is in downtrend, and what is the best scenario to trade or the invest using the wave theory. Wave theory not helpful for you for the directly trade or make an entry, like how to make entry or how to make exit, but wave theory is helpful for you to make an trading plan each and every day. So as per him, he gave some golden rules as well as he gave some theory points which is applicable in the live market, so that if market follows that theory or if market follows that wave pattern, that means we will easily able to catch the market movement in the advance. That's the whole summary of Elliott wave theory. In the next video, we are going to discuss about what exactly Ralph Nelson Elliott given to us, or what exactly he discovered to us. The next video topic is he discovered the wave pattern and he named the pattern as impulsive waves and corrective waves. Also, in his discovery, he found out that regardless of time frame, means if it's 1 hour, 1 day, 1 minute, or 5 minutes, or 15, whatever the time frame we are following, it is applicable for all the time frame. Okay, so no need to worry about the time frame. It's all about the market trading discipline as well as market trading psychology, how market is repeating his past patterns or how market is working on the based on the wave theories. So in the next video, we are going to discuss more about this theory. See you in the next video. Thank you so much. In this video, we are going to discuss about the most basic and important part of the Elliott wave theory is impulsive and corrective waves. If you observe the market is always moving like this one, okay, in the some wave format. So with this wave format, what we need to do is we just need to mark what is the impulsive wave and what is the corrective wave. Now how to figure out what is the impulsive wave? Let's take an example here. Suppose if you found this type of pattern, this type of swing pattern, right, this type of swing pattern, then this uptrend, this called as impulsive wave. Impulsive wave is nothing but trending wave or trend line or uptrend, whatever you have, uptrend or downtrend. Now after moving forward, market need to give some profit booking, or market need to come down for some time, right? But it will not break the previous low whatever market created. Consider this as a low and created this as a swing. So this wave is called as corrective wave. Corrective wave, in layman terms, we can say that it's a profit booking wave, then also fine. Then again market took support here and market will move upside. Then again this wave called as impulsive wave. This is very, very simple. Again, because it will not break previous high, even if it will touch from here and here, then also I am saying it is the corrective wave only. Okay, corrective wave. And again this is the impulsive wave. So this is very, very simple. Hope you got my point, what is meant by impulsive wave and what is meant by corrective wave. Now you can say, sir, every time market is moving like this one, so can we mark impulsive corrective every time? How we can figure it out from these patterns? Okay, how we can figure out from this pattern and what we can figure out from this pattern? Let's take an example here. Here Elliott suggested a golden rules. What are the golden rules? See, the first golden rule is, suppose market is in uptrend, it will drop for some time, it will go uptrend. Mark each wave. This is the wave 1. This is the wave 2. We can mark it as 2. This is the 3. Okay. This one is the 4. And again market will move 5. Now, as per Elliote wave theory, now market need to drop from here, because this is the end of the Elliote wave impulsive wave, or this is the end of the trend, end of the some trend. So what we need to analyze, or what we need to consider is, from this point market will change its trend. Means we will see a corrective wave. Okay, this is the corrective wave, which is the, again after fifth wave we need to mark as a 1 or consider as a. Then market will move upside, but this time it will not break this high and it will drop. So again this corrective wave and this impulsive wave is very, very smaller in the sense this corrective is long, but this impulsive wave is not able to break high, and again it will drop with the corrective wave. So 2 consecutive corrective waves with 1 impulsive wave, we can consider it as an trend reversal. And most of the time we can find out the trend reversal when we see the fifth wave in the multiple time frames or any time frames. It is applicable. So what I meant to say, what is the Elliote wave? What Elliote wave suggested is, market will move like this one, it will create the 5 wave pattern. After that market need to change the trend, and you need to make your mentality or psychology towards the downside, like this one. So this corrective wave and this corrective wave is applicable for the trend change. And also we can call this as a, suppose 1 2 3 4 5 waves for the upside, then 6 7 8. Now we can call this as a 5-3 rule. Okay, now you can say, suppose what if happen market create this much wave, then this is the end of the Elliote wave of 5-3 rule. Again, if market is not able to break this high, that means there is a high chances that market will again drop and continue Elliote wave from downside, like again 1 2 3 4 5 6 or 5, then it will move upside. Like for example, suppose this is the pattern. Okay, this is the fifth wave. What will happen? Again 1 2 3, like 1 2 3 4 5, 4 5. That means here again market will end his down move, and again market will move like this one again 1 2 3 4 5, something like that market will move. So this is the full concept of trend reversal, and by using the wave theory, trend reversal by using the wave theory. And it is really helpful to make our mindset to where we can trade, or what is tomorrow sentiment, or what is the market sentiment going on in the market. That's the reason Elliott wave theory is playing the major role. Now, what are the rules of drawing the Elliott wave theory? First rule is, let's take this example. So this is the impulsive wave. The low should not cross this low, okay, and the next impulsive wave should cross this swing. It should cross this swing, as well as the next corrective wave not, means it should not break this higher. It should create the higher high formation. What if market create this one, and if it drop, then we need to recount it again from here, like one trade, this one, this something like that one. If this scenario happen, then again we need to recount it. We need to 1 2 3, fourth wave is failed wave. So what we need to do is, after this wave, after this one, 1 2 3, again we need to recount it. That's the theory behind the Elliott wave theory. This is the most important rule in the Elliott wave theory. Again, first rule. Again, the second rule is, after the fifth wave, 2 3 4 5, after the fifth wave, market need to create this wave. Like whatever the impulsive wave we having, impulsive wave, the corrective wave is almost same or near to same. Then market create this one and this one. So if this scenario happen, corrective is almost same one, then we can call it, it's a good formation of Elliott wave theory. That's the golden thumb rule for the Elliott wave theory. Hope you got my point theoretically. What is the Elliott wave theory? Okay, see you in the next video with some technical examples with the chart. If you have any doubts, then feel free to ask me in the comment section. Thank you so much. In this video, we are going to discuss about the example of what is the Elliott wave theory. Let's take a chart example. Let's pick up one example from the Google images. The reason why I am picking from the Google images, because the live chart will always confuse you. But there is a one trick to find out the market is following Elliott wave theory or not, and you already know. We already covered in the price action. We just need to connect the dots between price action and Elliott wave theory, which we are covering in the next video. But for now, just bear with me and try to learn how Elliott wave theory looks like. Now, if you see this image, okay, in this image you will find out market will give up move 1 2 3 4 5. Market will give move like this one, and the third wave is always bigger wave. Third and fifth wave is always bigger one, but third wave is almost bigger than first wave. So if this case is happen, then there is a high chances that market will still continue the up move. This is the basic thing in the Elliott wave theory as well, which I think we not covered in the last video, but covered in this video. Now, hope you got what is meant by Elliott wave theory. Okay, now let's take an example from the chart itself, how to analyze the chart. Now, from where we need to mark 1 2 3 4 5 6. This is a correct? No. Why? Because market just created one small swing here. So what I'm doing is, this is, if you see the market in the day chart, then what we need to do is just mark from here, or here also one wave, one corrective wave, one movement, corrective wave, again movement, then market created corrective wave like first, second, third, fourth. Now this time market moved this one, fifth one. Now there is a high chances that market will drop from here, and I think at least the target is in this zone, like either this zone or this zone, because market will drop here, give this one, and again market will continue his bearish trend or the downtrend in the Elliote theory. Now the uptrend, one trend is already over, that is the uptrend in the market, okay. Now indirectly saying, let's again mark the theory pattern 1 2 3 4 5. The reason why I not marked this one as a drop one, because if you see, market created just a sharp drop and move upside, but if you see here, market go here, dropped, at least move some downside, then move upside, then down some sideways, and then move upside. This is the best case to draw the Elliote. First, second, third, fourth, and fifth one. Now there is a high chance that market will move this one, market will create corrective wave, and this one. This is the impulsive wave. Second one is the corrective wave. This is the impulsive wave. This is the corrective wave. Okay, so hope you got how to analyze the pattern. Now what is my tomorrow's plan? If by this Elliote theory I will view, or I will view as a negative side, or I will make my psychology towards the negative side as per Elliote theory, and it's correct as well. If now on this time, like in the November, if you ask anyone in the market who are the Indian traders, they are always saying that one, or they are saying that one, market, our Indian market is already at the overbought situation. That's why one correction is needed. And as per Elliote theory, if you connect that psychology, as per Elliote theory, it's the correct, it's in the corrective wave in the sense, as per Elliote theory plus market sentiment, today's market sentiment when I am recording this video, both are matching, because market is already at overbought situation and already touched the all-time high, which is almost 19,000 rupees, which is, I'm analyzing the chart of Nifty 50, which is an index, good index or company index in the Indian, listed in the Indian stock market. So hope you got this point. Nothing to worry if you not understand how to mark, how to analyze. It's just for analyzing the stock, not for the trade or entry. But in the next video, I'm going to show you one most interesting thing which you already know, but you are not aware that it's a part of Elliote theory. So see you in the next video. Thank you so much. In this video, we are going to discuss about the Elliote theory patterns, which you already aware of, but you are not sure that is the Elliote theory, because you not came across this type of concept earlier in every or in any videos which we recorded or which you have seen. Now let's take an example here. The first price action is, which is following the Elliote theory and which you already aware of, is this price action, right? What is this price action? Let me draw it again. Suppose if market move upside like this one, what is our entry point? This neckline. This is the neckline. What is this price action? Okay, this price action called as head and shoulder price action, right? So as the head and shoulder itself is one kind of Elliote theory. See, I just marked this one when I was making the video as head and shoulder, but actually the price action, it just look like this one if I mark from the bottom. First wave, second wave, third wave, fourth wave, and fifth wave, because I need to mark first and second as per Elliote theory. And if you check the head and shoulder pattern, then also you will see same type of pattern, like impulsive wave, corrective wave, impulsive, corrective wave in the 5 wave formation. Now after the 5th wave, market will start reversing and market will reverse like this one, and this corrective wave is no longer, like market will change his trend. And what is the head and shoulder pattern pattern is telling? It is a pattern of bearishness in the market. That means when your market is in uptrend or sideways, or it's creating this type of pattern, then we can consider now trend is reversing towards the negative side. So head and shoulder pattern is following the Elliote theory. We can say that head and shoulder pattern is following the Elliote theory, and you are already aware. Now it's easier for you to find out the Elliott wave in the live market, right? Because you already know what is meant by what is the head and shoulder and how to mark head and shoulder pattern. Now, second is inverted head and shoulder. Inverted head and shoulder is look like this one also, this one only, right? And this is the neckline. Now, based on this, you already know that what is the impulsive wave, corrective wave in the inverted head and shoulder, right? Inverted head and shoulder is also the sign of the trend reversal, but this is the sign of upside or uptrend. If you check the pattern in the live market, then also you will realize that it's nothing but the Elliott wave theory. Okay, so as I said in the last video that you already know what is meant by Elliott wave theory, but you are not aware that you are indirectly following the Elliott wave theory. Now this concept is clear for you, right? The third one is the rising wedge pattern or falling wedge pattern. First mark, second, third, fourth and fifth, and market will drop from here, market will retest and market will drop like this one. Like this is the first wave, second wave, third wave, fourth wave and fifth wave. Now why it is Elliott wave theory? If I remove this trend line, this and this trend line, then what pattern look like? Pattern is directly look like this one also, this one only, right? And after the fifth wave, it will drop, it will retest and move downside. That's the trend reversal. Okay, this is also following the Elliott wave theory. Instead of saying Elliott wave theory, we can consider as wave theory or wave patterns. This is the repetitive pattern which you can see in any time frame at any time. This is the rising wedge. Now same for the falling wedge pattern, right? This is, if you cite this type of pattern, there is a high chances that after seeing 1, 2, 3rd, or let's say first, second, third, fourth and fifth, market will start reversing from here. After the fifth, market will start reverse from here. This is the falling wedge pattern, and whenever you see this type of pattern, you already know where to enter and where to put stop loss, because we already covered all this topic in detail in the price action section. That's why I'm again and again telling you, if you miss the price action, then you are missing most important part of the trading, or let's say the heart of the trading is a price action in my point of view, right? Now let's take another example from the Google images. Here if you see in the Google images, you will see even if you see the simple trend line or the price action, you will realize that market will following Elliott wave theory, indirectly Elliott wave theory only. Let's take this example. If you see this example, example is nothing but the Elliott wave theory. If I mark this one, then first, second, third, fourth, fifth and retest and market will move downside. Even if it's trend line, market is indirectly following the Elliott wave theory. The reason behind Elliott wave theory is so much important because Elliott wave theory is nothing but combination of price action, or let's suppose that price action is following the Elliott wave theory. This is the pretty much simple and straightforward example. No need to worry if you don't know or if you are not able to analyze, but if you know what are the price action, then you are easily able to grab what is the Elliott wave theory and what is the when we can trade and when we can analyze the stock, how we can analyze the stock and how to make entry or how to make exit. This type of pattern you can easily find out in the market. Okay, hope you got my point. The main takeaway from whole Elliott wave theory is, if you know the price action, indirectly saying if you know the price action, you know the Elliott wave theory. That's it, nothing more than that. Thank you so much. See you in the next video. Hello everyone. In this video, we are going to discuss about some basics of options. Options is nothing but the premiums of current index. For example, the index is running at 40,000 and we are not able to buy index, so we have the option to buy the premiums of 40,000, like premiums of market like 40,100, 40,200 or 39,800, 39,900 and much more. So what is this? We will get this 40,000 option at a lower price. It's called as premium, and that's called as option. Now within that, suppose if market is at 40,000, then 40,000 having the two options like CE and PE. CE called as call option, okay, and PE called as put option. Now what is the analysis here? Suppose if your analysis is saying that one market is moving upside direction, then you should make an entry. If you are option buyer, then make an entry at a call option like 40,000, or I'm just giving example 40,000 call option. If your analysis is saying that one market is moving downside and you are wanted to make an entry at the put option. Means whenever market will move upside, call will also move upside. Whenever market will move downside, put option will move upside. Okay, means whenever market will move upside, put option will move downside and call option will move upside. Whenever market will move downside, put option will move upside, but call option will move downside. Hope it's clear for you. Now let's take an example, understand what are the strike prices. Like as I said earlier, if market is running at, suppose market is running at 40,000, then where there are multiple strike prices, 40,100, 40,200, 40,300 and so on. Same for the downside level, 40,000, 39,900, 39,800, 39,700 and so on. 800, 39,700 and so on. Now suppose market is currently running at 40,000 and you don't know, your question will be how to choose strike option as a beginner. I am telling about as a beginner. So always choose, suppose if your analysis is saying that when market is moving upside direction as per price action, then choose 39,900 or 40,000 for a beginning side. Means 39,900 CE or 40,000 CE. Now whatever less than 40,000 like 39,900 called as in the money call option, ITM call option. There are total three types of options. First is ITM, is nothing but in the money. Okay. Second is ATM is nothing but at the money. And third is OTM, means out the money. Now suppose market is at 40,000 and you were actually saying that when you wanted to make entry at upside, at buying side, then 39,900, 39,800 and so on is called as in the money option. Okay, because market is already crossed these strike prices. Now if market is moving upside, market is at 40,000, then 40,100, 40,200 and so on called as out the money call option, because market never seen this strike prices yet, market not gone through this strike prices yet, and 40,000 itself is called as at the money call option. Now the question is which one we need to choose. I am always going for in the money call option, but not go for too deep. If your call option, if you are making entry for the call side, call option as call option buying at market is at 40,000 level, then either go for 39,800, 39,900 or maximum go for 40,000 call option. All are CE. Why these three? Because if your analysis is correct and market move upside, this will move very faster. This will move little bit faster as compared to this one, and this will move slowly. But do not go for 40,200, 40,200, 40,300 or 40,500. because of its cheap. Do not go for the cheap call options because there is a concept called as premium decay, which is nothing but market is reducing, or as time passes, our call option or put option prices will not move drastically. But if your analysis is correct, this call option will give good result. This call 40,100 also give good result. If you don't have that much budget to go for the in the money call option is always high price as compared to out the money and ATM call options. Okay, if you have a budget, hardly go for 40,100 or 4200. I'm not suggesting to go for 40,300, 40,400, the all call out the money call option, because it's risky, and because of its cheap, most of the traders are going for the, as a beginner, most of the traders are going for the out the money call options. And that's why even if their analysis is correct, that call option will not move that much faster, and they will face the losses only. So hope this call option is clear for you. Same for the put option. In the put option, suppose 40,000 is running price. Now what is the in the money for the put option? Like 40,100, because market is dropping from the 40,000. So above 40,000 is 40,200 is the in the money. 40k is the add the money. And what is the OTM? 39,900, 39,800 and 39,000 and so on is the OTM. Put option for same, go for OTM or ATM. It's for the put option I am always preferring ATM, and for the call option I am always preferring the in the money option. Okay, now why ATM in the put option? If market face some resistance and move back at this position, if you enter at the money option, then there will be a very low risk in the option buying. Okay, option buying is always risky one. Hope you got all the points, and hope you enjoyed whole the course and you are learning on day-to-day basis. See you in the next video. Best of luck. Thank you so much.